ho, it's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and welcome back to the show. And look at this. We got a special guest today. It's Julia Spina in the house with us today. What a treat.
Yay! You're outnumbered, Nikki.
I know. This is just the way I like it.
I love the outnumbered mornings. Those are my favorite.
I know, a little estrogen takeover. And of all of the host permutations, I'm sure Jacob could tell you, or even you, Julia, like how many permutations there are, the number of on-air hosts and the possible combinations. I don't know if we've ever had this combination.
I don't think we have.
So.
Yeah.
Nicholas Badamus, is this the first time we've ever streamed together?
I think so. I mean, we've done, of course, trades from the research team. I feel like we've done content before together, but this might be the first, this is for sure the first.
Like live show.
Live hosting.
Yeah.
Morning session.
Guys are just locked in a
Jam
room.
fest.
Ready to go.
Yeah.
Oh, yeah. This is great.
Yeah. But we work together off air.
Sure, sure.
So,
See it.
you know,
It's super cool.
No, I do see it. I see you guys sitting at the big boy table, discussing things.
yes.
Complaining, usually complaining.
Yeah.
Italians are very good at that, yeah.
Yeah, that is true. No, we're both the same. We're both pizza bagels.
Yeah.
Which is
What?
kind of a shock. Yeah.
Wait, what does that mean?
Where you got some Jewish heritage and some Italian heritage kind of mixed together.
Oh,
pizza bagel.
so it's called a pizza bagel.
Yeah.
Oh.
Yeah.
I
I've also
got
heard cashew,
Yes, I am
Like the
familiar
Catholic
with
Jews.
yes.
you know?
Interesting.
Yeah.
Yeah, the pizza bagel.
Pizza bagel is the good one.
I'm not an official pizza bagel, though, because my grandpa's family was the Jewish side, but they
Yeah.
are
Oh,
very, very Jewish. So,
that's fair.
Yeah.
Well,
I'm
l'chaim and buongiorno.
Yeah.
I don't know
Yeah.
what's happening.
It's a rare occurrence, though. My girlfriend's actually a pizza bagel, too.
oh,
which
man.
is,
Yeah, tradition.
I've found them all.
Yeah.
We gravitate together. Like, it's like a magnetic pull.
Well, that's cool.
Yes.
A magnet.
Yes.
I was gonna make a pun out of that. It didn't work. I tried.
No.
So when are you going to a death metal show with Julia?
I need some recommendations.
We also have Mikey Butler, who's a big metalhead as well.
He-
and I haven't
he
got
does.
the invite from either, which
Yeah.
probably tells you something about
Like, he's a metalhead?
Oh, yeah.
I didn't know that.
Yeah.
He's got, like, what, a pine tree tattooed on his arm?
Yeah.
And he does love him some John Mayer.
He does.
Valid,
He's a well-rounded individual. He's got a lot
He
of...
contains multitudes.
Yeah, he's deep. A lot of layers to
Mm-hmm.
that man. Yes.
I didn't
But he
know
is a
that. Man, we
metalhead.
got to nerd out about the metal sometime. That would be really
Yeah.
fun.
Yeah.
Well, what have you been up to? Lots of stuff going on with you.
I haven't gotten a look at markets in like months. I'm so excited. I'm like itching for it. Very excited. So, other than just being in meetings all day.
So you can turn it on and off, like your devotion to the markets. Because like Nikki, he's locked in for all times. There's no coming back for
Yeah.
him.
Yeah, no, I'm a lost cause.
I wouldn't call it like a devotion. I call it more like an addiction.
Yeah.
It's like, yeah, you can not be doing whatever your vice is, but you still always kind of want it.
Right.
Yeah. So I wouldn't say you can turn it off. Yeah, it's more of an addiction. Yeah.
Yeah.
But yeah, it's hard when you're in meetings all day. So I'm just.
It is true,
yeah.
yeah.
I don't even know what I've been doing lately. Concerts. Those have been fun.
Ooh, what's the last concert you went to?
I don't even remember what was the last one. The one that sticks out in my mind the most was Nine Inch Nails. That was because that's my favorite band.
You're still
Was that
touring?
Riot Fest?
That was at the United Center.
Oh, really?
And that was
Wow.
just an amazing show because like they work with like Trent Reznor, who's the lead singer, does a bunch of movie scores and
Yeah.
like, directors. And
He did The Social Network, probably
Did The
the
Social
most
Network.
famous, but he's done a bunch.
Girl with the Dragon Tattoo.
Yeah.
Girl. I think it might have been Coco. I think it was either Coco or Enchanto or one of those, like a Disney movie too. So like the set production of the show was just unbelievable. They had two different stages. They would alternate between them. They'd have like the whole show kind of projected onto the big screen curtain. It was just unbelievable. It was so cool. So that was fun. But there's definitely been more shows in the mix. I don't know.
I just didn't know. I didn't know that Trent was like still touring. That he still, had like because he's
I
in
know.
his late 50s, 60s.
Yeah, and he sounded awesome.
Wow.
He sounded great. And this was, I don't know how this worked for a stadium show. I'm still thinking about it, but they had a DJ open up the show. They had a DJ open up the show, and that played for like 30 minutes, and then they did mixes of their most popular songs together during the show.
Oh.
So, songs that I've heard a million times, you got to hear new versions of it, which was sick.
Interesting.
Yeah, that was pretty cool.
My favorite video all time is, I don't know if you ever saw, like in the very early days of Trent Reznor, he was like on some morning talk show, and he just looks, because he was with like the band before, like 9 Inch Nails, but it's still very obviously Trent Reznor. If I can find the video, I will show it to you, but it's just very funny. It's like Wake Up San Diego or something, and it's like the most emo looking Trent Reznor as a young lad. But he's playing like pop music.
Dude, that's a whole like genre of videos, is like comedians and musicians going on to like daytime television, and just being goofballs. Like that's actually really fun. I love that. Yeah, you're not a metalhead, huh?
No.
What's your?
I was gonna ask Vanetta if she's a metalhead. If she goes,
No, I am a pop
show.
princess.
Yeah, Swiftie only.
I am just I love all the pop girlies. Sabrina, you can like throw her in there too. And
I feel like the Swifties don't really jive with the metalheads. I feel like that's not.
we jive with everyone.
Is that that crossover? I feel like is a pretty.
Actually, I'm gonna blow your mind right now, because there is a subgenre, because you open the door, counselor, and it's called Swimo. So Swiftie emo, and pop punk, like punk bands respect the hell out of Taylor Swift, because her writing, her pen game is so good that it just transcends genres.
Yes.
And so I will get you a Swimo playlist.
Okay. Do they change is it?
It's her lyrics, but it's just
Mashup.
emo. Yeah,
Oh,
but it's just like,
Wow. Okay, so that does exist.
It does exist. It is
you
totally.
have proved me wrong.
Yeah, but how about you? What do you? Are you like your dad, all like Michael Bublé? Like,
yeah, Michael Bublé, Barry White, Sade. You know, those are the things.
Sade.
Is it Sade?
No, I think that's just what Tony said last week. It took me a minute to go. I had to look it up.
I thought it was Sade.
It is.
Sade.
I think he said Sade.
yeah, that's.
I had to look it up because I'm like, there's not an R.
Yeah, but that's just like his like rolling R. It's orange
They just
and
stick
like
'em in, you know.
idea.
Yeah.
you know,
Arister and Archon. It took
Arister.
me years to realize it was Arista.
Ah,
And
I didn't even know that. So
Yeah.
I'm glad that you.
it's not Aris. I thought it was
dissected
Arister, but it's not. It's
Yeah.
Anyway,
that. The idea one that always like.
Linder,
Linder.
What's Linder for?
like Linda.
Oh. Does he do that? That's
Yeah,
bad.
it's Linder.
Oh my god. Yeah, I never understood that. If that was just like a New York thing.
I think it's a New York thing.
Is it idea?
Us Midwest babies.
Just adding a letter that like isn't on the word. Like I feel like that's
Just throw on a G.
past like pronunciation. Like
Yeah.
I don't know.
pronunciation is one thing, but
That's just making a point.
yeah, you're just like putting you're changing the word. It's a literal different word.
No, but it's caused like literal confusion.
Yes.
Sometimes. But what do you listen to? What do you?
Yeah.
Yeah, like I like a John Mayer. I like Morgan Wallen. Like I mean, like I'm a little bit on the. I'm definitely not on the.
You are a little more into
Yeah.
country or whatever. I don't know what like
Yeah.
you call that, because you go to like what, Country Thunder or whatever.
No, I haven't done that. But I would.
You would, yeah.
Yeah.
All right.
Is that folk, maybe?
Yeah, I like a little folk.
A little bit of
Yeah,
that.
like, just easy listening,
Hey, I will tell you
My
this.
party days are behind me.
I think all of our party days are behind us, but the Grammy nominations come out today. So it's all coming together. And for the first time ever, they're going to give out a Grammy award for best like album cover design.
That's pretty cool.
What are maybe some iconic album covers that you remember, like the first CD that you ever bought?
Oh, I mean, the Blink-182 album is the
with the nurse?
Yeah. And for Halloween, I mean, you get all those on the.
I love how you just have this boyish memory. You're like, oh yeah.
Oh, I remember that one. That was a classic.
The Now This series is like burned in my mind.
Oh,
yeah.
The now, like.
Yeah, the big Now with the disco ball or something.
Now that's what I call music.
Yeah.
Now 120 or something.
I know.
Yeah.
Do they
So-
still do those?
I
Yeah.
probably do, yeah.
I would think so. That's an easy thing.
Yeah, I don't know. I'm trying to think like iconic, like the most iconic. I think like the Nirvana album.
Nirvana
cover.
is another
Like,
good one.
Yeah, I had that one, and I I don't know, but I think it's cool that you can win a Grammy for your
Are they
album.
doing it
Yeah.
like past or is it now?
Yeah, I think it's now. I think
Okay.
it's now. But that would be interesting, like the best album, covers of all time.
Or by decade.
Yeah.
You separate it out.
Yeah.
That is cool.
Yeah, all right. Good
Yeah,
times.
very nice.
What'd you get up to last night? Anything of consequence?
Grilled, which was nice. I mean,
Well, I
it was
guess
kind
it
of
was
like a
warm
nice
enough.
day. It was like mid-60s, right?
Yeah.
Yesterday, so it was a good day.
What'd you throw on there?
Threw a little steak on the bobby.
Shrimp on a bobby.
Yeah, no
Shrimp
shrimp.
on a bobby.
Nar.
Steak. Little flank steak. Made a nice little salad out of it.
You have some
Like-
chimichurri with that flank steak?
No, but I did like grilled corn. I
Ooh.
grilled the romaine too, so it was like kind of like a grilled.
Oh, I've never
Salad.
done that.
Nice.
I've seen it. but
Yes.
How did it turn out?
It turned out very well. I'm trying to. I mean, the steak doesn't really jive with what I'm about to say, but I'm trying to kind of lighten the load a little bit on what I've been eating.
Yeah, Julia,
considering-
he went too hard in
Yeah,
San Diego.
bone marrow,
yeah.
sourdoughs.
Oh, yeah.
All the things.
Yeast
Steaks,
and such,
duck.
yeah.
It's just kind of a gluttonous weekend, so I've tried to tone it down a little bit. Of course, adding the steak kind of.
Thanksgiving is in like 2 weeks.
Yeah, Thanksgiving. You see, I'll be in Arizona at my mom's, and my mom, bless her heart, but she doesn't eat quite the volume that I do. I always explain to her, I'm like, I love that you get me chicken salad because I love chicken salad.
Oh, sweet.
But a half pound of chicken salad is about a half a meal for me. Like I could put that on one piece
You're
of bread.
a growing
and it's
boy.
done. I'm a growing boy. I mean, I'm a big guy. I eat a lot. But on the turkey front, we usually just do one little turkey breast. That's it. Oh. And then we kind of do other stuff because turkey is just so bland and just like.
You're like your dad. He doesn't
Yeah.
like turkey.
Yeah.
Do you like turkey?
It depends on how you do the turkey. My brother's been getting really into like the scientific side of cooking, which
Sure.
has not been annoying at all. He's in his pickling era. It's hilarious.
I love that for him.
But he's been experimenting with the turkey every year, like different brines
Yeah.
and soaks and such. So it's actually been turning out really good every year.
Yeah, it makes it
Shit,
like
but,
moist and not dry and
Exactly,
more
yeah.
flavor.
Does he
Yeah.
do the like?
No, we don't want to die. So we're not frying the turkey, no. But he does like very sophisticated brines.
Okay.
And cooks schemes. I don't know. He's got, I think, 2 thermometer. I don't know. He's got a whole thing. But it's
Okay.
turned out really good, yeah. But I'm on my soup season. Soup is
Ooh.
like awesome.
Soup is
Yeah.
soup is
Soup
awesome.
is really good. I had my friend's chicken tortilla soup, and I'm like, why would you? That's right.
Yeah.
Why would you have a chicken tortilla soup? And then I tried it. I'm like, this
It's
is
good.
actually fire.
Yeah, it slaps.
So I tried making my own, and I used fire roasted canned tomatoes
Yeah.
and chicken bone broth, and it
Yeah.
was just
Yeah,
like
yeah.
so.
You got to do the bone broth.
You gotta
Yeah.
do bone broth. That was so good. I don't know if it's good for you anymore, but it was really.
No, it is. It's protein.
Yeah.
And it's like so easy to make too.
Yeah.
Yeah. So that's what.
You do it in a crock pot. You just like throw it
on
on
the stove.
stove.
Yeah.
Do it the old school way.
Yeah, do it on the old school way. Yeah.
Because you can do all that stuff like in a crock pot. You just like let it
I know.
sit and just.
Or like one of those ninja, like all-in-one,
Yeah.
multi-purpose cooker
Oh, yeah, one of those,
station
like,
thing.
Instapot thing. I don't
Yeah.
do chicken, so this is new for me. Chicken just seems like a problem. I don't know.
Why? In the crock pot?
No, just anywhere in my home.
Yeah.
It's like a problem.
Why? Chicken?
There's an aversion. No, Julia, where this? I get you. I know.
Yeah.
I have a version to it too. There's a whole system of it's the texture, and it's the how diabolical the chicken germs are, and like my
they're
mind.
diabolical germs.
Right, yeah.
that's
No,
all.
I
You don't understand her, but I knew exactly. I was picking up what you're putting down.
I'll eat plenty of cooked chicken.
Boom,
I'll
right?
eat plenty of cooked chicken.
Yep.
But cooking chicken, I don't know. I hit a wall, so this
Yeah.
is new for me. It's exposure therapy.
Yeah.
You know, I'm also
Yeah,
Come
it's-
on.
I get it, but it is. I will say it is easier in a crock pot situation
is
because
it?
then you
Yeah.
can just throw everything in and then lock it, and then you're like,
Yeah.
see you in hell, chicken.
That's right. Even a nicely, perfectly cooked state.
Right.
But I worked in labs too, and my brother, for example, works in like the DSL2 like entomology lab. So he works with like.
I like how you say that, like Nikki, the DSL2.
Yeah, duh.
Duh.
He works in an entomology lab, so if he accidentally touches something and then touches something else and doesn't sterilize, then that's just Ebola everywhere, maybe, or something. I don't know.
That is a different story than having chicken in your
Is
house.
it that different?
Okay, yeah, the
No.
chicken. Yeah, Big PETA has brainwashed you all. Just
Big
cook the chicken.
PETA?
It's fine. Yeah, you're fine.
No, you gotta sterilize. I don't know. I literally
Come on.
pick it up with a fork and then kind of like move it over and just put it.
If you get the salmonella, you have the runs for a little bit. You'll survive. It's whatever. Come on, our ancestors ate chicken for 1,000,000 years.
Okay, well,
Okay.
I understand you, Julia, so.
Come on.
Thank you so much.
Yes.
So this is new for me. We're trying
Yes.
something different. That's right.
Speaking of chicken, we have Dave's hot chicken today, which is
It's not my favorite.
pew, 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 pew.
It's not my favorite of the hot chicken place. I like our
Really?
local place. I like a fry the coop.
Yeah, Friday.
It's just juicier to me. Dave's to me is just dry. But I understand why people
Just
like Dave's.
dunk it in that sauce. And
I
on that
know. The
Hawaiian
fries are
roll.
good. They're seasoned fries.
You got the peeps out there.
It's
and
good.
Tomorrow's a good one too, Diego.
It's the only reason Julia,
I know.
I have to come into work tomorrow, but we're getting Diego. Have you had
Yeah.
Diego?
I love Diego.
I love
Diego's really
Diego.
Dude, they have this thing.
You know he's a tasty trader?
No, he's not really.
No way,
The owner.
really?
When I went there with my sister, and the owner came up and he was like, "Hey, I'm the owner here. My name's Caesar." I was like, "Oh, hey, nice to meet you. I love the food here." He's like, "Thanks, man. I love the show. I love the content."
What?
I was like, "Really?" He's-
I want a shirt.
So he's a friend of the family.
Wait, that's so cool.
Yeah.
I love Diego. It's like a michelada with an oyster. So you can shoot the oyster and then drink the michelada.
Ooh.
Fire. Oh,
Interesting.
Man. Are they bringing those today? Because then I might actually get something done.
No, I've never been to the actual restaurant, but I guess it's just here, on Milwaukee.
It's super close,
maybe?
yeah.
Yeah, it's not too far from here, but I'm a big fan. For those who don't know what we're talking about, it's a burrito that we get, but they put French fries in it, and it's
like
so
home potatoes, like home style.
I know. It's so good though. Just
Yeah.
the seasoning and all the
Yeah.
flavors and
Yeah.
it's
The flavors. Yeah, I'm already going to be useless because I was up at, I don't even know, 5:45 today. So, yeah, the chicken's going to make
I'd been up for an hour.
Yeah. You want to hear the world's smallest violin? Oh my god, Julia woke up early today.
Well, you guys get to technically go home at 3:30. I don't know if you actually do that, but I got to stay till 5.
Oh yeah.
Oh, yeah. Nice.
Yeah.
Yeah.
Sometimes.
Sometimes.
No, I'm here late. It depends.
Yeah.
Depends on the day. But hey, we are going to be right on time for you today because we got a great show. So
Yes.
thrilled that Julia is in the hot seat. Bat is hopefully going to be on a plane, LOL with our
we had
aviation system.
We had a little kerfuffle yesterday.
Oh, not the
He
kerfuffle.
thought his flight was at noon, which would allow him to do the show, but it's actually at 10.
Yeah, but this
So
is
it's
probably
good that
for
he
the
figured that
best
out.
because there's probably, cascading delays or
Yeah.
whatever. But Bat is on the road to do the last live show with Tom and Tony of the year at Work by 11 at Antone's nightclub in Austin, Texas. So that's why
Yes.
they are traveling, why the show is reshuffled today. So it is wait list only for the event. So just make sure you get there early, but it should be a fun time. Just socialize, say hi to everybody, and say goodbye to Tom. So
Yes.
do with that what you will. But if you still want more tasty content, the last show of the year, I believe, Dr. Jim in Tampa, Florida. So I think Tampa is going to have a cold snap here. Hopefully it's going to be warm. But December 7th, Dr. Jim, our very own Florida man, he's going to be in Tampa. Hometown show.
I was told that he's actually hosting dinner for everybody afterwards, so you guys can all just come to his place. The wife
That's
is gonna
nice.
make
I think
dinner.
he's taking everyone to Bonefish.
Bonefish. Yes. Yes.
Bonefish.
Followed by Starbucks, his two favorite places. Yes. But for you today, we have a wonderful show. It is a thrilling Thursday here on Tasty Live at the top of the 8 o'clock hour. Trades from the research team. So are you going to present a trade to yourself, Julia?
I'm debating whether I do not have a trade plan. So if one comes out screaming at me, then we will know.
Okay.
In this market, you can't just pick it the night before.
Right. I know. It's just because markets move. So we'll see what happens. Well, the research team is going to present their trade ideas, and then Julia gets to judge everyone else for once. So that'll be fun.
The judgment.
And then we have Hear Me Out, maybe, with Dylan. What are you going to talk about with Dylan today, Nikki?
So we're going to talk about Powell.
Okay.
Kind of what he mentioned.
How he broke the market. Yeah.
Yes. We're going to talk about New York and Mamdani.
Sure.
We're going to talk about the Trump-China meeting.
Sure.
That just happened in Korea and get his take on some of those things. And we're also, I didn't want to spoil it for everybody, but we have a special guest for that part of the show. We have our very own Mr. Chris Vecchio coming back
Wow.
for his triumphant return. For Hear Me Out. He'll be here for...
Because the amount of time that he's been gone makes me think he had the baby.
Yes. He apparently... I mean, IG has some great...
Family leave
policies. So we are blessed to have him back for that. He'll also be on overtime after the close today. So we're going to have him back sporadically as he is available, as he is able to do. So
Right. So contrary to maybe your popular conspiracy theories online,
The conspiracy theories
we're not
are-
just disappearing people. People have lives. People go on paternity leave.
Yes.
Things happen.
They get sick sometimes.
Right.
Or, you know,
Right. They moved
take
to
a day off.
Singapore.
Yes.
Things happen.
So, but Vecchio will be back. It'll be really fun to have him. I'm excited.
I'm excited as well because he literally can write like 8 blog posts a day.
He's a machine.
He's a machine. So that's great. So Vecchio is going to be in. Dylan Radigan's going to be in. That's amazing. Then at 9 o'clock for Market Measures, part of our Zero DTE series. Impatient Bulls, Zero DTE SPX Put Spreads, Part 3. What?
Yes, we are doing put spreads. So obviously SPX has gone up for the last 2 years.
Yes.
Market has gone up. So these are very good results, as you would expect.
Sure. Okay.
Yes.
And then live from the trade desk, wonderful guest appearance today, Marty and Glenn.
Yes.
Yes, Marty
is
from the trade desk. Love
fan
Marty.
favorite.
And Glenn G Money on the Tasty FX side of things. That is wonderful. And then with their SIBO debut, Mike and Jamal at 11 a.m. Are going to be live from the floor of the SIBO for the first time ever. Options Trading Concepts live every Thursday now. We'll be broadcasting from the SIBO. If you've seen some of our videos on social media, you saw Jamal and Mikey unboxing their jackets. It's very cool. So today's the first day. Please tune in and support the boys.
Yes. No Liz and Jenny. They are going to be at the event.
Yes. Yes.
With Tom.
Yes. So you're getting a star-studded event. If you're going to Austin, you're also getting Liz and Jenny and TP. Ooh. Yeah. So
amazing.
All sorts of shenanigans. Hey, but let's get this show on the road. You guys want your daily dose?
Sure.
Yeah.
Took a second, but yeah, let's do it.
Just one more time. Yeah.
Sure.
Let's go.
Our leading story,
today's
breaking
headlines.
news, coming across the wire. Our leading story. Top story, jump in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a thrilling Thursday. It is November the 6th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
So
Ready for the news.
Ready for the news.
Let's
Are
do
there
it.
any earnings for tonight? I have everything from yesterday. Literally all of my news is earnings.
For tonight, I think there are a couple. Hold on. I
Okay.
looked at them. I have not looked.
I just didn't want to miss any, if there was anything like big.
So tonight is kind of like,
DraftKings.
yeah, you got DraftKings in there. You got Open
Newsview.
Door, TTD, Iron, which is another one that people have been trading, SMR, MP, which is one of the rare earths.
Yep.
Airbnb.
Airbnb is in there. Affirm is in there. We're kind of on the tail end
Sure.
of the earnings season here.
Sure, but still plenty of ways to get in trouble.
Yes, of course.
yeah.
Oh, the market's open. You can always get in trouble.
Hey, the Supreme Court is in session and discussions are underway if the tariffs that have been levied by the Trump administration are in fact legal. And it appears so far, by just a couple of discussions, that the justices are slightly skeptical. My question for you, though, what happens to the markets if they're voted as legal or if they're voted as not legal? Like, where do we go from here? The decision won't come until next year, like early next year.
Yeah.
But like, what happens? Like, what do you think? I know no one knows, but
I think it's an interesting thought that maybe the markets sniffed this out before we're reading this headline.
so you think it's
Given
it's
the
already
move,
priced in? And
yeah, the market has already. So like, you had the tariff tantrum, you have this big down move, and then everybody's like, "Oh, these are never going to stick." So we've just grinded all the way back. And now we're getting this headline. Because that was literally like 6 months ago. They always talk about how the market is usually like 6 months ahead kind of thing. So it feels like this headline is why we're where we are.
Oh, interesting.
But it was from the future.
From the future. What are your thoughts, Julia?
I don't know. Because if they deem that they are illegal, like, we still might have some version of it. There might be workarounds. It depends on the administration.
Sure.
You know what I mean? So
right. So basically the argument, though, is that, like, what is a tariff? And they did have to say in court, a tariff is a tax. Well, who can, in actuality, effectuate taxes? That's literally Congress.
Right.
And so, but if this were to go away, I think the ones on steel and aluminum would stay in place, but then some of the other ones would go away. But you're right, there would be piecemeal. And then Congress can vote to, make these permanent, or they could vote to just take these away. So
take them away.
We will see.
Yeah.
So that's what that's doing. I do want to talk about the dollar. Dollar dipped yesterday from peaks. I think the Bank of England is going to come out with their decision today on their rate policy. But let's talk currencies.
Dollar's been strong recently. I currently have a bunch of short euro positions here. I'm short the euro Japanese yen, the euro against the British pound. I'm also long the New Zealand dollar against the US dollar as a way to kind of get, because I rode the US dollar up, and now I'm trying to get a little bit short here, but dollar's been super strong across the board here relative to where it has been over the last 6 months.
Right.
A little bit of a pop here.
How about you, Julia? What are you doing in the FX currency space?
So I'm kind of, I don't love trading currencies.
Sure.
It's not my favorite thing to do. I'm kind of more of a gold person.
I think Glenn's going to change your mind.
Oh, Glenn's going to change your
Yeah,
mind.
G-Money is very
Persuasive.
Oh, man. I can't wait to...
Yes.
I can't wait to start being stressed out in a whole new dimension.
Yeah.
So you're trading the kroner, Julia.
Yeah.
Oh man, let's get those Swedish crowns. No, I'm kind of more of a gold person, and which is kind of my own way of like kind of getting similar exposure to kind of like uncertainty around the U.S. dollar.
Gold having a good day today.
It's having a good day today, yeah. About freaking time. Because it took a giant.
About time? What do you mean? It went from 3,000 to 4,000 in like 4 weeks.
It dumped so hard a couple days ago, and I think we were talking about it the day of. I'm still personally long gold, but I scaled down the position a little bit, and it's been flat since that big old dump. But yeah, no, that's kind of how I'm getting my exposure to uncertainty around the U.S. dollar. I'm still a little bit long, just based on my own like personal bias around this. But currencies, I just have a little bit of a difficult time trading them at the moment with the assets that are available. So that's kind of how I just said with the metals.
I got you. Hey, here's an interesting proposition. First, we are floating around the idea of getting rid of quarterly reporting for major companies, and maybe going to a more European style of just reporting your earnings twice a year. But a bipartisan bill would require companies to report AI job losses quarterly. Senators Mark Warren and Josh Hawley announced a bill that would require companies and federal agencies to submit quarterly reports of AI-related job effects. What would be the benefit or non-benefit of such a policy? Don't make that face at me.
This is an interesting one. This is kind of along the lines of one of the questions that I put together for Dylan today.
Okay.
For Hear Me Out, because, you have AI affecting all these jobs.
But they're saying it is, but then they're also like saying the quiet part real quiet, and they're like, it's not really AI. We just hired too many people.
I think it's a little bit of both.
I think so too, but
AI has certainly made the need for the volume of people much lesser.
Sure.
I mean, I think
but some companies that went like all in on AI though are then having to now hire more people because they're like, yeah, it didn't hit as hard as we thought it would.
Yeah, but things in the future, like 5 years from now, that's going to be the case. Like it's not going to be like, I think right now in the short term, it's going to go from, the team of 5 is going to be a team of 2 with an AI component. Yeah. So you cut.
Well, that's you guys right now.
Yeah, you cut half. A little bit. You cut half, and you have 2 people to manage that AI. Yeah. AI doing kind of the busy work. In 5 years, it's going to be 1 person in the AI. So it's going to be.
It's just because like I feel like this seems really well-intentioned, but I cannot really see how you can enforce something like this.
Yes.
It's like AI's been in everything for a long time now. It's been in Adobe, right? Like, a lot of Adobe tools have used AI or some kind of machine learning assistance for years now.
Sure.
So how can you tie a person's job loss to AI when it's been like so integrated for so long? Unless you're being as public as like Duolingo about like actively replacing your workforce.
Right.
Yeah.
With, right. I think it's a well-intentioned policy, but I just don't get how you could actually enforce this properly.
Yeah.
There's a way to get around it, I'm sure. Some kind of like goofy classification. But well-intentioned.
We will see. Yeah, what a time to be alive. Hey, shifting gears to the digital asset space, fintech firm Ripple is now valued at $40 billion after raising $500 million in its latest round of funding. Must be nice when all of your legal problems go away, and now you're worth $40 billion.
Why not?
Beyond payments, Ripple has pushed into other lines of business, including custody of crypto assets, prime brokerage, and corporate treasury management. Just wanted to talk about digital assets, but Ripple is XRP. So
Yes. I have not traded XRP. It's not on my list. I'm a Bitcoin ETH guy.
Yeah.
That's it. I stick with Ryan Grace, and Ryan has not put me on this yet. Tradable. You can trade it.
Sure.
It's just not my thing.
Isn't it crazy that the company's worth $40 billion?
Not really. I mean, we have everything's worth 10 to 50 billion
It's
now.
just wild.
The numbers we've just added a zero on everything in the last.
What is Bitcoin doing this morning? Because it did get below that sub 100,000 level, but then it did rally a little bit.
It was a little bit stronger in the overnight session. It's basically unchanged right now. It's up $120. It's bounced to 103 and change here from 99. It got to the 99 handle.
Okay. Anything in like iBit or Coinbase this morning? And then I'll move on.
Coin had a nice little bounce yesterday. We sold puts into the sell-off. It's one of the higher beta ways to play Bitcoin. It's basically unchanged here. It's down like $1 pre-market. iBit liquidity has been off the charts. Lots of call options being traded there, which jives with what you do with these sort of products where you have kind of volatility to the upside, call skew. So a lot of people dabbling in those.
Have you been trading any of the crypto?
I got a couple iBit shares just to have like a little bit of skin in the game. They have not been treating me very kindly, but they also haven't been murdering my family in the middle of the night.
That's good. That's good. You don't want that to happen.
Hey.
Looking at, I'm just like peeking at the iBit options chain. It's crazy to see how this thing turns. It's so liquid.
So
And
liquid.
That happened so fast.
Yeah.
And that was awesome. Yeah.
It was the fastest to ETF to get to like 10 billion or something under assets under management.
Yeah.
They did hit all the volume and liquidity metrics. It hit like at warp speed.
It was crazy. Yeah.
It was
really wild to see it. Yeah.
Getting to the earnings from last night, let's start off with Qualcomm. Qualcomm reported better than expected earnings and revenue for the fiscal fourth quarter. The chip maker's been trying to elbow its way into the AI boom, which has been dominated by NVIDIA. But Qualcomm brought in earnings of $11.27 billion, versus $10.79 expected. What are you doing in Qualcomm? It's a blast from the past.
stock is basically unchanged.
Doing a whole lot of nothing.
It's down like 70 cents on earnings on what was like, I think it was around a $10 expected move, basically a $10 expected move. So well inside the expected move here. Anything you did here, you probably made money on, bullish, bearish, neutral, probably worked out good. If you had some short premium in the weekly expiration, I traded it to the long side. I had a call diagonal spread that I put on in the morning. Yesterday, the stock rallied like $7. So I ended up closing out of it and rolling into like kind of a neutral position. So I might be hitting two of them.
Wow.
Ooh.
Two earnings trades. We'll
Please
see.
hammer, don't hurt him.
Yeah, we'll see. But market's strong this morning. You got E-minis up 16, NASDAQ up 64. So maybe you get a little bit of a bid here. Stock was a little bit lower after the announcement. It was like 170-ish. So maybe there's a little bit of a bid here in the morning.
Did you trade Qualcomm, Julie, or have you
I
been?
did not trade Qualcomm.
No, that's fine.
I didn't even think of trading Qualcomm.
I
Now
know,
I'm
that's what I'm
at
saying. It's like all these blasts from the past. And it's like, oh yeah, it's a thing. Hey, in other earnings news, ARM steps up its AI investments as it cashes in on another $1 billion quarter. ARM says rising revenue allows it to spend on research and development that helps it meet growing customer demand. The chipmaker reported its third consecutive quarter of more than $1 billion in revenue. They reported revenue of 1.14 for their earnings, reflecting a 34% increase from the year before.
ARM up 4 here, 4 or 5. Again, another one that is well inside the expected move. This was about a $12, $13 expected move for earnings. So again, the earnings have been, and even like AMD was another one where it was a 20-point expected move. The stock was basically unchanged.
Sure.
Earnings have been.
Just do straddles.
It works until it doesn't, and earnings season is mostly over. But it feels like a lot of these have been like buy the rumor, sell the news type events. I mean, it's not like sell-offs, but it's kind of like sell the volatility. It's you've had this run up, price to perfection, stock does nothing on earnings.
Yeah.
It's kind of been baked in is what it's felt like.
Yeah, it does seem kind of baked in. Yeah. With a company like this, it seems like generally like in terms of like AI exposure, because they're saying AI and it's obviously seems to be resonating a bit with investors, but they also have like much broader exposure than like OpenAI, for example.
Yeah.
A lot of the other consumer facing companies, they had that deal with Apple a couple of years back.
Yeah.
So yeah, I don't know. Cool to see.
How is the stock like for trading? Because I know it's a newish IPO. It's been around like a little bit for a while now, but I didn't know if it was.
It's liquid. It's not on my like top 50 list of trading products, but I don't have a position on currently into earnings, so that kind of tells you.
I got you.
And some of these spreads are bad.
Yeah, they're not
bad.
Man, some of them are fine. Some of them are bad.
50, 60 cents wide on some of those.
Something a little closer to home, Robinhood beat Wall Street expectations for the third quarter. They said transaction-based revenue, which is a proxy for trading activity, came in at $730 million, but it did miss a street account estimate. Robinhood's revenue did double year over year. The company brought in revenue of $1.27 billion versus 1.19 expected, again on the backs of strong engagement from retail traders. You're welcome.
Mm-hmm.
Yeah, Robinhood was down about like $4 or $5 right after the announcement. It's now basically unchanged again. It's another one. It's trading. It's up about like $1 right now.
Okay.
This was another one, $10, $11 expected move.
And then it just did.
And it's just sitting here. And so earnings season, if you've been doing both sides, I think it has been one of the best in recent memory.
This one a little under the radar, but it is a new IPO, and that's Figma. Fig. Their revenue and revenue guidance both exceeded consensus. So good job from them. The company brought in revenue $274.2 million versus $265 million expected. The company's net losses, though, did balloon to $1.1 billion. Whoops.
I love it. I love a Fig.
I love a Fig.
I'm a big Fig guy.
Oh man, I'm watching Fig. I'm so happy about Fig because Adobe's they've done such a spectacular job of pissing off their entire
of everyone.
customer base.
See, Canva's coming for their throat too. They're like, hey, we're gonna have all this stuff for free too.
Oh,
like let's go.
Oh, to see markets at work. Oh man,
like it sucks.
Happy.
Like Adobe's like, you're gonna have to pay us for the rest of your life.
Yeah,
and then your children also.
And talking about like boofing your market share, like, oh my God.
Yeah.
Oh man, good for Figma.
So.
This is another one, $6, $7 expected move. Stock is up too.
Did nothing, yeah.
So every earnings we've gone through here has been well inside the expected move, like well.
Speaking of blasts from the past, Snap shares rocket. The word rocket here is doing a lot of heavy lifting in this headline because I looked it up and I was like, the stock was up $1. I was like, let's calm down. But the shares rocketed 15% on a strong forecast, and I guess Perplexity AI is going to pay Snapchat $400 million over 1 year to integrate the AI startup's search features into Snap. Snapchat brought in revenue of $1.51 billion versus 1.49.
I'm not a Snap guy.
I'm
And
not
Snap
a
is
Snap.
either.
Snap is such a dog of a company. I mean, the stock is.
They stole, like, Instagram, like, stories stole its entire
Snapchat.
premise
Yeah.
from Snap. So that just makes me feel bad that they're getting paid dust. Because,
Yeah, but
like,
Snap has done so many the executive share offerings and all this other.
I know, and all
crap.
the filters and stuff that now, like, they
did that.
They pioneered that. Like, yeah.
Yeah.
I think I've told this story once or twice, but I remember distinctly in high school, and Snapchat was like my app, loved it, I thought it was super fun, and then I accidentally like pinch zoomed, and I saw that my location was on a map, and I could see all of my other friends' locations, and I'm
Sure.
like, I didn't sign up for that, they just opted me into
Right.
it, or something, I don't know, something happened, and then I stopped using it.
Yeah.
So, Rocket, none of that.
No, like that.
Oh, Snap. Duolingo's soft bookings forecast overshadows the fact that the company beat on revenue. They're sending shares lower. Duolingo's forecasted bookings to be between 329 and 335 million for the quarter, which was below estimates. The downbeat-looking projections did overshadow an annual revenue forecast raise following a third quarter beat. Duolingo.
That one doesn't look good. That
No,
is
that
down
is a
about
dump.
$70 here. That's
why I wanted to mention it.
That's a big one. And even so, you had about a $45 expected move. So it is outside the expected move here.
It's a donk if I've ever seen one.
Yeah, this is one that is completely untradeable. So I highly doubt there's many people that are
They got trapped in
that got trapped in here. I mean, you're talking about $2, $3, $4 wide bid-ask spreads on some of these options. But yeah, this is a stock I'm shocked is at the value it is, even
I mean, you don't even need Duolingo just to say, "Oh, Dios mío." But no, that's a massive.
And that's all I've ever needed to say.
Right.
Yeah.
Oh, poor Duolingo. Has anyone ever used Duolingo? Like, does it work? Like, to have actual?
Mikey does it.
I know, but does it work? Can he speak conversational Japanese in an effective
No, he
manner?
just uses the free one, like where you get like 3 little.
Oh, just to
things
play
every
the
day.
games or whatever.
I've
Well, yeah.
tried it, and I like a couple of times now. I've tried to give it a couple runs. The owl is definitely coming from my family, but I don't like that they don't actually tell you the rules, the way that a textbook would. Like, here are the rules. You have to kind of like just figure them out from trial and error. And I'm like, I kind of wish that I could do both. So that's kind of why. And all the common thing is like you just go on vacation or something and you can't get to it, and then you just lose your streak, and then that's just it.
Oh,
So
I mean, you got Apple with the.
I was gonna say the AirPods with the real-time translation.
This is like who needs to learn it when Apple can just feed it into your
You should
into
still,
your
you should
brain.
still
For
learn a language.
enrichment.
Yeah, thank you. You should still learn a language. It rewires your brain, man, and the ladies like it.
Ooh, that is true.
That is true.
Ooh.
It's not my brain though, unfortunately.
Lucid misses Wall Street expectations, and they are narrowing production guidance. The EV manufacturer continues to address problems with the launch of its new flagship Gravity SUV. They also said they agreed to a term loan credit facility, but I almost said Rivian. Lucid's revenue came in $336 million versus $379 million expected. LCID.
Stock is down like 30 cents. It's hard to really say what that is pre-split because it's done like 14 different splits, 10, reverse split, 1 to 10. Like the only person that likes trading this is Mr. Sosnoff, and I think he's bag holding this quite.
Lucid says they continue to evaluate finance and liquidity options as they launch their SUV. So, also, I wanted to throw this in there for all you degens and all you memers and all you Zoomers. AMC had earnings. They beat on revenue expectations despite demand softness, and they say they want to work more with Netflix. So AMC's third quarter revenue came in at $1.3 billion, down from $1.349 in the prior year quarter, but it was above the analyst estimate of $1.23 billion. So
Stock is up a penny. Literally,
a
or maybe
single
2
solitary
pennies.
penny.
Yeah, I think this has come and gone. They did it right though. They just dumped shares. Just that was, what happens.
What I would do.
yeah.
Yeah. So
Yep.
I think I remember selling like 3 puts in AMC, like way back in the day, and just like YOLO. I think they went up to 7. So
yeah. No, it had its day.
Yeah, I'm not mad at it.
Yeah, now it's 2.
DoorDash stocks sinks 9% as that company missed earnings. Says they expect further spending. DoorDash brought in revenue $3.45 billion versus $3.36 expected, but the company expects to spend several $100 million on new initiatives in 2026. But also, along with the warnings coming from Kava and CMG and all those other places, DoorDash people are like, hey, people don't have money to pay $30 for a burrito anymore.
Yeah. Also, just this is a parasitic company.
Sure.
Oh yeah.
Dash is.
No, it really is, yeah.
parasitic.
Sure, they take advantage of small businesses.
Yeah.
They take advantage of consumers. They take advantage of their robots. They take advantage of everybody.
Those robot things are
They're cute.
They're so weird.
Wait, those little Coco robots?
I
I love
hate those.
Coco.
Wait, is that DoorDash?
No, I
Yeah.
think it's. Is it DoorDash?
I think so. Yeah,
it DoorDash?
It's DoorDash. I think so.
Really?
They have a partnership with.
That's how they get you. They make 'em
They
cute.
were partnering with the robotics company. I'll get the name. Hold on.
Really?
Talk
I-
amongst yourselves.
yeah.
That's how the robots take over, man. They
I
start and
hate
they make
those
them
things.
cute.
That's way too far. Like if you,
Yeah, with Serve Robotics. Yeah, they're using Serve Robotics.
I think it's within a certain distance though. Like
Yeah.
if you are a mile from the restaurant and you can't get on your freaking legs and walk there and pick up your food.
We live in
You ha-
Chicago and it's cold, man.
I don't know.
So somebody
That-
else can be cold.
Those
I mean,
things.
but wouldn't you rather have a robot come to you than like a person who has to ride their bicycle in the freezing cold? Like, did you see all those
I have
DoorDashers?
legs.
Like when New York City floods or whatever, and then people are just ordering food and they're like swimming up Fifth Avenue.
Burn it to the ground.
How about DoorDash?
Cook your
the stock?
food.
How about DoorDash the stock? How about
Dead.
that? Dead.
It dumped
Send it to 0.
dead. It's at
It's down like
214
20,
213, 214. Did you guys see Neo, the new knit?
Oh, the $20,000 personal helper
Yeah.
assistant robot. Yes.
Oh,
obsessed.
yeah.
With the knit face and the black eyes?
Yeah.
And
Have you
just
seen the
staring at
memes
you like
of
a
where-
doll's eyes?
Yeah, that's
Have you seen the memes
Yeah.
where it looks like he's about to put a pillow over your face?
I've gained sentience.
Yeah, it's good times. Hey, just real fast, it's probably not on your radar, but Elf Beauty, ELF, the stock massively missed earnings and it's down 30% on
Ow.
weak guidance and tariff impact. Hailey Bieber's lip balm can't save them. I'm not joking.
Is
They
that an Elf
partnered
product?
They partnered with Hailey Bieber's Rhode. Anyway, but they declined to release full year guidance last quarter, but then the numbers this year were not great. So,
Ew.
yeah, ELF.
Not great.
Yeah, stock trading at 90, down
Oh.
$27-ish. Big move. Not one I traded.
OpenAI says they are not, in fact, working on a $1 trillion IPO yet. That's according to the CFO. I reported even, because it was reported everywhere last week, that OpenAI's IPO is probably going to come late 2026, early 2027. But now OpenAI's CFO says the IPO is not in the startup's near-term plans. Of course, the company came out with their big balls saying that they're worth $1 trillion. And it was going to be the biggest IPO of all time.
Yes.
And now they're walking some of that back.
I'm sure it still will be.
Do with that what you will. Hey, the FAA is going to have to cut flights by 10% at 40 major airports starting tomorrow. Transportation Secretary Sean Duffy announced that he will be reducing flight capacity at 40 major airports as air traffic controllers are still missing paychecks due to the government shutdown. We are in day 37 of the shutdown.
Just what we needed.
Yeah. Yeah, this is a tough one.
Fun fact, this is the only cabinet member that was on MTV's Road Rules.
That is a fun fact.
Really?
That's how he met his wife also. She's on Fox News, but she was also on Road Rules. So,
Road Rules. I love
Yeah.
those were great shows.
yeah, Road Rules, Real
Yeah.
World Challenge.
Yeah,
Like,
oh, yeah, the
Yeah.
challenge, yeah.
Yeah. So, there you
Classic.
Wow, that is clever.
What a glow up.
go. What a glow up for Secretary Duffy there. Costco put up yet another monthly sales gain, but the stock fell. Costco reported total same-store sales for October were up 6.6%. People buying a lot of candy, I guess. But stock lower, not sure.
Yeah, Costco has it's been kind of a dog for the last 4 or 5 months. It really has not participated in any of the upside. they, along with Netflix, missed the boat on the split.
Yeah.
I think they both should have put that front and center on the earnings call. You know, maybe throw in a couple of AIs in there too, like just be like,
And some rotisserie
like
chickens.
AI is now like making our rotisserie chicken, and we're also splitting the stock, and we'd be talking about a $1,100 stock
Yeah.
instead of a $900.
When are Costco's earnings?
They already reported their next one will be December 11th.
Okay,
is the
gotcha.
projected.
Oh, that makes sense.
Yeah.
Gotcha.
Yes.
To be fair, this thing has been like such a sleeper build in the last couple of years.
Oh, yeah.
Like it's outperformed the S&P in the last like 5 years.
Yes.
By like a lot.
Yes.
Yeah.
Recently, last year,
Last year it's been
like kind of a chop fest.
But
Kinda
no
chop,
one, I
yeah.
can't find a single person that has like anything bad to say about Costco.
No, you're a Costco head.
I love Costco. I saw Mike Butler in Costco
Oh yeah.
earlier this week. It was really funny.
What percentage
Yeah.
of their
They-
revenue just comes from us and our snack orders and the t-shirts
true.
that we have?
Sure, yeah.
Were you guys both like reaching for like the protein shakes and you?
We
have,
both
like, that
had
moment where you,
protein.
like,
We
look
both
up
had
and you're like,
protein
"Oh, hey."
in our carts. Yeah. Hey, Starbucks Union authorized an open-ended strike as the busy holiday season begins. The strike would disrupt Red Cup Day. Oh no! But Starbucks Union baristas did vote to authorize an open-ended strike. Workers United began organizing Starbucks locations in 2021, and then the company systematically, for other reasons, began shutting down locations that had unionized. It's a whole big thing. But they have the votes to go forward with a massive strike if things don't progress. Not sure what Starbucks stock is doing.
Starbucks was near the lows yesterday. It bounced off of those. So it's currently at 82.47, which is just off the lows. But it got into it got below 80 for a quick second there
Okay.
the other day. Yeah.
I've
been very weak.
I pulled this story. I know your dad's not here, but I did pull the story for your dad, but maybe you're interested. Maybe our viewers are interested.
Okay.
But congratulations, Alexander Ovechkin became the first player ever to score 900 career goals. That's amazing.
That's amazing. I also will give a shout out to Flacco, who torched the Bears for 470 yards at 41 years old, even though we won the game. So as another
Oldest QB, except for like Tom Brady.
yes, so the Unks are thriving. The Unks are thriving, and I'm with you, Ovi.
How old is Ovechkin?
I think he's pretty old.
I just didn't know how old. Like, he's not as old as Yammer Yager.
He's 40 years old.
Okay, good for
Yeah.
you.
That's Unk. He's
okay,
Unk.
no, that's Zaddy.
I'm Unk, then that's
Yeah, he's Zaddy.
Okay.
Yeah.
All right.
Anyway,
Sports.
sports ball. Sorry,
Sports
Julie.
ball.
Sports ball.
Ew.
But
Yeah,
900 goals
sports.
is a lot.
Yes.
That's insane.
Yes.
Oh no, that's a ton. That's so much.
So
oh my god.
congratulations all around for that. Finally today, for my viral video of the day in honor of this achievement, and shout out to Canada. This is the most impressive build I've ever seen. I know your dad built your stepbrother his own ice rink for a little while. It was a couple years ago in the backyard. But this is next level. Watch this. It's just like his yard.
Yeah.
I could just do that for hours.
Yeah, it's pretty awesome. Yeah.
Like, what a setup.
Those kids that grow up, I mean, these are older.
Yeah, it's Canada.
Yeah, older. But those kids, they come over and probably whoop some butt over here.
Sure.
Got that guy growing up on that place.
That's a dope setup. I want that in my backyard.
Pretty cool. I
Anyway,
like it.
Julia, this was fun.
Thank you so much. I had a great time.
Hey, what's coming up next?
We have confirm and send a couple viewer emails that we got. So we're going to take a quick little 90-second break, come back with those very, very quickly. Confirm and send. Thank you, Vanessa. We'll see you soon in a second.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty.
Julia, my friend, we are back for Confirm and Send. I'm going to do a quick little market update, though, because we haven't spoken about the market yet. E-mini S&P 500 futures are up 9 right now. We sold off about 5-6 handles in the last couple minutes here. You got the NASDAQ up 24, the Dow up 14, and the Russell up 3. A very muted day here to start the session. Oil catching a little bit of a bid, up 18 cents. We're sitting around that 60 handle, 59.78. Volatility futures at 18.19. They got a little bit, or 18.90. They got a little bit of a contraction yesterday with the VIX falling to 17.81. So a little bit of a vol crush into yesterday's move. Bonds up 17 ticks. You got gold and silver both strong. The metals moving higher here. Gold above the 4,000 handle, 40.22, up $28 and change. You got silver up 34 cents, both up about 0.7%. Bitcoin has been kind of choppy, but we're above that 100 mark, so that's good for my positions here. You got the futures down 500, spot up 94, spot based on the midnight open, and Ethereum up $5 as well. So choppy day, it looks like. Not much moving. You know, the earnings have all kind of been inside, so
it's still like kind of decent volatility in the market indices, though. Like Ivy rank of 24 in the Qs, like that's tradable in my opinion.
It is. I mean, you've been around long enough to remember when, you know, a VIX of 14 was like exciting.
Oh, I think I have, but I also my first trade was in 2020, so.
Oh, really?
It was in 2020, yeah. In February of 2020.
Wow,
yeah.
you caught the perfect timing.
Oh yeah, VIX at 17 below at 17.8 below average actually. Wow, I know. Yeah, look at that skew.
Sad.
So sad.
Make vol great again. We got some Confirm and Send questions. You want to get to them?
Let's do it.
A couple viewer emails for us here.
Heck yeah.
Thursday, November 6th. Remember this 6th of November?
5th of November.
Is it the 5th of November?
It's the 5th of November.
Damn.
Gunpowder Tree. You've seen that movie.
Yeah. V for Vendetta.
Dude, I also watched that movie, rewatched it because I've seen it a couple times in 2020. That was not a good time to watch that movie.
Dark.
Yeah, that
Did
was
you
dark.
like feel like you,
Well, I remember
you had to go like
Well, I was watching that movie, and there was also a pandemic in that movie, right? And the death toll from that was 20,000, and that was like an earth-shattering number. And I'm like, damn.
Yeah.
We were at
Little did they know.
Little did they know. So, but anywhoomst, it's the 6th of November now. We don't got to worry about it anymore.
Confirm and send. Let's do it.
Let's
Let's
do
get to these
it.
questions here. So first one, Julia, should traders care about which direction the market moves?
If you want to, you can choose whether or not to care.
That's a good answer.
Right? You can choose whether or not to care. You technically don't have to. Statistically, there's a little drift that you should account for.
We usually don't have the mathematicians on this segment, so I like that was thrown in there. Statistically, you should play for a little bit of a drift.
Yeah, you should account for like a little bit of a drift. That's all pretty well accounted for in the options chain, so you can choose to care or not. I personally go neutral because whenever I make a directional assumption, it's wrong. So I just prefer neutral, in which case I do not, in my trade construction, care what direction the market goes. I'm expecting it to be within a range.
Yes, I think that's the perfect way to phrase it. I think if you're trading, you should expect markets to go in both directions. I think, caring which direction is kind of subjective, but you should expect things to move in both directions and be able to participate in both directions of the trade. So I agree.
Yep.
I'm with you on that.
Yep.
Next one, please. How does skew affect the pricing of out-of-the-money options, and is it possible for retail traders to take advantage of it?
Yes. Okay. So basically, the skew in the options chain changes depending on where investors expect the risk for that underlying to be.
Big move,
right? Like they're worried about like kind of outlier moves, and what that does is depending on the direction of where they're expecting the moves to be. For gold, for example, that might be to the upside. For markets, that might be to the downside. And typically, in the direction where they're expecting more, or where there's more fear, then those options are priced higher, and they're a little bit further out from at the money compared to the call side of it. So on the short side, you can take advantage of that by potentially selling premium if it's suitable on the kind of the juicier side. And then if you're buying premium potentially, then you might want to consider the other side if it's not as juicy as the one. But what do you think?
I'm with you. I think skew allows you to do like diagonal spreads, call ratio spreads. Typically, we're in this reference, you're talking about the upside skew. But taking advantage of the tail premium that you have there is certainly something that I think is how retail traders can take advantage of that skew, selling premium on that side. The problem is a lot of those stocks, they tend to have bouts of realized volatility. I mean, like sometimes that stuff plays out, so you got to be careful. It's always size.
Cool. Let's go to the next one.
Next one, please. Are there any assets that are relatively immune to changes in market volatility?
That's a whole can of worms. That's a whole can of worms. So changes in market volatility, it depends on how big the change is. So if the market just completely shits the bed, then everything, all the correlations to the market become stronger.
Yeah.
Not necessarily go to 1, they could also go to -1. So if
all right, Miss Mathematician here. The phrase, all correlations go to 1.
It's the magnitude of 1. That's true. Yeah. Everything becomes more correlated. Whatever the correlation is to the market in kind of like more normal, more like less volatile conditions just becomes stronger. And this is also an important thing to note because like let's say that you're trading gold options and SPY options. And so directionally, those two underlyings kind of balance each other out a little bit. You're getting a little bit of buffer from the gold for the market, but the vol spikes, if there's a really big outlier move, can be correlated, right?
Yes.
Gold vol and S&P vol spikes together. So long story short, it depends on how big the move is. Everything tends to become more connected to the market, either inversely or positively, when the market has a very big move. In terms of what your safe haven is, it depends on this, like what causes the black swan events, right? Like it really depends on the market condition because we're talking about really rare kind of like macro specific events in a lot of those cases. Yeah. What do you think?
I can't follow that up. Are you kidding me? I can't give the simpleton answer to that. I think generally, like volatility, when you have bouts of volatility, it all kind of moves together, at least in the short term. So, that's why we talk about beta and correlation and all those things being, short. You can't bet the farm on those things. Like correlations are great. Things have a correlation, and when things get a little bit off whack, correlations don't always play out. You can have stuff moving, and same with beta. You'll have magnitudes of the move change too. So I would say there really isn't, market volatility generally dictates when you have volatility, everything kind of goes that way, usually, at least in the short term.
Exactly. And something that happens during those very crazy market-wide events is that a lot of the mathematical tools that we use to base our trading decisions kind of break down.
Yeah.
Right? Because these are abnormal. The Black-Scholes model assumes market regularity to an extent. So
it's speed too.
It's
that's why the market's wide now.
Yeah.
If you're making markets on a market that's moving, 5-10%, your spreads are widening out because it can, there's a lot of variance.
Exactly. But that's why looking at the chains in those instances is so helpful, because you're just seeing how investors are trading at fair market prices for liquid assets. So that can tell you a lot more in some instances about risk than some more sophisticated models that are based on mathematical assumptions that break.
Last one, please. Is there a tipping point in which assignment risk increases either based on how deep in the money a position is or the amount of time remaining until expiration?
Would you believe me if I told you that I've never been assigned?
I've only been assigned a couple times, unbeknownst to my knowledge. Sometimes you hold a position through expiration, you're gonna get assigned.
No,
which is like a unwanted or something that just happened overnight.
Oh, I see.
On a dividend or something.
On a dividend, okay.
Usually a dividend that I miss that I forget about.
Yeah. That makes sense.
Yes.
So I actually don't know. I would assume, and maybe I'm wrong, that the risk gets higher the more in the money it is and the closer to expiration that it gets.
Yes.
At any point when something's in the money, you can get assigned. So technically, so you got to prepare for that. But where the cutoff is or where the threshold is, I don't have a good sense.
Ultimately, it doesn't matter.
Yeah.
Because it doesn't change the risk profile of the position. So as long as the position still has time until expiration, nothing changes about the position.
Yeah.
So if you have a spread and you get assigned on the short call or the short put, your spread is still defined risk. The buying power will change and you'll be using more capital to hold that position, which if it's a problem, you just close that position out. It's the same risk as you had before. That's the point that I think is important with assignment and assignment risk, is that so long as your position still has days until expiration on the long option, or if it was naked, it's still the same risk. The risk is the same across the board. So no big deal.
Cool.
On assignment.
There you go.
With that said, E-minis actually just turned red. We're down a point. You got the NASDAQ down 21, crashing, it seems like. We're going to take a quick little 90-second break and come back with the boys from Research Team for trades from the Research Team Live. And then we're going to come back for the opening bell. Mr. Vecchio is going to be joining me for that, as well as Hear Me Out with Dylan Radigan shortly after that. So we're going to take a quick little 90-second break. You're listening to Tasty Live. We'll see you in a second.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Class is in session.
Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide. Julia, my friend, we are back. But who cares about that? Because we got the boys in the house, trades from the research team. Let's do it. Who is our first trader, our first researcher here today?
Oh, I get to do this now?
You get to do the shark.
Da-da-da! I think I'm doing the chicken, actually. Now I get it.
My man, shark. No, chicken is...
It's a rooster if you do it over here.
Yeah, rooster. What was the other one? Wasn't there one like here?
Chicken?
I don't know. I think this was...
Yeah, maybe that was chicken, this was rooster.
Yeah.
This is rooster?
Yeah.
Shark.
Shark.
Yeah.
Shark.
It's gotta be a shark, yeah.
Jaws, maybe.
Yeah.
How's it going, dude?
Good, not much. How's it going with you guys? Nice market day. Little wobble action.
A little choppy. We like this.
Yeah.
We like this. Yeah.
Market kind of taking a bit of a dump, yeah.
Yeah, E-mini's down 5 right now.
Oh, you love to see it.
So choppy with all the tech stocks, so we decided to do a very much non-tech stock.
Ooh.
Starbucks. This is in the news right now because the Starbucks Workers Union is about to do a strike next Thursday on Red Cup Day. Contract action.
I don't want to out
entirely
Julia.
sure.
She was talking about her cup because she has Starbucks here. I know she.
I know.
You know.
Well, yeah, you can they went back with the full-blown Christmas design.
Wow.
So, I know, it's crazy stuff.
Is that a pumpkin spice? Are you a pumpkin spicer?
I'm a black coffee.
That's what I figured.
Black coffee.
That was good.
Black coffee. Sometimes a splash of cream.
It would have really ruined your image here for the YouTube chat people if you had like some foo-foo-y pumpkin spice.
Well, I got this goofy cup, so that's, I wouldn't blame you, but
okay.
yeah.
No sugar, no coffee, no creamer.
No.
It depends on how rough the day is. They'll usually throw on a little depending on, how the day's going.
Pump that into my bloodstream.
Well,
and you are caffeinated.
Starbucks base coffee taste is it's an acquired. People say it is because it's a corporatized all over the country. It tastes the same, So you got to make it like that.
I just need a coffee that tastes like coffee, even if it's like burnt or whatever. I just need it to. If it tastes like water, I just get mad.
I see. Okay.
Yeah. Very particular about it.
Well, anyways.
So Starbucks,
43 DT because closest to 45. There's not too many strike options over here because the expected move is so
wide.
low.
Yeah.
Expected move is low in here, so 75 and 90. 1 standard deviation. So $2.08 of credit is what it's saying on the platform. We'll see how the market opens when we put it on. 893 buying power, so 25% potential return on capital. So your standard strangle, 1 standard deviation strangle, just in a non-tech, non-finance, non-stock kind of thing. Mm-hmm.
Perfect. I have a little bit of long delta there, but I will look to put something on. Stock is trading basically, it's down like 50 cents from where from yesterday's close. So I will be looking at something there on the open. Good idea. I like it.
All right.
Yeah, I like it too.
Good.
Nice.
Thank you, Shark. Who is our next esteemed researcher we have coming through here? Oh, yeah.
Steamed, like nicely pressed.
Did I say that wrong? Like esteemed, like the like.
Oh, esteemed. I heard steamed like
no,
you got your-
esteemed, like a high,
in high esteem.
And yes.
Yes.
Good morning.
Also pressed. Very nice.
Good morning, sir.
Good morning.
Yeah.
How's it going?
Good. Everything good.
He shows us up. He comes in. He's always so fresh.
I'm so underdressed. Holy
So
shit.
well dressed.
Oh, my
and it's
God.
Like, I'm like schlubby over here, you know. Like,
Well, I mean, yeah, it's the coffee.
I guess.
I don't know, or something.
Oh,
Thank you.
Julia, I didn't tell you this story.
Oh, try me.
So, when we started here, me
Yeah.
and Sahil,
Mhm.
Anton and Tom, they
Uh-huh.
told us to read your book in 3 weeks.
Oh, yeah?
And after 3 weeks, they're gonna ask us questions. Like,
did he ever ask you any questions?
Oh yeah.
Oh, he did. He did.
We went through a bunch of questions, me and Sahil.
How'd you do?
We passed. That's why we're here.
Oh,
Yeah.
amazing. It's an entrance exam. I didn't even know we had
Our
that.
book is good, but you know, the 3
I
weeks,
was actually a ghostwriter. They contracted me for that book.
Oh, yeah.
Really?
The
Yeah.
silent third author.
Yeah, the silent third author.
No, I'm such a neurotic writer. I could not let somebody else do it. But if,
I
mean,
couldn't.
So how long do you think someone can read the book, like on average?
I'm not
From
a
start to
reader, so I don't even know. I like writing. I don't like reading. Funny enough, but you could probably knock it out in like a week or two, right?
Really?
Yeah. Probably.
I don't know about that. Maybe for somebody that can digest that sort of thing, maybe the
I'm
simple
still not.
things.
I'm not even
like
totally
me.
certain that like Tom read it. So maybe he was just asking you all the questions that he had because he never read it.
Really?
I think
Okay.
he tried.
Yeah.
I don't know, but that's sweet. I didn't know that the tasty entrance exam.
Yeah, that's our hazing.
Oh, that's a really fun. Yeah, that's a good haze actually. Yeah.
You have to
Yeah.
read
Give
this.
it all the new. We have enough of them, so might as well.
True. What do you got for us, Sal?
Yeah, I'm doing Palantir in earnest trade.
Ooh, Palantir up about $1 right now. You're looking at.
So I'm selling December and buying January. I'm
Okay,
buying
well-
January, they're selling December.
Calendar spread?
Yeah,
I
calendar
like
spread.
this.
I like
Okay.
this too.
Yeah, so you're up at like the 230 strike.
Mm-hmm.
And you're doing, so this is like a little bit of a longer duration.
Yeah, longer durations. Yeah.
I like this. A little bit of a bullish lean. Leans you about 7 deltas long. So small bullish, but really, a little bit of short volatility, a little bit of bullish delta here.
Yeah, because in December, I think it will end up being worthless, I think.
I like it. We will definitely look at this one on the open in just a moment here. Perfect.
Very nice. I like it too.
Good.
Different.
good.
I like it.
Good.
Thank you, Gad.
Nice. Thank you.
Who is our last researcher? This is up your alley. General.
Yes.
Probably know.
Better music, better trades.
Oh, there you go. That's good. TM that.
Yeah, that's
Hey.
a trademark. That's good. Yeah, that's a good.
Like that. Mr. Kai, how are you this
How are
morning?
you?
I'm doing great. How are you?
Best day ever.
Oh, best day ever. Best show ever.
Is it? You get to spend all morning with me, and you're like, "This is the
That's
best
the
day."
best day ever. I get to
Oh.
be up at 5:45.
Thank you.
Drink a bunch of coffee my tummy's not ready for. It's ready, actually. I lied.
It gets used to it.
Yeah, it does.
You know, like
it's
the-
totally desensitized.
Yeah.
Yeah.
I hear you on that. What do you got for us today, Kai? What are you looking at?
All right. Some Ethereum.
Ooh.
I try to get away from the earnings trade. Yeah.
Okay.
This last week, my earnings trade was ranked at the bottom, but actually made a lot of money the day after because the Deckers dropped a lot.
Yeah. That was a tough one.
Yeah, so switch my strategies. Just normal ETA, try to find a high IVR. It was trading at the bottom, but bounced a little bit. So I'm trading range. 21, 33 is what I'm looking at right now. Decent premium. Doesn't want to go very aggressive. I think it's down like 50 cents this morning or so. I'm slightly bullish, so this is fine.
Yeah. I like it. About a 20 delta on either side. I'm locked and loaded in
I know.
cryptos. I've got shares. I got in the money puts now. I'm ready for these to go higher. So I'm locked and loaded. But I think if you
Also
don't,
the Bitcoin too?
Bitcoin as well, yes, and IBIT. But if you are out there watching this and you don't have positions on in these products, they're very, very liquid. They have high volatility. They certainly warrant having something on. So I like this. I'm definitely in on this sort of trade.
Yeah, looking at the options liquidity for these, it's just crazy to see. We were talking about it this morning. There's room to maybe like throw in some wings just to reduce the buying power a little bit. That's kind of one of my go-tos. And the spreads kind of further out are actually not terrible depending on what strike you're going with. So that's maybe something I'd consider here too. Just to reduce the buying power a little bit and keep the credit comparable.
Yeah, you do like a synthetic strangle. You
Basically,
buy like
yeah.
10 or 15 points out of the money,
Yeah.
you cut your buying power in half.
Yep.
And make it, a little bit more capital.
Talk about a spread. Probably I would go to the IBIT because it's a little bit more expansive.
Yeah.
You have more strikes to select.
Yeah.
The width of the wings, right? And they basically move at the same direction.
Yeah.
Nice.
Agreed.
Cool.
Love it.
Sweet.
I think we're 3 for 3. We're going to take a look at
nice.
the Starbucks and the Palantir position. I'm already in ETH, so I am with you on that one. Perfect.
Nice.
Good job, team. We're going to take a quick little 90-second break. We're going to say goodbye to Julia. Maybe she'll come back if she has the availability. But if not, we have the special guest, Mr. Chris Vecchio, coming in for the opening bell, and then Hear Me Out with Dylan Radigan, as well as our market measure that's coming up next. So stay tuned for that. We're going to take a quick little 90-second break and come back for the opening bell. You're listening to Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock, and short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock, like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit hard.
Chris, my friend, we are back for the opening bell. I'm going to do a quick little market update. We're going to get right to you. Yes. Give him the applause here for Mr. Vecchio. Quick little market update here. We got E-mini S&P 500 futures are down 10. We've given up about 20 points from the high. NASDAQ down 50. You got the Dow down 91 and the Russell down 5. Everything's selling off a little bit here going into the open. You got oil down 31 cents. It reversed as well. 59.28. You got volatility futures upticking here at 19.11. Bonds up 19. Gold up 10. Silver up 4 cents. And Bitcoin giving it up a little bit, down 1,000 on the futures, basically unchanged on the spot. Mr. Vecchio, welcome back. The peeps they've been waiting for this moment. We've got the chat going nuts. They're excited to have you back. How are you, sir?
I'm doing well, Nick. I missed you too.
I missed you so much, Chris. I missed you.
It's been nice beating most of you guys in the fantasy football league the last few weeks. I got a tweet overnight asking, I don't think Chris is coming back. So what serendipity that we're here today.
I mean, Chris, you can't quit us like that. You know, you've been itching for this moment, getting back into markets. I mean, you've been cleaning up after baby poop all for the last month. You've been waiting for this moment.
I've had my TC patch on, but nothing hits like the real thing.
I love it. Have you been watching markets as much as you normally have? You got anything fun that you're looking at here today specifically?
Yeah, the past month I've been doing a little bit less trading. There are a few legacy trades I have on from October, some corn, some natural gas, some things in currencies, some BTU as well. But I haven't been actively trading the market, and I don't really think I've missed much of anything. In that sense, say over the past 3 or 4 weeks, it's been a lot of chop.
Yeah.
And perhaps good for me because gold and silver really came back in quite a bit after my positions got closed out. So I'm looking forward to engaging for the rest of the year. Volatility isn't as high as I would surmise it would be given everything going on. But, you know, nothing ever happens. And S&P 7,000 doesn't seem that far away, which sounds crazy considering what we've gone through this year.
I know we were chatting each other, ready for the 7,000 hats. I thought we were going to get it into a euphoric week of Fed speakers and China trade talks and Apple earnings and Amazon earnings. Like it was setting up for the most hated rally to continue to the upside, and we didn't get it, which was kind of a surprise to me.
Yeah, the headlines the last few weeks, particularly about tech, have intrigued me. We know that PE ratios have reached nosebleed levels again. We had some sessions recently where like the PE of the S&P was over 23, and that's unusual. Also, I find this whole Oracle, NVIDIA, OpenAI carousel to be quite fascinating. And now OpenAI is going back to the government saying like, maybe you need to help give us federally backed loans. So I'm not going to give Ilya any credit for anything, of course, but I will say that I have some questions about some of the headlines we've seen here. And I don't know if we can still ignore it, but what am I saying? Of course I'm going to ignore it, Nick. Volatility, what you have a VIX over 18. The technical structure of the S&P is the same thing it's been for the past 6 months now. You get these pullbacks into your 1 month moving average, and then the slowdown tends to stall. That's what we did yesterday. Dropped between the 21 and the 50, pulled back above it. Today we're meandering. So maybe the pullback is wrapped up. What a shocker for me to say that I might be bullish on my first day back.
Listen, man, it's been tough. I mean, with my dad and I, it's like every time we have these downside moves, we're like, you know, I want to see a little bit more, and there never is a little bit more. It's so quick. The dips are so quick, and it's just back to highs, or at least marching towards highs. I have that same feeling as well. But you do have a little bit of a pop in volatility today. This has been a pretty nice reversal here to start the session. I know that we have a Trump scheduled meeting. I think is at 10 Central, 11 Eastern, I believe today. So maybe that's something on the docket here. You got the whole government reopening kind of on the in the hopefully near future. At least I would think that that's coming as a market mover as well. So so I think we'll be back to the races here. E-mini's down 14 here going into the open. We got about a minute here. a couple of the earnings trades from yesterday just to take a look at some of those. Qualcomm looks to be opening basically unchanged. We talked about Dash as well. Dash was down about 25, 26. ARM was another one of the big names. It's up about 7. So it's been a very, the earnings moves have been very much inside the expected move here. It's been kind of a buy the rumor, sell the news type event, it seems like, for the earnings. You think that kind of plays out in markets here with just kind of like we've baked in the upside here for at least the short term, and like maybe we get like consolidation, or is it blast off continuing?
I'm partial to the idea that we're still going into a period of the year where markets tend to be strong. And there are lots of concerns out there, but like the tariff news, for example, if the Supreme Court strikes down Trump's tariffs, what happens to companies that have been slammed like a Caterpillar or a Nike? Does that give us a short-term opportunity to see some relief? What does that do for treasuries? Would that be a vol-inducing or a vol-contracting type of event? I'm not sure it would be just straight vol contraction, because it means we revisit everything from April, right? We think Trump's going to give up on his tariffs? No, he's going to try to find a new way to pigeonhole them in. So I think that the event risk coming up around the corner could propel the market higher still. The government shutdown ending would be good, I guess, but it exactly hasn't been bad for stocks or gold or really anything at the short term. But if the Supreme Court does rule against the tariffs, Nick, all those revenues collected, which as the Trump administration yesterday argued in court, tariffs are taxes. Nice of them to finally admit it. We would get all those taxes refunded to companies and to consumers. And so that would theoretically push up deficits more than we thought, and it would kill the deficit contraction trajectory we had. And so what's been doing well in this deficits going up, Fed cutting rates environment? Stocks.
Yeah.
So why would it stop?
I love that, the ding, ding, ding. My big question, though, for you, because we kind of talked about this with Vanetta this morning, it almost feels like the move that we've had from the tariff tantrum low in April has kind of, you could kind of make the argument that markets sniffed out the fact that the tariff stuff would be kind of, that this headline would be coming now. Like, we've kind of had that move. It's been about a 6-month move. The old adage is like, markets think 6 months ahead. It's kind of played out to where we're basically right at the 6-month mark, October, November. And now we're getting this headline like, oh, tariffs are not going to come into play. Do you think that's kind of been why the market has moved in the way it has over that period of time? Like, you think that's kind of played out here?
I don't know if it's played out, but I think that's definitely one of the reasons that we're going to do big tariffs. Okay. Like, you keep rolling them back in. We saw 2 or 3 weeks ago, I was on one of the first call live streams right after Trump announced that he was raising tariffs on China. And I said, haven't we seen this movie before? Right? Like, he's going to pull them back. Why are we getting bared up on this headline? And I think that's just the can kicking game that we have to play. And the market has sleepwalked itself back into that, innocent until proven guilty mindset, where we can get the headlines, a lot of it's noise. Mm-hmm. The only things that we need to ask ourselves as traders still, where's volatility? What's the technical direction of the market? And then I suppose thirdly, how can we get exposure given those conditions?
Yeah, totally. I'm totally with you. Quickly, just to get to the market to see what's happening here. You got E-minis, they're down 7. We bounced about 6 or 7 handles from the low here. The NASDAQ down 90. You got the Dow down 24, 25. You got the Russell down 3. Oil continuing its slide, 59.27. Volatility futures at 19.10 here. The VIX itself above 18. We're at 18.25. Bonds taking a leg higher after being pretty weak yesterday. They're up 19 ticks here. You got gold above 4,000 and silver up 6 cents. Bitcoin giving it up a little bit as risk assets seem to be not on the list today of the buy algos. Anything specifically jumping out to you this morning? Just looking at some of the biggest movers in the S&P 500 on the downside. You got CRM, Qualcomm there down $8. Down $4. You got Adobe. Costco has been on the weaker end. AMD giving it up a little bit. On the upside, you got some of the bank stocks, Bank of America there, on the upside. You got FedEx, Nvidia kind of bouncing. UNH up $3 and change. Kind of a mixed bag here to start the session. It seems like kind of the risk-off stuff, your banks, healthcare, biotech sort of things kind of bouncing, and then tech names kind of giving it up a little bit.
Yeah, I mean, top options volume right now, NVIDIA, Tesla, AMD, Palantir, Meta, among the individual equity names that jump off to me. You do have the mix, of course, of SPY, triple Qs, and even IBIT in there.
Yeah.
I think that's perhaps the most surprising thing that I've seen in the market, just watching on the sidelines. From the past few weeks, I don't have any active IBIT positions on right now, and whatever long-term holdings, it's different discussion because this is about trading and not investing.
Yeah.
What's up with crypto? Fill me in. I've been in a coma for 2 months. Why are stocks like less than 2% from all-time highs? Gold has just ripped above 4,000. Crypto looks terrible.
Yeah, we were pumping Uptober, as our very own Ryan Grace would phrase it, and we didn't get the Uptober. We actually got a Downtober, a Paintober, to near lows here. We got below 100,000 the other day, so it's crypto has certainly been weak. I think the thing that I've been kind of saying, or at least putting context around, is the kind of consensus right now is that markets seem a little frothy. You have all these kind of quantum stocks flying around. You got the Trump portfolio flying around. You got Nvidia and Microsoft and all these $4 or $5 trillion companies. OpenAI is throwing around $1 billion, $100 billion like their manhole covers. The sentiment is certainly that there's a little bit of froth in the market. And then when you look at crypto as something where traditionally people have called it fake or frothy, a bubble, whatever, it's down 20% from the highs. So it's kind of had the downside move that we haven't really seen in equities themselves. And so my argument has been okay, if you think that everything is kind of frothy now, you've had the pain in the crypto space, you haven't really seen it in equities. Maybe there's maybe it's already played out in crypto versus what has happened in equities, where you get on Twitter and it's a 1% down move and people are freaking out like we're crashing to zero.
Well, people freak out when they're over levered. I want to stay in the crypto space for a second, Nick, because I can't help but notice IBIT's IVR is over at 56.
Yeah.
But that's fairly different than what you're seeing for crypto companies like a Coinbase at a 22.3, or maybe even a Riot, which is a little more elevated at 38.5.
Mm-hmm.
Would you rather be someone who's selling volatility in the downside in Bitcoin and IBIT right now? Or if you want to be bullish directionally, maybe take a flyer on something like a call in Coinbase or a call spread in Coinbase?
I like to play into the skew. I mean, these still have upside skew, so that's always my lean here. I think into these prices. I love having Ryan on when we have him on for live from the trade desk for some of those ideas, or to pitch, what's happening in crypto. But he always talks about, the velocity of the move to the upside and the volatility expansion that you get as crypto goes up is something that I feel like that's the play. To play for it to the downside when volatility is so low, it's a hard trade. I'd rather be speculating on the upside, because you get that added benefit of the volatility expansion into those up moves. So I'm leaning long. It's been a painful trade. I will not sugarcoat it. It's been a painful trade for a little bit here, but I'm still leaning long. I think that's the play.
I mean, I like to lean long myself. I'm trying to find an opportunity to do it in IBIT. Maybe the best bet here, just given where we carved out some lows at the end of June.
Yeah.
This may just be directionally neutral for the short term.
The upside call skew is perfect for something like a diagonal spread or a poor man's covered call, where you get a little bit of leverage via the capital you're using to get that delta exposure, but you're selling that upside kind of tail option that gives you a little bit of theta decay to it. That's how I've been trading it. That, or even if you want to be less aggressive and sell, closer at the money puts, something like, the 55 strike, or even an at the money put, they trade pretty juicy relative to the price of the underlying. You could buy a wing, a cheap wing, a 20-strike wing just to cut your buying power down. Those are the ways that I've been kind of trading it here. So market's chopping around, though. E-mini's only down to 8 now. You think this is good? You think it's good to have a week of kind of consolidation?
Yeah, always. I mean, markets don't go up in straight lines. And I know for the folks that are trading short-term on the 0 DTEs, these periods of correction are never easy to handle. But if you're in your typical 45 and 21 day out cycle, having a few days where the market moves against you is something that the strategy should allow you to bear. Mm-hmm. And I think that's the ultimate consideration, right? If you find yourself in a position where after 1 or 2 or 3 days of it not working in your favor and you're doing the typical 45 and 21 out and you're getting agita, you probably have too much leverage on. Reduce your position size. You have to give things time to breathe, right? And I would say gold and silver are the best examples of that over this year, right? Just being patient and waiting and just sticking with it. And ultimately it paid off. So for me, I have some toes to dip in the water today as redeploy some new capital. Mm-hmm. Bitcoin is definitely a place I'm looking, and it's just because of that IVR signal. You're not going to find much more with a higher IVR that's deeply liquid right now, or as deeply liquid as Bitcoin.
Totally agree. Awesome. So that's our market open. We've got E-minis down 12 now. We're at the low of the session. NASDAQ down 100 and change here. Closing out of a couple positions in Hood. Basically a scratch on earnings. I'm closing out of some Snapchat puts just now for a couple shekels there. I will get those posted to the follow page as well. But we're going to take a quick little 90-second break and come back for a very special Hear Me Out, because I've got Chris here to give us a little hand with Mr. Dylan Radigan as well. So we're going to take a quick little 90-second break, come back with Dylan. There we go. We got the soundboard. We're going to come back with Dylan Radigan for Hear Me Out. You're listening to Tasty Live. We'll see you back here in a second.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000% and I made a bunch of money and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Chris, my friend, we are back for Hear Me Out with our man, Mr. Dylan Radigan. Good morning, Dylan. How are you, sir?
Nice to actually make a proper appearance with you, Mr. Vecchio. I deliberately did not ask. I could have said every day like a child in the backseat of a car, when's Chris coming back? When's Chris coming back? When's Chris coming back? But I didn't do that one time out of respect for you, because I was like, Chris is a new dad. He doesn't need a bunch of bad energy in the mojo trying to pull him out of the bed, to pull him away from the baby. So it's nice to see you. Congratulations.
You are a very well-behaved boy in the backseat, Dylan. Thank you for that.
I did my best.
We've been doing that here in the office. It's been like, hey, Beth, when's Vecchio back? When's he back? Is he back today? Tomorrow? Next day? When? Come on. It's been crickets.
Yeah. Well, you guys are endangering my child's mental health by sending him Chicago Bears onesies. So,
well, it's better than Jets onesies, so he should be happy.
What are you trying to run at him, Jets?
Yeah.
No, nothing. Actually, in fact, nothing.
That seems like a real. Let's
the generational trauma stops here.
Yeah.
Let's let the baby be. Let's leave the baby out of this. It's nice to see.
As you as well, sir. Dylan, this has been a week of headlines. It's been a month of headlines, quite frankly.
Really?
We had a really bad jobs cut number today. This was the worst number in October for challenger jobs since October 2003. A lot of companies are citing AI. We even heard this from Fed Chair Powell, that AI may be displacing entry-level and routine task workers, creating what he's calling a structural realignment in the labor market rather than a cyclical one. If this automation is accelerating faster than job retraining or a policy response on the state or federal level here in the US, do you see a new risk of a higher baseline employment moving forward? And how are companies going to deal with this? Do they have a responsibility to fund or support this change?
So it's an interesting question that you ask, and I'd like to answer it like this. I believe a political catastrophe that's much larger than even what this question suggests. I think this has less to do with, I believe everything that you're suggesting as a risk is likely to happen. Structural unemployment, structural shift in the labor market. I believe that's self-evidently true. I don't even think that's a matter of opinion. I think the only opinion you can have on that is how long is it going to take to be implemented. And if you look at the history of technology, it's usually way faster. Once it breaks, it tends to go way faster than anybody anticipated. And I believe the consequences are going to be a political catastrophe in the United States. Because I believe you're going to have a huge percentage of the population that's equally talented, equally hardworking, equally well-educated, from good families, from the cities, all the things, and they're not going to have a valuable way to participate in the economy, and it's going to be a big political problem. And both political parties, I think, will prey upon that, probably to their own benefit, but unclear as to whether it will be to the rest of the country's benefit.
So when does UBI come as a result of all this? Is this a necessary outcome? Are we going to be looking at
UBI? The soonest it could come would be through the new mayor of New York and the political coalition that's going to form in resistance to Trump. You're going to see a New York Newsom like power matrix plus a couple other people, Pritzker, obviously in Illinois. You're going to see these voices start to unify, and they're going to do what's going to get them to win. And it may be that, but also the last person that anybody should ever underestimate in a political situation is Donald Trump. Yeah. And it's very possible you could see UBI come from Donald Trump before the Democrats have a chance to do it.
How does he phrase that, though?
Any religion. How does he phrase taking 10% of Intel? How does he phrase unilaterally? He's running a control and command policy-making apparatus that's now on trial in front of the Supreme Court. So he can easily say that he'll come out and say, listen, the best thing for everybody never needs more money.
So U.S. taxpayers get a 10% stake in NVIDIA?
He's got Peter Thiel and whatever, and he's got, what's his name from Palantir and all these folks around him, and the crypto world is all around him.
Mm-hmm.
And he says, listen, I don't know, but the people around me know. You saw what Jared did in the Middle East. You see the crypto this, we got him. and the robots are taking our jobs. We all know it. And so we're going to tax the robots, and everybody's going to get some money. And somebody's going to say that. It's either going to be from the left or the right, but that's going to be the only solution that's at least, I won't say it's going to be the only solution. It's the only thing that I could anticipate right now, understanding that new information will come into play.
Tax the robots, Meta gets taxed, Amazon, everyone gets taxed, and those, a chunk of every.
You don't do an everyone tax. You don't do an everyone tax. You say we're going to make our money on tariffs. We're making America great again. This is the Trump version. Make America great again. Tariffs are to protect us. No immigrants. Build the wall. All the things. And these robots are a blessing and a curse. And the curse is they're creating a structural change in the labor market. And so we need to tax the robots and give everybody some money while we figure out what we're going to do here. Because I believe the world's going to shift more towards live events and more towards physical interactions and more towards creative pursuits, design and car building and engineering and furniture design. I don't know. I mean, it's going to be all these real physical, personal, creative things that it's going to take decades before that really goes into place. So tax the robots and pay the money.
So you tax the robots. Okay.
I like that. So you think that comes first, though? The taxing of the robots comes first, and
I don't know who's gonna. It could take 10 years. I don't know how bad the political catastrophe is going to get. Chris asked me, "What's the soonest this could happen?" I would say the soonest it could happen would be Trump could sell it, or Newsom could sell it, or Mamdani could sell it, or Pritzker could sell it, or Marco Rubio. Or by the way, Marco Rubio can sell it, and so can JD Vance. Just with different words.
If you get both sides to kind of parrot this as their,
well, they'll have different descriptions of it. They have to disagree for structural reasons, but the outcome would be the same.
See, I was going to ask you if there was any chance they both kind of come together. No. So it's the
entire thing is set up to be an opposition for purposes of fundraising. Because I don't give the Republicans money because I love the Republicans. Some people may, or the Democrats money because I love the Democrats. I give them money to those parties because I hate the other party terribly. And then I use the money. So I'm the Democratic Party. I'm collecting money from you because you hate the Republicans. And then I use that money to pay a production company and to write scripts that put out content that describes why the Republicans are a bunch of bad people, to then drive fundraising. And both sides are doing it. It's two media companies. The Republicans and the Democrats are ultimately media messaging companies that drive fundraising through negative content about each other. So that's why they can't agree to anything, even if they agree to something.
Dylan, you mentioned something before, actually, let's take a step back. I saw your video yesterday on Twitter, X, whatever we're calling it these days, discussing Mamdani and how a lot of people are worried about him because New York's the center of capital markets, and Mamdani's win sends a signal that, urban governance needs to pivot away from being business as usual. Although as a New Yorker, I would say Eric Adams was anything other than business as usual. If you watch any of his, he was very entertaining. I digress. What do you think this message sends to Americans, to people internationally, about our business climate here, about the capital of finance globally, perhaps being run by someone like Mamdani?
I don't think it sends that much of a message, honestly, because if you look at it, everybody's going to see what they want to see. It's like a Rorschach test. So for something to send a message, it has to have a clear origin concept that has to be able to be delivered in some way and then absorbed by another brain. And the thing with the Mamdani presidency, Mamdani mayorality, or a Trump presidency is the other side, the observer, like it's like the Heisenberg principle, where the act of observing changes the behavior of that observing. This is like the opposite, where the observer decides what to see, which means that the message never gets translated because it's 1,000 messages. Because the people that want to, these are communists, we're going to die. Blah, 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 blah. Oh, it's no problem. Nobody's going to leave. Like everybody just has their own thing. So my analysis of it has nothing to do with left, right, extreme, this, that, whatever. It has everything to do with who's over 45 years old and who's under 45 years old. Because if you're under 45 years old, you voted for Mamdani. And if you're over 45, you didn't. Really, really clear. It's also Brooklyn versus the Upper East Side. And Brooklyn won, if you look at the votes. And so I think that what you're really looking at is a youth movement in New York, more than a left-right movement, which is a youth movement rejecting the culture of extreme luxury and inaccessibility and cost in New York. And I believe that generation, I believe that's correct. I think they're right. I just think that they're jumping to a solution that I don't think has historical success. And so I think to identify the challenge of the inaccessibility or unaffordability, and the rich-poor issues, which are massive and catastrophic, must be addressed. Whether that's through I would argue it's through looser permitting and aggressive hyper-construction of new inventory and all. I would have this whole other. I would be very permissive in New York and say, let's do more. Like we need to be we are the center of the world. We need to be more the center of the world. Open it up. And then anyway, but I don't even know that I'm right. I just know that the history of the sort of policies that have verbally seem to have been advocated has a bad history. And being old enough to have spent a lot of my life in New York before Mayor Giuliani, I'm aware that New York can be a dangerous and terrible place. I mean, New York in the 70s and even 80s was not a very nice place in terms of comfort and safety. And it became that in the 90s and the last 30 years, it became really one of the nicest places in the world. And so I understand why people are afraid of what they think could happen, but I don't think that's what's going to happen. I think we have to have a real conversation about a structural shift in the labor market. And the home ownership is now at 40 years old. Mm-hmm. For the oldest age in history for first-time home buyers.
Last year, I think I saw the data this week. It's up to 50 years old now.
Yeah, must be addressed. So I believe. Anyway, I know I went on for a long time there. I believe the New York mayor's election is actually a signal from the young people more than it is from the left or the right.
But Trump was I
think they're right. Trump
got that too, though. Trump had like a record young people vote.
Exact same energy.
What
the actual political war in the United States is not a left-right war. It is an old-young war.
Yeah.
Obviously, no one wants to go to war with their parents. And so it goes indirectly through either Trump, which is anti-establishment, next-generation voters, young men, on and on and on, or Mamdani, which is universally under 45. Anyway, I won't repeat all the things I've said.
I mean, who could be more of the establishment system than Andrew Cuomo in New York, a guy who literally laid the foundation for the condition that the state and the city is in today through all of the policies he enacted or didn't enact as governor. And I also think, like, Dylan, there's a generational divide that you speak to here from my perspective. If you were, say, 18 during the global financial crisis and you watched all of the big banks get bailouts, and now you're in your mid-30s and you're struggling with childcare or housing, and here comes a guy and says, like,
and healthcare.
And he's like, hey, we're going to bail you out. You're like, oh, yeah, well, if they're bailing out all these rich schmoes, why not me? It's pretty easy sell.
There's a structural challenge that has potentially constructive solutions through all sorts of basically, I would call it sort of boundaried experimentation to reveal sort of what works would be sort of what I would advocate. And I think that's extremely unlikely. I think that right now we're more towards these sort of perceived left-right political extremes. And I believe that that we're brewing for a political catastrophe.
Well, as someone who had a startup lose $1 million thanks to Andrew Cuomo, I bid him good riddance. Thanks for that thing. Why don't we go to the next slide here before my blood pressure pops?
Welcome back, Chris.
Yeah, I figured. With Trump and Xi meeting in South Korea to discuss a possible truce on tariffs, given these recent months of escalating tensions and shifting rhetoric, how much confidence are you placing in the durability of this truce, Dylan? What kind of follow-through signals are you looking for? Like Chinese buying soybeans, U.S. rollback of tariffs, et cetera. What would make you think that this is not just a short-term chapter in this ever-evolving story?
Interesting question. I guess I take issue with the base assumption of that question, which is that there's anything. I believe China and the United States are inextricably tied together permanently and forever, and I think all of this is theatrical.
So a Batman Joker, they're inextricably tied to each other's hips. There's not one without the other.
That's it. And this is just siblings making a show for their political audiences domestically. But I don't actually believe there's any risk of decoupling. I think it's impossible. It's self-destructive for both countries on a level that is intolerable. And everybody knows it. JP Morgan knows it. Nike knows it. All the Chinese cities know it. Chinese banks know it. And so I actually think Trump is trying to set it. I think Trump's primary concern is more with his optics. And I think that creating tension with China creates the opportunity to then have a huge like a Nixon style peace with China situation as a hero. And I believe that this is more a setup for that.
So, Nick, do you buy Chinese stocks? I was looking at A shares and FXI recently, and you could go through Baidu and Baba and some of the individual names, but they're getting awfully close to those September 2024 spike highs here.
Yeah, Baba's up $2 and change, say Baidu as well. I know there's a Trump presser today. You think he mentions anything of this sort?
I think that's about like Wegovy and all the GLP-1 drugs.
Yeah, from Eli Lilly yesterday.
Yeah, I think that's what it's about.
So, Dylan, you think this continues on? You think it's just like a constant story, like almost like inflation has been for the last 5 or 6?
I do. I think the question is, how do you trade with it? My attitude is that this never goes away. It never is actually a real problem with any sort of like mortal risk. It'll always be marginal risk, but that marginal risk does affect things. Just because it introduces the uncertainty of the flow of marginal goods between, like if you're looking to expand production or if you're looking to originate production, if you're just looking to do anything, even if it's with no new jobs and with AI, you want to source production from China right now for more widgets, or do you want to source production in, Louisiana or even Mexico? I just think that on the margins, it is relevant. But I don't know how that plays out in the financial indexes. And to Chris's point, maybe it's to get long China because ultimately the fears are overblown, would be my argument. Fears are overblown of a material change in the relationship.
Dylan, I've missed you dearly. And you're not going to be on overtime today, but I'm going to see you again on Monday. So please be ready. And again, you're going to get a nice ice cream cone.
How long has it been?
Honestly, I haven't had a dream in like 2 months. It's been like a light switch turning on and off. So if you told me that it was yesterday, I'd say, yeah, that makes sense.
All right. Well, you let me talk a lot. I was excited to see you. I like the question.
I'm excited to see you.
Yeah. And Nick, I'm excited to see you as well, but I get to see you more regularly.
I know. I'm the Gumata. He's the main course. I get it. It's fine.
Okay.
Thank you for joining us, Dylan.
Reality. All right.
Thank you for joining us, Dylan. We're going to take a quick little 90-second break and come back with more tasty content. We've got Market Measure coming up, zero-day SPX stuff. We'll see you in a second. Stay tuned for that.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Talking about It gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing is moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Got the need for speed? No problem! At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Look who the cat dragged in. We got Julia back with us for market measures. Welcome back. We're going to get a quick little market update because I haven't been able to talk about it. If you missed our segment with Dylan and Chris, it was great. Go back and watch that. It'll be in the archives very shortly. You've got E-mini S&P 500 futures down 46. We're near the low of the session here, down a little under 1%. You got the NASDAQ, the weakest of the group, down 295. The Dow down 350 and the Russell down 22. It's been a little bit of a bloodbath here in the morning. Oil selling off /CL 59.08, down 52 cents. You've got volatility futures 1975. They're back up to near the higher end of where we've been trading here. You got the VIX at 1919. Bonds up 24 ticks. Gold gave up its rally. It's now below 4,000. Silver down 13 cents. It's been, it's near the low of the session here. Bitcoin falling off as well, down 1,500. From a mover's perspective, you got some big movers to the downside. A lot of the tech names, AMD down 14 and change, CRM down a handful. You got Oracle down 8, Costco, which we mentioned this morning, down 25. You got Meta, in the almost getting into a 500 handle here. You got stocks like Microsoft below 500 here. Apple as well has been a little bit weak. You got Amazon giving it up a little bit. All the big name tech stocks, even Nvidia, going from green to red here. So definitely a little bit of selling action here with volatility percolating.
Man, Snapchat just couldn't bring the market up today. I don't know. It's so sad.
Snap is one of the only ones up right now. It's up $1.20.
Datadog up 20%.
Ooh,
the Datadog. Yeah,
$31.
Man. Oh my God.
That's a big move to the upside.
Market's down. Time to clown.
You buy the dip here?
No, I'm not gonna buy that. What?
Is this the point? You're below 6,800. We're back to kind of lower end of the week. We had the 1 day sell off, bought the dip. Now we're selling off a little bit more.
If it was down another 50, I think I'd buy the dip.
See, I say the same thing. And my dad and I both.
And then I regret.
And then you regret it.
You regret it, yeah.
Because you get maybe another 10 or 15, and then it's 50 to the upside.
Right, exactly.
And you're like, shoot, why did I sit on my hands?
Why did I not? So always buy the dip? Is that what I'm hearing?
That's usually the winning trade.
Don't say
That's what it has been, but we'll see if that continues.
The dip? Oh.
You ready for a market measure?
I'm so ready. I haven't had a market measure in so long.
Do you miss the market measures?
No, but
No,
the market measures were fun. I liked my skinnies though. I don't know. I had fun with the skinnies.
What was your favorite market measure that you put together? Because you were on the research team. Your first.
Oh, it was 4 years.
4 years.
4 years. My favorite.
I wouldn't say OG because we've been doing this since I had dark hair.
What was that like?
What was that like? The skin was a little bit softer, a little bit tighter. The hair was a little bit fuller. That's kind of what it was like. I still had the beard. It was darker beard.
I do remember those. We had those at the Sangamon office. They were just pinned to the top.
Oh, yeah.
Like right when you'd walk in.
Yeah, a little baby face.
Little baby face. Yeah. I don't know what my favorite market measure ever was.
What's the favorite piece of research that you've done? Book, market measure, or anything? What's your favorite thing to do?
You know what? Well, I mean, the book was my favorite because I just like writing. It was a really fun little project. A lot of caffeine. I think actually, you know what I'm thinking about? One of my favorite market measures might have been CVAR, like introducing CVAR.
Oh, yeah.
Because that wound up on the platform. That was really cool. I remember that was like that wasn't one of my first, but that was
It was a 2-part series, wasn't it?
I think it was a 2-part series. It was talking about like distributions and like there's this other statistic and it works well for like options compared to like regular VAR or standard deviation or any of the. I think that might have been the CVAR piece or defining options risk, which talks about the complexity of an options risk profile and like all the different ways that you can measure it and how options risk is really hard to measure. And those might have been my favorites. Yeah.
It's hard to measure because you always have the perpetual uncertainty.
Yes. Also.
So you always have a variable in there that you can't define. Does that really mess with a math person like yourself?
No, actually the Greeks make it really easy. Like all those different parameters make measuring the profile really easy. But if you look at like the distribution of options, like their options P&L distributions, the same way that you try to look at like the returns of a stock, you can't use like Sharpe ratio is like such a common metric in portfolio management and all that jazz. But with options, it totally misrepresents your risk profile because it's based off standard deviation, and we have these heavily skewed distributions, which differ from what you would typically see in the stock world. So like that's part of what makes it tricky. But the Greeks are such a cool tool because you have these like expected moves for all these different risk parameters, and that's so cool. I dig it. Do you have a favorite Greek? I know you're not supposed to pick your favorites, but
favorite Greek, I would say trading wise, I love a good gamma.
You like a good gamma?
I love a good gamma.
Like a gamma.
Diagonal spreads, calendar spreads, little crab trade. I mean, that's my wheelhouse. So I'll say gamma.
Gamma's a good one.
You're gonna go into like a second order Greek.
No.
You're gonna give me like a rho or a vama. You're gonna give me a vama. That's what you're gonna
No, vama, which is made up.
Why?
Real Greek. No, I think that's like not a real Greek letter.
Oh, yes. Okay, the letter itself. Yeah, Jacob was saying Vega isn't.
Is it Vega or Vama? Both of them might not be real Greek letters.
I think Vega isn't a Greek letter, but we use Vega because the N letter looks like new.
Yeah,
looks like the Vega.
Well, new is like.
See, for all you out there that think I'm not listening when Jacob's on, I was listening.
That's right. Why do I feel like Vega is a Greek letter? It just sounds really Greek.
Yeah, it does sound like it would be a Greek letter.
Not a real, and so neither are real Greek letters.
Gamma is it or Vama?
Vama,
Vega and Vama.
no, Gamma's a real one.
Okay.
Vega and Vama are not. Man, I used to know the Greeks inside and out. Man, this is so sad.
Yeah.
No, Vega's not a Greek letter. They just made it up. It sounds very Greek.
It does sound very Greek.
It sounds very Greek. No, my favorite's Delta. It just tells you everything. That's all I need.
It does.
Tells you everything. Well, it doesn't tell you. Well, it tells you.
What's your
Changing Delta tells you a lot as well, but yeah.
What would you put the importance of Greeks?
Oh, like the tier list?
Yeah,
of
your
Greeks?
tier list me.
I would put
We'll just talk 4. We'll do like Delta, Theta, Vega, Gamma.
Theta, Vega, Gamma, Delta.
What's your order of importance in terms of your trading and what you think is most important for a trader to focus on?
S tier,
S tier.
Delta,
Okay.
Theta.
Ooh.
Yeah. If you're doing short options, then I think the Theta is kind of important. But Theta tells you pretty much everything that the Gamma tells you.
Yes.
Yeah, it tells you pretty much everything. So you really only need one or the other. So one is S tier, the other one is like F tier. It doesn't matter.
So it's just S tier and F tier.
And then Gamma. And then Vega's probably in the middle. Put Vega in the middle, probably, yeah. Because at that point, it's like volatility on volatility, and that can get kind of volatile.
I think the Gamma and Theta aspects are good to understand, and you should know in your trading what your exposure to those things are.
Sure.
I don't think the numbers you have to like hyper focus on,
Yeah.
but understanding those concepts of time decay and how your positions are going to change via Gamma is something that's super important. I think the focus should always be on Delta and volatility to some respect.
That's fair.
Those are like the two things
Those are the two biggies.
that are my biggies. So
I don't put all in the Greeks category.
No.
IV, it's a parameter. It's not a Greek.
See,
So, well, if we're talking,
there's the door.
if any statistics in there, then yeah, let's just throw beta in there. I like delta because it's so versatile. Because you can also you have share equivalency.
Yes.
Right. It tells you the risk in terms of
Probability.
share. It tells you probability. It tells you expected move potentially, or like how far you are out from the expected move. It tells you a ton.
Mhm.
And then theta for me tells you your time risk. Right.
Yeah.
So that's like those are the two biggies for me.
Market measure. That was a good one. Let's do the
get
market
into it.
measure
We could just
here.
talk about this for days. Let's do it.
Yeah, we can keep going. Thank you. I thought the applause was for me, but it was really for Julia. Impatient bulls selling 0 DT puts, part 3. How do you think selling SPX puts has done through our data set?
When have we been collecting data? Is that
That was the trick in the question. How long have the 0 day
Has it been a
options
year? Do we have a year of data?
In about 2 years, 2.5
2 years of data.
selling puts.
Selling puts.
Puts or put spreads.
That's probably been quite rich.
It's been fantastic.
It's been pretty rich, yeah.
If you knew that in hindsight.
2020. Yeah. Man, well, now what is this? Part 3?
Part 3. So
Part
we've gone.
three.
Yes, we've done two. We've done 2 previous on this. We've looked at just selling put spreads and then holding them to expiration. So just looking at them starting in the morning and then like different deltas for the shorts, and those have all been awesome. Then we looked at managing the trades, and really the takeaway there was that if you had the hindsight, of the look back data, you probably don't even manage the trades because it's been mostly up. But those closer at the money put spreads were the best performing. So now we're looking at managing the trades and putting new ones on. We've been doing this as kind of like a reloading, based on the deltas. So like you put your 20 delta short option on, you take profits at X amount, and then you reload.
Intraday?
Yeah, at a new 20 delta. So
you're really
kind of like a roll.
It's kind of, but it's like an intraday roll.
Yeah.
Yeah, it's an intraday roll, and then you start it all over again.
Yes.
Wow. Okay, cool. I'm excited to see this. Let's do it.
All right, let's do it. So one of the key advantages of managing winners early with longer dated trades is the ability to redeploy capital to fresh trades. The 0-day option market in underlying such as SPX is liquid and active from market open to close. So as we continue our exploration of 0-day credit put spreads, it is time to consider what happens if we look to follow up an early morning winner with its second taste of 0 DT premiums. So this is closing a winning trade and then starting a new one at different delta parameters and looks. You think this is a good thing, a bad thing? In your own practice, do you just kind of take the money and run? And
I think it would give me anxiety, because if I have a 0-day on, I'm just always just checking I'm checking all the time. I'm like, is it down? So I think just for the peace of mind, I'd have a hard time maintaining the strategy. As well, I don't. My gut tells me more occurrences, low profit targets, right? We more occurrences can be better. Intraday volatility probably typically low on average, crazy in hot markets. So I don't know. I guess let's see. This could be promising.
I'm kind of with you. I like to be kind of done.
I like to be done.
Yeah, these get really interesting. So I'll do this and then that and then this and then that.
Yeah.
And in practice, especially when you're talking day to day, it starts to get a little bit of overkill for me personally. On stuff that's so binary like this. Some people, they love this and they want to do this all day long, and I'm with you. But for me, I find it a little bit, gets
You're
a little
human
much.
at the end of the day.
I am human.
With limited capital as well.
Yes.
So
limited brain power.
Limited brain power, limited all of it. All right, let's see what this unlimited theoretical trader was able to do.
Next slide here. We're using over 2.5 years of data in the 0-day SPX options. We collect this every 10 minutes. Begin each day by selling a $10 wide put spread at 9 a.m. We do this plus or minus 5 minutes. So this is 30 minutes after the open. So it's 9 a.m. Central. Each day with the at the money short strikes. On those days when this trade reached 10% of the max profit, we closed it and sold a fresh spread at that time with an adjusted strike. So we're doing a new at the money spread. So you're closing one at the money spread, or you're opening it on the open. If you get the 10% of the max profit, you close it and start a fresh one.
And that's a very low profit target. So like the pops on that are probably quite high.
Well, but these are at the money spreads. So you're selling like $3, $4, $5 in credit. So you're targeting like, 50, 60, 70 cents, depending on what the spread is. So it will happen quickly because you're very directional with the trades. But these are pretty meaty spreads.
Yeah.
So we're going to analyze the performance of these second trades only. So we've looked at the first trades in the previous sessions. So we're only looking at the second trades here. And we're bracketing them by the time of day they were entered. So we've been looking at kind of different times of this second trade. So typically it's like the before 10 a.m. So this is if you close your winning trade in 30 minutes or so. Between 10 and 11, 11 and noon, and then afternoon. So this is based on how long it takes you to get your 10% from the first trade.
Gotcha. Okay.
And so we repeated this analysis looking for 20% of the max profit instead of 10%, then using 20-point wide put spreads with short strikes at a 25 delta. So we're also looking at higher profit targets as well as wider spreads, further out of the money, wider spreads. So we're giving you a little bit of everything. We're giving you quick profits on at the money spreads and wider, further out of the money spreads. We're going to look at both of them and see kind of what we find here.
Cool.
So you'll see through all these, being directionally correct is obviously an advantage, and over the last 2.5 years has been quite beautiful here. So the first slide here, we're looking at the $10 wide at the money short spreads closed at 10%, and then we're looking here again at the second trades. So when you look at the whole batch together, all of these are very high probability. You're looking at 90% plus across the board. I mean, if you do these trades afternoon, it's been the trend is your friend. Average P&L per trade around that $40 mark, which is pretty solid for this is the second one. So we've already managed the first trade. But the point being here with with the market the way it's been, which has been mostly up, trading directionally bullish has been fruitful with all of these trades.
Oh yeah, then in those rare instances when the market just dumps.
Yes.
But these are spreads though, so you have your defined risk, and there's also usually context around those moves, right? So that you can kind of be aware of that and adjust your trades accordingly. The first thing that stood out to me was just the number of occurrences placed before 10 a.m.
Yeah, so this is 30 minutes. And that
this is 30 minutes, yeah.
What does that tell you about what happens in the first 30 minutes?
Ooh. Bulls running amok.
Well, it's been mostly up.
Yeah.
So like a lot of these occurrences, for you to get a 10% profit on that at the money spread, you need the market to go up.
Yeah.
And so you've had that, 400 times where the market was probably up, the magnitude of, let's just take a delta for as our proxy here. You're at the money spread in SPX, just so let's see what a delta would be. And this is into a pop in volatility, but you're doing a $10 wide spread. You got about 9 deltas on that trade. So you're getting at 9 deltas for you to close that for 50, 60, 70 cent profit. You need the market to be up, 10 points in that first 30 minutes.
Yeah. But look at that. We've also had kind of an abnormally bullish market, and that's not always what we tend to have for long stretches of time, especially when you're getting into intraday volatility. There's a whole bunch of nuances there. There's a whole bunch of nuances there to take into consideration. But the data, just looking at the last 2 years, it's been really interesting. But yeah, before 10 a.m., that's crazy.
Yeah.
Not surprised, but yeah, bananas.
The next slide here, we're looking at the same $10 wide short for the short option going $10 wide. Now we're closing at 20% of the max profit. And then the data here is of the second trades. You can see all your probabilities kind of come in, and because there's going to be less occurrences here because you're managing at a higher profit potential, of course.
For sure.
Your average P&L goes up as long as it's happening very quickly. So again, this is one where the trend is your friend. If you're getting the profit early, putting it on, it tends to start working again. If it takes you a little while, because you'll see, between 11 and noon, and then afternoon, your numbers get a lot lower.
They get a lot lower. Everyone just goes to lunch.
Is that it? Is like
I don't know. Maybe that's it.
you just trade in the morning, then be done.
Then you're done. Then you go get your chickens and salads.
See, I think that I agree. I mean, that's what we do here until we come back for last call. But
The fact that you're seeing most of these over 90 is still crazy at 20%. That's awesome.
And you have the weird 11 a.m. to noon time frame where that's just kind of a volatile period of time. Jajun did his research on that on that little spot. That's kind of like the time where you can, where you can see the peak volatility is kind of the
maybe the people with normal brains go to lunch, and so it's just the degens taking over.
That's right. The big liquidity goes to lunch, and then us degens are here.
Little liquidity just out here running amok. Yeah.
It's funny to see, and you'll see that time frame on all of these charts is the low period. Like that's when you see volatility.
Wow,
which is kind of, but again, this is just the last 2.5 years.
Yeah,
so
very limited time frame, abnormally bullish market for a lot of that. Although we have had some chop too. Yeah, look at that. Wow.
What do you think the market overall has done in this time frame?
In 2 years?
2.5 years. What do you think SPX
up.
was? 2.5 years.
Just like total percent gain in the S&P?
Yeah.
In 2 years? We normally average 10% a year.
It's been a lot more than that.
Like closer to 9, actually. I'm going to say, 40?
I think the low to high was 3,800 to like 6,800.
Well,
which is where we're at right now.
I love the future.
Yeah. So
it's crazy, dude. We average 10% a year. That's nuts.
Yeah.
In 2 years.
That's the range.
Yeah.
I don't know the exact, like when you do it from open to open, but it's been
crazy.
Yeah, you look at that 2-year chart, and it's a beautiful, beautiful thing. So next slide here, getting into the so we'll get to the 20-point wide. So this one, you obviously are getting wider spreads. You're getting there's more total risk on this trade, which is a lot of the reason why these numbers aren't as big for your average P&L. You're selling these for less premium. You also have more risk. And so these are bound to be a wider distribution of P&L, which is why you're seeing these trades as an average P&L be lesser. But you can see across the board, it's still been positive. So a win rate, 97% of all the second trades. So you basically are winning every single trade with these pretty small losses here. But again, the losses are going to be tail losses.
Yeah.
And this is with all the stuff that we talk about with 0-day trading. The main takeaway is that you have to be able to withstand the drawdown and that P&L variance. And a lot of people that I talk to that get caught on these sort of trades is they start with doing 1 or 2 or 3 contracts. And then, this is free money. This is the free money glitch. I'm going to do 10, 20, 50
Scale
contracts.
up, get a little greedy.
Get a little greedy.
Yeah.
Why do I close this trade when it's, it's only goes up? And then you get whacked on some of them. And then, you got to keep the doors open.
You need the discipline.
Yes.
You got to have the discipline, especially with 0-day trades. They got to take a tiny amount of capital, if anything.
Very true.
Look at that.
Yes.
98% though is nothing to sneeze at.
Yes.
Yeah.
This has worked. You've had a lot of second trades here too, just because, these are further out of the money spreads, so they decay a little bit quicker. And if you're going for 10% of the profit on these, it's going to be a much smaller number. You're talking about 20, 30, 40 cents as opposed to the 60, 70, 80 cents that you would be looking at with an at the money spread. So that's another part of the equation here. But again, that 11 to noon time frame, that second trade.
One went to lunch.
Yeah, just wait until afternoon if you're going to do that one. So
Jeez,
pretty wild that has been kind of a funky spot there.
Funky junky. What else we got?
Last slide here, takeaways. Or I'm sorry, we got one more. Yes, we got one more with the closing at 20%.
Yeah.
So this is oh, John. Wow, you come back.
You got the sad horn.
I couldn't see the 5. now they're really.
I'm glad that someone around here is having fun.
I know, right? 20% of the max profit. So we're closing at 20% here. You can see these numbers get a little bit better. There's a lot less of occurrences here because you're targeting higher profit potential. But overall, all these things have been good. I think we've put to bed the put spreads have worked in hindsight very, very well.
In the last 2 years.
In the last 2 years.
In this pretty bullish market.
Yes.
Yes.
So just keep that in mind.
Yes. Very cool stuff.
Last slide here. Now we're on the last slide for the takeaway. So being directionally correct is an advantage. How amazing is that?
Whoa, my God.
It's groundbreaking.
If you're always right, it's great.
There have been very poor ways to sell. There haven't been poor ways to sell SPX puts recently, but that shouldn't stop us from looking for the best trades here. So winning credit spreads coming off before 11 a.m. and starting a new trade was an effective way to increase daily profits. Again, it's been an up market, so doubling down on trades has generally been good. Trades placed later in the day, however, were less successful as there was very little credit left to sell, especially for the out-of-the-money trades. That was kind of what we saw with the 11 to noon and then even the post-noon time frame for the second trade was a lot less profit, average profit overall, and your win percentage was much lesser. Not a shock there because premium decays and you'll have more risk on a lot of those positions. Every day is a new set of opportunities for zero-day traders, and when those opportunities pay off, especially quickly, you might even get more than one winner in a morning. So if things work quickly, it kind of has paid to double down again quickly.
Look at that. And then everybody goes to lunch.
Imagine if you could take 2 winning trades and then go to lunch. Thank you. 2 winning trades and then go to lunch.
It's the most stressful lunch, that 2% of the time.
Where it's a full loss and you're in fetal position.
Yep, that's right.
Good stuff. Cool. Awesome, Julia. We're going to take a quick little 90-second break, come back with my friends and yours. We've got Quentin and G Money coming in for live from the trade desk for the Tasty Trade, as well as the Tasty FX trade desk. We're bringing them both to you very shortly. We're going to take a quick little 90-second break. You're listening to Tasty Live. We'll see you in a second.
Peace.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode. Smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Yes. Julia, we are back, my friend. Quick little market update. We've got E-mini S&P 500 futures crashing down 42 0.6%. We close all watertight doors. You've got the NASDAQ down 300, the Dow down 243. You've got the Russell down 23. Everything down between 0.5% and 1% here. The NASDAQ and the Russell, the weakest of the group. Oil selling off a bit or continuing its slide. 58.98. We're down 61 cents, about 1% on the oil futures here. Volatility futures just under 20. We got up to 1990, where great year, the year I was born. 1983 right now, up 85 cents, 4.5% ish. VIX at 1916, up a point and change here. Bonds up almost a full point, 117.07, up 25 ticks. Gold and silver both gave up their gains. Gold's down $3. You got silver down 21 cents. And Bitcoin has kind of been a risk-off move here with the rest of the market down 1,700 on the futures, spot down to 800. Ethereum as well taking a little bit of a move lower, down 48 and change.
Man, there's not a lot of days when gold and the market are down at the same time.
You're a gold bug.
I do like gold.
I know you have some you and Frankie in the chat. He's got a whole treasure trove
pile
of something buried in his backyard. You go looking for it and you'll be buried in the backyard.
Yeah, I don't know if gold's is what's in the backyard over there, but
we got the laugh track here to support me.
it's better than the sad trauma.
I thought that was good.
That was good. I thought that was fun.
Yeah, I think he chatted me that or something along those lines. Was like, yeah, you go looking for my gold and you'll be buried with it. So that's a good one.
Oh man.
But who cares about that when we? Oh, now you poo-poo me?
Yeah, you get the poo-poo.
I don't know. I need to get access to these these little dings and dongs over here. I need some. Who cares about that? We got some esteemed friends with us today. Can we give them a dee-dee-dee real quick? Dee-dee-dee. Live from the trade desk, Jason. Good morning, sir.
Yeah. So, it took me a heck of a time to get here because Quentin, ever since he came on board, doing the live on the trade desk, there's not enough sandbags in this world to tie him down to keep him. Man, he's on air. He's got this limelight. Man, really does.
It's tough.
It keeps him. Yeah. Anyways, yeah.
The ego gets big. It's hard to walk through the doors.
But, I would say one of the craziest things, and I'm sure many of our viewers would agree, is if we know that he's from New York. Let's talk about your dad's from New York and all that. What's with his lack of New York accent here? I mean,
he doesn't know any of the New York stuff.
No, he's got nothing.
He's too innocent.
Is he a fraud? I mean, I don't know. No, he's not a fraud. I mean, look, from what Marty has told me, growing up in Gramercy Park, that's where that accent can go to the wayside. But you know what? We still love him, even though he lacks the accent. Even when Bat says idea, he says idea.
The idea.
Idea, right? I would hope just a little tidbit of New York would be in him. New York would be in him, but no, nothing.
Yeah.
Maybe he's hiding it.
Maybe he is hiding it. Exactly.
Well, if you've spoken to Mark the trainer has all the New York in him. He's taken all that from that family. He's
just absorbed it.
No, he's got all the stereotypes.
Just imagine you call up and you get Quentin with a New York accent. It's like, yo, what do you, something like that. No, it's very proper from where do you go? Alabama? All right, whatever. Somewhere's down south. Even a little bit of a drawl, I would hope, but nothing. But enough on Quentin. Let's get down to some business, yeah?
Yeah, top 20 symbols.
All right, top 20 symbols entering through the system first 45 minutes of the day. 20, D-Dog, at 20. 19, Amazon at an 18. Hims at a 15. APP at a 10. GLD at a 36. TQQQ at a 29. Google at a 27. iBit at a 55. Rounding for 12. SoFi at a 22. Oracle at a 57. Snap at a 20. Mew at a 55. Rounding out at the last 8. QCOM 17. Microsoft 18. AMD 39. Meta 23. PLTR at a 16. NVIDIA at a 25. Hood at a 22. And lastly, Tesla at a 26.
Tesla #1 again.
But
Tesla down 13 and change.
But with that, I think we were talking about this during the break.
Yeah.
Dash, right? Dash is on its butt today, right?
Yeah, we're not a big.
Yeah, I know we're not a big fan. I knew something was up when I went to Costco on Friday, which you could see me at the South Loop Costco every other Friday.
Did you see Vanetta and Mike there? Because they ran into each other.
Oh, they did?
At Costco.
Did
you do the one here?
South Loop, yeah. It's my church. Yeah, that's where I go to empty out my checking account.
Did you have protein powder in
No,
your cart?
I'm past that. I'm just there, I'm past the vanity. No, but I knew something was up with Dash when they were selling $100 gift cards for $80
at Costco.
yeah.
It's like they're just showing up for some cash right there, huh?
Oh, yeah.
You ask me.
Okay.
So anyways,
$1 initiative.
that's the Jason top tip. Look at your local Costco's gift card section, maybe for your next fade.
And see where the discount is. Okay.
All right.
Yeah.
Cool.
Thank you very much,
Absolutely.
Jason.
Thank you so much.
Appreciate you coming on. We have another special guest in the house. Give him a dee as well. Ah, man.
How are we doing, guys? Julia, nice to see you.
Nice to see you. Best day ever. Spelt?
Yeah. It's
Like the flower?
Oh, isn't that like
Spelt.
wait, like you look good.
Thank you.
Yeah.
Good.
Yeah.
I've never gotten that before.
You got the vibe.
appreciate
You
it.
know, black, dark.
Man, John is going crazy on these buttons.
Oh, dude, buttons have been
what?
top notch today. I've been having fun.
Thursday.
Yeah, dig. Yeah, you are, John. You are, John. Yeah. He was on vacation for a little bit. He got to recharge, his mojo.
Yeah.
He's got,
Love to see
I
it.
hear John laughing.
There you go.
Got a little bit of his mojo back,
Hey,
He's
good
feeling
mojo.
good. He's feeling
Love
good.
to see it.
You serious?
Yeah.
Yeah, going to Austin, Texas today. Yeehaw.
Oh, you are?
Oh, yeah.
Oh,
Big
good
time.
barbecue.
Usually I fly in the morning. I thought I'd be a good little boy and come to the office,
You are.
work for the first part of the day, and flight delayed. So jokes on me. Aw.
When are you, how much is the delay? How long?
Just like an hour, but I don't want to be late for dinner.
You can't do it. No.
Jesus, John, you having a stroke there on the keyboard? No, I'm worried. Oh, my God.
Oh man, pretty fun job. Need a buttons guy.
Wow, so you got hit with the delay.
I know. Dang shutdown.
Yeah, I got
Yeah.
lucky coming
We heard
back
about that
from
this morning.
San Diego. It wasn't a
That's all right. Yeah, excited for tomorrow. Antone's nightclub.
Yeah.
Tony Tone at Anton's. Anton.
Yeah. It's just drilled in there. I don't know. It just comes out sometimes. I can't help it.
Yeah.
Well, it's gonna be a great time, and you got to go
I
to
hope so.
barbecue.
Yes, absolutely. And see how it stacks up against North Carolina barbecue. Is my
Very-
preferred, more vinegar based.
Yeah.
I like
So you like the vinegar versus the more sweet barbecue?
Yeah.
I like a
thick,
like a little tang to a little.
it can be a little hot.
Yeah, a little
sweet
spice.
habanero.
Yeah.
Habanero.
Yeah, something like that.
Yeah.
Yeah. The vinegar base, I wish it was it gets a little soupy, it's too runny.
Are you trying to douse it? What do you?
I dunk it.
Yeah, you dunk
it's
it.
a full dunk.
Yeah. I like it with a little thickness to it.
Thickness, yeah.
Do you go just slab of meat, or do you go sandwich?
Ooh.
Which?
Yeah, it's hard when you do those because you got the calories you can only have so many, so you gotta.
Come on.
I would rather.
It's more of a state of mind thing. You really got to be more determined.
Oh well, you two are a little younger. When you get in your mid-30s and your digestion doesn't work as well. Okay.
Wah, wah, wah.
Is it barbecue? Hey,
I'm quicker than you, John. What the heck?
Yeah.
Is It's a barbecue if your tummy doesn't hurt for like a day.
That's
after,
true.
Yeah.
You gotta eat all the barbecue. You can't waste on the bread. So you got just be careful with the bread.
Yep. Understood.
Is my takeaway.
I'll report back.
Thank you.
Yeah.
Sounds good.
I'll be waiting.
Okay.
Yeah.
I'm serious.
Yeah. Enjoy the show. I will be here doing this show.
The Lord's work,
Gallivant
if you will.
and eat barbecue and enjoy your time.
Maybe we could have
That's
barbecue
fun.
here while everybody's out.
Ooh.
Empty office.
That would, yeah.
Full of
You
barbecue.
come back and your
No
key card
parents.
doesn't work anymore.
No parents. Order Green
Watch
Street.
out.
Well,
all right.
What's happening in FX market?
I mean, we've had a pretty fun week here, and today, dollar finally giving back some of its gains. I mean, we had a pretty substantial and persistent dollar rally. Post FOMC now giving it back against all major currency pairs. If you're looking for a bit of divergence, though, from this wider, U.S. dollar selling, looking at U.S. dollar Canadian dollar popping this morning early to the U.S. dollars side as, market slide similar to Australian dollar, also down as well. We had across the board U.S. dollar weakness, but in those commodity currencies now starting to give it back up as risk sentiment kind of sours with equity markets down, a little bit more uncertainty in the air. Softer than expected Canadian PMI as, we have less U.S. data to go off of, so markets perhaps a little more reactive to the other side of those pairs. So sending the Canadian dollar to its recent lows hit yesterday above 141. So
Big
that's
move in the
right at
Aussie dollar here. What would you do if you wanted to get long Aussie? Would you just do it against the U.S. dollar, or would you do something against one of the other currencies?
U.S. dollar, I mean, it's the most liquid, and we're right at lows. Right here at 64.5 in the spot market is about the low that we've bounced off of several times in October.
Okay.
We've been lower than that, in June and part of the spring. But this is a key level I'm looking at right around where we're at, another 20 ticks lower. I'd be really interested to see if we trade through that. If you are looking for a non-dollar pair to get some of this Australian exposure, Australian dollar, Japanese yen is the mover of the day, down over a full %, a pretty whippy range here this week. On Tuesday, now it's trading around 99.10. On Tuesday, we touched 99 and rejected very swiftly. Looked like, and then dipped all the way, or rose all the way back up to 100. But now we're right back where we were on Tuesday. Yep, under that popular non-US dollar pairs. Looking at the daily chart, zooming in here a little bit, you can see, we're falling from those highs. And, a bit more of continuation here. So that's an interesting kind of risk sentiment play for non-U.S. dollar exposure, if that'll continue, or similar to the U.S. dollar, looking at that 99 level. If we get another, if that gets bought up similar to how it was on Tuesday, then maybe that's a tighter range we start trading in, or the floor goes through it and it's all yen all the time. Only time will tell.
Yeah, I got long both of those. So I did the Aussie dollar, U.S. dollar, and then I did long Aussie versus Japanese yen as well. So
very nice. Other major interesting pair of the day is this pound dollar Bank of England interest rate decision this morning. A little bit of fake out there. More governors or members, whatever they're called, voted to cut than expected, although they kept interest rates unchanged narrowly, 5-4 on voters. But then Governor Bailey got on the horn and said, we're going to take things slow. Wait and see.
Dikembe. No. Okay, so slightly bullish pound.
Yeah, and so we're getting at least a little good back and forth here, looking at the hourly candles right around that 131 level, but bouncing off its lows. Didn't get to 130, but very close. So it's nice to see a bit more of a range now in these dollar markets for short-term traders, not just purely one-sided. We'll see if this dollar weakness continues, or if with markets down again today, if we get kind of that resumption to flight to quality.
Yeah, if you get, you're saying like market down and rates probably coming down a little bit, or at least coming down from where we were. We've kind of had a bit in bonds, rates coming down, but Jay Powell was kind of like sort of dovish, but not really. Like he was very in the middle.
Yeah.
And what you're saying is like if the rate cuts kind of come back on the table as more of a certainty, you get a little bit of dollar weakness. Some of these things get a little bit stronger.
Right. But yeah, this morning, Fed Goolsbee got on the horn and said, echoed the kind of foggy metaphor that Jerome Powell used at the October FOMC. What do you do when you're driving through the fog? You slow down.
Yeah.
Speaking to potential rate cuts.
Yeah.
So
Whoa.
we'll see. Looking at around a 60-40 split, 60% chance of cut in December. But yeah, I mean, that is, if that's actually a real chance that we do not cut, I would expect, as we've gone into most meetings in recent years, looking at 90-10 split in terms of expected outcome delivering as expected. So if no cut is actually on the table, you still have, in theory, a lot of room to run to the U.S. dollar upside, yields staying higher. So it'll be an interesting development, and no real data thus far, few and far between around inflation and job market.
What do you think for like the real government reopening? You think will affect currencies a little bit?
It has been really interesting because now, yes, the longest shutdown in history. But yeah, dollar not down as you might expect with all of that uncertainty hanging in there, even appreciating since we started this. And I think now it just becomes its own kind of binary event of, what is the package or deal that we reach to reopen the government, that treated as its own event, and, whatever the spending ends up being.
Yeah.
Which will probably be a large number.
Money project go.
Yeah, so that'll dull some of the long dollar that you would expect to get. So you think it'll be kind of a non-event.
Yeah, I could see it being that way, or if they come to some crazy stimulus package or
Stimmy. We've changed the game.
If Stimmy go green,
Stimmy go
green.
Yeah, Dylan is kind of on the same. When we had him on this morning, he was kind of just talking about how everything with AI and all that stuff is just going to make the need for government stimmies even more apparent.
Did he say
being like a part of it too? Kind of.
Did he say supernova?
I don't think I got supernova out.
Right.
We didn't get a supernova? Did
I think
he say quantum?
No. But supernova is like his thought about like financial markets and just like the markets as a whole.
It's going to get big and then.
It's just a supernova. Yes, it's just going to get huge and
then.
Yeah. Every day you buy Tesla. That's it. It says.
That's pretty consistent with the platform data that we just saw.
Yeah,
there
it's always
you go.
on the top of our
Yeah,
list.
Polymarket's putting a 25 basis point cut at a 70% chance in December. And then the highest probability chance for the months after that are no change. So we will see. And I remember when we got that first cut and they were pricing it. Well, they were like, that market was estimating a 50 basis point cut. And I'm like, that's insane. No way that's going to happen. And I was unfortunately trading based on my unbiased opinion. And then we got a 50 basis point cut. And now, I'm looking at those prediction markets, man. Markets have a sixth sense when you get everyone together in a room.
Yeah, a lot of conviction required right now with the chop going on.
Yeah.
Diamond hands.
What?
Diamond hands. You could have conviction. Diamond hands.
Yeah, absolutely.
I got more paper hands on me. I don't know.
Okay.
Only diamond hands in my book. Still scooping a little crypto here and there.
There you go.
Yeah.
My $99,000 Bitcoin looking pretty good.
You like that? You like that?
A little limit order.
Yeah.
Okay. All right. Yeah. Down a.
I'm gonna.
These guys with their fucking dingers over here.
In like 2 weeks, I'm gonna look back at it and it'll be like 85. I'll be like, oh, nice one.
No. Got to get long here. We're a nice round number. Money printer go burr, it's coming.
Nobody wants to sell hundreds.
No.
One of my degen stocks was like the quantum computing stocks are the ones that are my kind of degenerate outlet. Yeah, and they are dumping right now, which is very unfortunate because they had a strong open and now they are flat, which is like honestly better than the alternative with these. These are the most volatile thing.
Yeah.
But they're fun. Some depending on your preferences, but yeah, like the quantum ones.
How many are you actually looking at in terms of individual tickers? I feel like quantum and nuclear, you can you have people that are looking at, one or two, or like looking at all 20 major players and trying to pick.
There's a bunch of them.
There's Rigetti, well, which I like.
I wonder which one you're buying.
Well, that one.
Not buying any of them. It's all foo-foo.
No, it's a lot, it is a lot of foo-foo. We're very early in the industry.
Yeah.
This is something that we've kind of talked about before because there are a bunch of like major tech firms like Google and Microsoft, Honeywell, IBM that are in the quantum computing research space as well.
You think Rigetti is coming for Google's lunch?
We squash you like bug.
Well, a buddy from my PhD program works there, so I randomly bought the stock like a couple months back, and then it jumped 40%, and then I got out. Maybe the stupidest trade this year, and maybe the one that's worked out the best. But yeah, like Rigetti, IonQ, but it's the same. I've kind of said the same thing, that if you're looking for like actual long-term quantum exposure, then those kind of more established tech companies are kind of diversified and many of them are doing meaningful research in the quantum space. It's kind of like in terms of actually being able to like sense risk or any kind of like pricing and risk for the future, like any like purely quantum stocks are like kind of a crapshoot right now.
Yeah.
Yeah. So my IonQ turned on me. It's sad.
Oof. Had earnings after the close yesterday.
I know.
Not that I think there's anything in there for earning.
Yeah. Total crapshoot. But there's a couple of like larger tech names that can get like pretty meaningful exposure that aren't purely quantum stocks. It seems way too early in the industry to actually want to actually have any meaningful exposure there. Yeah. So yeah.
Very good. Well, thank you, gang. That's it for us today. Glenn, thank you for joining us. Julia. That wasn't for you. That was for us.
Oh.
Yeah.
But you were good. You were okay, too. You get it like...
Brava.
I would trust you with the...
That means a lot. Thank you.
Yeah, the soundboard. I trust you with that. Yeah. I trust you guys, too. You don't trust so much.
They're getting slap happy out there.
I think they should do more.
They must be hungry or something with Dave's chicken coming later. We're going to take a quick little 90-second break. That okay with you guys?
Works for me.
We're going to take a quick little 90-second break and come back with more Tasty Live. You got Liz and Jenny next. We'll see you for the closing bell today. Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. Hold on. She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. And then parties for the rest of our lives. For the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together. Yep.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody, and welcome to the Thursday edition of the Liz and Jenny Show. My name is Jenny Andrews. That beautiful blonde is Liz Deerking. Happy Red Shirt Thursday, Liz.
Happy Red Shirt Thursday to you too as well, Jenny. We might look a little bit different today because we are live streaming from hotel rooms in downtown Austin, Texas.
I know. Yes, we are. So we're 2 floors apart. Liz, you're 2 floors above me. And looking good, looking good.
Yeah, it's kind of fun. So we came out the night before. So tomorrow is At Work by 11, which is my first time going to this type of show. And right, Jenny, we've never been to At Work by 11. We've never been invited. We just got ourselves on the ticket for this, and we're very excited to see everyone.
I know. We're lucky we got ourselves on the list. No, I have never. I actually called Tony a little while ago because I'm like, Tony, we've never been to At Work by 11. Can you go over the details with me? I wasn't sure exactly because when it says At Work by 11, is the show over at 10:30? Is everybody back at work by 11? I wasn't 100% sure.
So how does it go? Give us the rundown.
I know there's some mingling in the beginning, and then let me see.
Oh, hold on, Jenny. You won't be mingling. You have to work.
So here we can go. Here I've got the At Work by 11. You could see it's tomorrow in Austin. If you're in the area, sign up. Here's what I know.
Doors open at 8, right? If I remember correctly, this is how the commercial goes. Doors open at 8. Show starts at 9. We'll have you at work by 11.
Yep. So doors open at 8. There's an hour of mingling. Show starts at 9. And from what Tony said, the show ends. It's not that long. Like we're used to in road shows that are hours long. I think this one's only about an hour and a half. And then there's more mingling after. So it's not like our old 3-hour stage shows, Liz. It's live trading. And I think it's pretty quick.
That's awesome. I mean, I'm excited for the live trading. I think this is going to be a fun show to be at. We've seen Tom do this before. I like live trading shows. I like when traders actually say what they're doing and actually put it on. So it's going to be fun to see. We don't know exactly what our role is yet, but Brittany's making us work in the morning. And then the boys asked us if we'd be on the show. And then I'm pretty sure we're the cleanup crew. So I don't exactly know what's happening.
I don't know because it says doors open at 8, but we were told to be there at 6.
6.
Get your I hope you brought some working clothes because I think we're gonna be setting up chairs.
That's what I said. I was like, am I bringing my heels? Am I going to be standing for that long? It's going to be insane.
I don't know. I'm not sure, but be ready to work. That's all I know. And
6
normally,
a.m. But you know what's fun is our hotel is closed. So I might actually go at 6, leave at 7, come back at 9.
listen, Brittany's going to tell us what to do, and we're just going to do whatever. We're just going to show up. We're just going to be there when she says. Normally, we're on the stage, so we show up in time to get mic'd up and do our mic check. But this time, I think she's putting us to work.
I know she's putting us to work. And then Tom and Bat want to put us to work. So we're like doing double shifts.
I don't know. It's going to be fun, though. And honestly, every time I come to Austin, I love it. I've only been to Austin for tasty shows. I've never been to Austin for just a vacation, but every time I come here, I love it.
I like it too. I'm sorry, my texts are going crazy today. My daughter's going to New York this weekend, and I don't know how to shut these off. I don't know why it's not working. I usually have everything silenced on this computer.
Well, I don't even hear it or notice it.
Okay, perfect. Probably because I'm not sharing my screen. But but she's going to New York this weekend, and they're telling us about the flights. I don't know if it's going to affect anybody coming here, but even Frank the Great texted us today. So the flights on Friday, as of tomorrow, they're cutting 10% of flights in busy airports.
I know I got that message too. So that I moved my flight from Austin home to an earlier flight in case it gets canceled. Then there's another one after, so I'm not stranded in Austin. Not that it would be terrible to be stranded in Austin.
Yeah.
And we're all going separate ways, right? You're going to Florida.
I'm going straight to Florida. And so there's 3 flights that have to happen. Annabelle's got to make it to New York. My husband has to make it to Florida, and I have to make it to Florida. And if they're closing 10% of it, what are the chances that we're all of us are?
You'll make it. I think you got a good chance. Everyone has a 90% chance. So if 90% chance, and then 3 times. I think you'll make it.
I hope so.
So yeah, it's crazy here. I saw a list. My husband's company needs to hire all these, college graduating engineers. And I had seen the list of cities that they're hiring for. And one of them was in Austin. And I was like, well, I don't really want Logan to move to Austin but now last night I texted them all maybe Logan should move to Austin. It is a great city.
It is you haven't even been outside yet.
Hey, I was outside from the airport to the hotel.
Oh, good God. I don't remember that little jaunt. We had a little fun on that plane. Okay, but we do have a good show today, Jenny. We do not have Glenn on because he's traveling. And
no.
Which was sweet. I think he even offered to do the show, and then he would be running to the airport. So we said,
yeah, we were like, Glenn, don't worry about it. Take the morning off. Okay, let's go into the platform if we can. It's a busy day. Red Shirt Thursday, Red Market Thursday, SPOOs are down 60. You can see, I have to toggle between the actual SPOO price of 67.63 or down 60. I've got to toggle between, or we can even have the percentages. Where did they go? We've got SPOOs down about 1%, NASDAQ down 1.5%, Russell down 1.3%.
Yeah, this is a pretty big down move. My account took a total turn because this morning they were up.
I know. At least one of the only green, we got a few green things on our screen. Bonds are finally, because yesterday bonds took a hit. If you take a look here, I'm just going to go back. I kind of like to have it on with a move. Okay, so bonds took a hit and now they're bouncing back because they were in the 116 handle yesterday. They did take it was a big move for bonds. And so they are bouncing back. Our bond positions coming back. The nice thing about this big move, we weren't on all day, but it's when you get a big move like that, I think there are a lot of people who may have added to their bond position. We did not. We have just one, our original. So we're stuck in that for now. But at least bonds are hopping back up a little bit.
They're popping back up a little bit. So we're getting the move we need in that direction. Let's manage some things. So we had a couple earnings from yesterday, and we have earnings today as well. But so I know we had Snap. I know we had Qualcomm. Qualcomm didn't work, right? Snap did.
Okay. Breaking news, Liz. Tom says he just ate. We were going to meet him for lunch. He just had breakfast, so he'd like to have lunch a little bit later.
Great. Great.
All right. So Qualcomm, we did a diagonal. We paid $3.93 for it. Qualcomm's down $7. And that's what we say. If we put on a bullish trade and the stock goes down too a lot, we can lose what we paid. What do we want to do?
Honestly, you do nothing.
Yeah. Yeah. We've got the 182 for 8 days and
I mean, it's not that far away. It's $10. I mean, in this economy, it's not that far away with a move. It's $10 away.
No, I know. Again, I keep waiting for the day that the shutdown's over and the market skyrockets. We'll see if that happens. It could go the opposite direction. I think it's going to go like 3% to the upside. It could go 3% to the downside.
Very well could. Okay, so we close up Snap, or close that up. Let's look at Snap.
Snap is green. Snap was up on earnings, so that was good news. And it was higher. It was up as high as what? 8? What's the high here?
I saw it at 9. I shouldn't say that because this is only during market hours. I saw it as high as over 9 overnight.
Last night.
Yeah.
I know we were kind of, I think on our taxi on the way from the airport here, we were high-fiving our Snap position, but it doesn't look quite
like this in the back seat.
It doesn't look quite as good today, but our short puts, yeah, they could probably come off. Let's see. Yeah. Oh, sure. We sold them for 43 cents. They're 6 cents. Maybe.
Yeah, of course they got to come off.
Yes. Okay. Here, this can be a wheel discussion. We received an email, had a handful of questions. One of the questions was, how do we like the wheel strategy? Now, I don't want to say that we created the wheel strategy, but we
named it the wheel. We named it the wheel. Because I mean, I think this strategy is the strategy as old as time. We'll take credit for the zebra, the jade lizard, the big lizard, the spike lizard, and the synthetic zebra. But the wheel strategy we named because, and I'll never forget this. We were at a library, do you remember? And I said I called it the wheel of something. It was like a negative. And some guy was like, "Oh, it sounds like the Wheel of Fortune." I was like, "That's much better."
Yeah, right. I can't remember what your negative.
It was like, it's like a wheel of death. Or I said something weird like that. It's like you're in this constant wheel where you're selling puts, you get put the stock, then you sell a call against it. Then your stock gets called away from you, then you sell a put. And it's like a wheel of, remember that I said something negative.
Yes. And he said, how about the Wheel of Fortune? And so we had a segment. We used to have a segment every week called the Wheel of Fortune where we just, Fortune. We would just have a wheel position on, and I will never forget this. Now we get emails from viewers. Yeah, sure. We take emails. That's fine. I'll never forget this email where this man was in the Russell or the IWM. He was in IWM, and it took a big hit. The whole market took a big hit. And the email was like, Wheel of Fortune. Then it was like all these profanities. Then he called it Wheel of Fantasy or something like that.
Oh, yes. So, but let's talk about what this is. The whole concept behind the wheel. Like I said, this is the age-old traders. You sell a put. If stock drops down, so what? Because then you're long the stock.
Now you're long the stock.
And you sell a call against it, then the stock gets called away from you. Then you enter again with an out of the money put, and you just continually make income. Technically, it's an income strategy.
And so here, if we want to, so we sold a put in Snap. Snap went up. If we want to keep it going, we would just buy our put back, go out to the next cycle, and sell a new put here.
Yeah,
sell a new put here, and basically. We keep doing it, and if the stock goes down, that put would be in the money. If we let it go through expiration, we'd come in long 100 shares of Snap, and then we could turn around and sell a call against it.
Yeah, it's not bad, but this is not typically how you see a wheel. I mean, it is true, but the wheel is if it drops down, then you long the stock, and then but this is us kind of starting the wheel again.
So now, do we have anything? Do we have any stock? I'm just curious. If I take all of this off, if I take everything,
I did this the other day, and you're going to be surprised with the stock that we have. It's like Lumen or something. Not Lumen. It's like Lunar is the only.
Oh, okay. So now look at this. This is all stack.
Yeah.
So we have Archer. Oh yeah, here's a Wheel of Fortune. We have 100 shares of Archer stock. So do we have any options against it? Oh, we do. Oh, we have just a long call spread. That was part of the that was maybe part of the synthetic zebra, and we probably sold out our long put.
Probably, right.
Okay. So maybe that's not the greatest example because but we can. I mean, this long call spread, it's pretty much worthless. If we wanted to, here's a tough situation too, because we bought Archer at 12.83. Now it's 9.14. When you have a situation like that, and if I look at selling a call against it, and let's just go to December, if I look at selling a call against my stock, it's not terrible. Would you sell a call against your Archer stock?
Okay, so what price did we? I'm actually looking at something else right now. What price did we buy Archer?
We bought Archer at 12.83,
and it's trading 9.15. Do you know what our year-to-date P&L in Archer is?
Up a couple $100.
Yeah, we're up a little bit. Like it's barely in the green, but that's by using options. So we bought it $3 higher.
Yeah. So our cost basis, you could keep track of your cost basis if you want to. You don't have to. An easy way to keep track of your cost basis is just look at your year-to-date P&L. But if we have 100 shares, because let's say you have 100 shares and you were put it on a put, like you sold a put, it was in the money, you took the 100 shares because the put expired in the money. Now we'd sell a call. I'd probably stick to, the 12 or even the 13 call to give myself a little bit of credit, but some room for Archer to run.
Yes, I agree, especially when you're bullish. But that's what I'm saying. Like, this is the power of options. We bought it $3 higher than this. If you just buy the stock, you're out money. But we bought it $3 higher than this, and I'm not saying we've made a lot of money, but we're profitable on the year.
No, I could probably very safely say that all my shares of Archer Aviation I own at a cost basis of 0, because we've been able to get so much option premium in this stock that has stayed in the range of 6 to 14 for as long as we've been trading. So yeah. If you're always getting some option premium against your stock, you're always chipping away at your cost basis to the point where your cost basis can become 0, especially in a $9 stock.
Correct. Okay, so let's sell this. Let's just get in the wheel. I mean, just get 33 cents for it.
Okay, and then oftentimes if we want a little extra oomph, I'll sell a put too. Like we could sell the 8 put and the 13 call and get 82 cents.
That's what I'm talking about, but that's not the wheel. But I was just going to do that as a separate transaction.
Yeah, so and if you think about that, a $9 stock, we're getting $82. So if you have 100 shares, this is taking your cost basis down by 82 cents. You do this 10 times and you've got Archer cost basis to 0.
Yeah, bada bing, bada boom. That's how you get your cost basis down. But that's the ultimate goal of the wheel, is kind of reducing your cost basis, just cycling through mechanically. Perfect.
Yeah, honestly, are you surprised that you can go up 9, 10, 11, 12, 13, $4 and still get 30 something cents?
Not really.
I know our viewer who wrote the email about the wheel, she likes to do weekly. And I like weekly too. In the weekly, the difference is you're a lot closer. You're a lot
closer, but it's easier to kind of maneuver. I agree. I mean, it's easy if it goes up, it's easier to roll it out.
Yeah. So December's kind of a long haul, but
that's all right.
That's okay. All right. Now I'm going to get back our positions. Working, close. We got everything.
Okay.
As far as managing trade.
Because we will not be doing this tomorrow. I mean, we will not be in this account tomorrow.
Oh, there's no show tomorrow.
There's no show tomorrow. So we will be looking at it because I'll be on a plane looking at my account. So if something gets completely out of control, we can handle it. But I don't know that there's anything that needs to be done. Qualcomm's that short's gonna expire.
I'm just going through to see if there's anything with the 1 day. Etsy, oh gosh.
I bet.
Look at Etsy, a 75 call and it's trading 57.
Yeah, that's bunk. I'm just kidding.
I knew, I've been taking a hit lately, and Etsy's one of them.
Oh, really?
Yeah. Yeah, but okay, so we've got one long call on Etsy, no big deal. But look at, I'm curious. So the 50 put in, it's trading 57. The buying power
look
is
at
kind
that.
of flat. Yeah.
Ooh.
Let's see. Come on. Come on. Okay. So that'll roll off. That's nothing. What IBIT is one day. And
IBIT we should do something with because it's in the money. Like we're going to have to do something with IBIT right now.
So the 65, 66 call spread will roll off. We've got this 61 and a half, 57 put spread. We're going to close the put spread and roll it out.
I mean, we're just going to be putting on a new one and we got to put the call spread in with it. So just close that and let's go a week out.
Yeah. Do you want to go the 8-day or 15-day?
Let's go 8-day. I mean, if we can stay in the 8-day, I'd like to stay in the 8-day, but I understand if we can't.
So when we move it out, we're going to have to pay a debit for it unless we roll.
I say we just close this and like reestablish with a new trade.
Yeah. Yeah. That's kind of, I think that's
the right thing to do.
I guess so.
Because otherwise you're paying a debit. Why would you pay a debit to put the same trade on?
No, we're going to be paying a debit. We're going like,
no, that's what I'm saying. So just close it and let's put something else on. Like we don't need to look at this as the same trade.
I want to see how much. So you'd have to make it super wide. Either way, I'll close this and we'll look at, I think for a mental game, the best thing is you close the trade and fresh set of eyes, put on a new trade.
Right.
Not worry about, because if we were paying $3.44 and put on new Jade Lizard for $1, we're paying $2.44 for it. But you can't think of it like that, or it's going to hold you back putting on your new trades.
It will. Yeah. You can't think of it like that.
So we just close it and then we keep like lather, rinse, repeat, keep doing our little Jade Lizards like we used to do, where you have a call spread. It's tough because the call spread is going to be really close unless we just stick with short puts, like short put spreads instead of adding on
with short put spreads. The call spreads have been helping us though. We're getting 20 cents for them.
20 cents. And then we use that 20 cents to buy something.
Yeah. That's what we've been doing.
And a put for $1. I mean, a put for like 93 cents.
Yeah. That's great. I mean, the puts are helpful. They've been helpful.
The calls.
I'm sorry, the calls. The calls have been helpful.
Yeah. Okay. So here we go. Like our Jade Lizard again. We're getting 90 something cents. I'd have to bring the put up a strike if I want over $1.
It's fine. I mean, 93 is fine. I'm totally comfortable with this because minus a wild gap up in Bitcoin, which it could do, we're still going to make money.
So we're working that, and they're just a weekly trade.
Anything else have a 1 day?
Are you surprised after like yesterday? And I'm going to put a GTC for 50%. Let me see this 8-day trade, GTC 50%. Now, I thought, are you surprised like the crypto couldn't keep its momentum going?
Yeah, I am. But it is what it is. You know, there's a high volatility. And when there's a high volatility, that is saying that it's going to move.
Okay, so Intel is all in.
But crypto has been pretty lockstep with the market, and the market's down today. Do you know what I mean?
Mm-hmm. I'm just closing things up that aren't urgent.
Yeah, I mean, I think you did pretty good, and I can glance at this too. We are going to be taking live tweets, put the hashtag LAZJNY. Bob on Fire gave us our earnings, which I'm very excited to look at because I know DraftKings is on today. DraftKings just has a deal with ESPN. ESPN dropped Penn and picked up DraftKings, so they were up this morning on that news.
Oh, let me go to DraftKings DK.
And Jenny let somebody, I mean, I know you told me this. Who did all your picks?
Oh, my driver. My
I was like, I feel like I remember you telling me something about you let somebody do all your picks.
Well, so looking at this chart, it's funny to say it's up, but because DraftKings has been in a world of hurt. But they, as you said, they've got made some.
No. What was it? What was the high? I can't read that because it's too different for me. But what was the high today?
29.
29. So it was up like $1.
$1. But yeah. I mean, when I say world of hurt, like it has been cut in half since like its high in August was about 48 and now it's 28.
Yes. Vicious cycle. That's what I called it. It was a
vicious cycle. Did someone tweet that or email that, or did you?
No,
just
it just
remember
came
that?
to me because I was like, you're in a vicious cycle with this, and he's like,
Yeah,
vicious
yeah,
cycle.
yeah.
Oh, fortune.
Yeah.
Yes.
Oh, yeah. So my driver yesterday, I know him. I've used him before, and he is Mr. Football. He knows everything about every team. And so I was like, oh, this is amazing, Patrick. I've got an hour with you, and I've got to put in my DraftKings fantasy lineup.
That's
and
why when you called, you're like, I gotta go.
yeah. Liz is trying to call and talk to me while I'm in the car. I'm like, I'm busy. I've got stuff going on. So he picked every player, and I told him I would sell him some money if I win this weekend. But he was so good, and it was kind of nice to see how his mind works, how he was picking the players. He really didn't care. He wasn't just like, I like these players. He was more concerned about, finding the worst teams and then picking the players on the teams playing the worst teams.
Oh, I mean, I act like this is engaging for me. It's not.
Well,
Like,
if I
not
win, last week I let my dad pick my team just to give him something to do because we were in the hospital every day with my mom, and I came in last place.
Don't blame your dad. I do not blame your dad at all. I love your dad. He's a delightful human. And you know what? Jenny's come in last place 5 weeks in a row if it makes you feel any better.
I didn't tell him, and I don't think he's watching. So
he's always watching.
Usually used to be. I think my mom's wearing him out. Spoozed on 74.
And it was Spoozed on 74. So, okay, on a side note, let's go back. We are going to jump into Twitter, but I wanted to talk too about the SPX study that we did yesterday. And then I know Julia and Nikki did it today, and they did a great job with it. But I wanted to, today, are we up or down today? Let me just ask you this. Would you consider this an up or a down day?
We are down 1 point, a little over 1%.
Okay,
Books are down a little over 1%. So we're down. It's a red day.
It's a red day. And it's a big red day. I mean, I would say 70 is nothing to shake a stick at, right? So,
no.
But the one thing I wanted to say about these studies that we're doing, especially the one from yesterday, where you're looking at 10% or 20%, you would be out in minutes if you do it at 9 o'clock. So we're not saying that it has to be a bull market or an up move. We're saying you need a 30-second pop.
Yeah. So for the put spreads,
and that's what the study was on. It wasn't on the neutral ones. It was on the put spreads.
Yes, we've been 4 weeks in a row now. 4 weeks in a row of these impatient bulls selling put spreads, and a lot of people will say, "Well, yeah, it works in a bull market. It works in a bull market." Well, SPOOs are down 70 today. And Liz, I want you to read the times because I'm in our show account. I'm not in my account. You're in your own account. Read the times of your SPX put spreads, the times you were filled, because you were in and out. Even though we're down today, it's like you just need to get
SPOs were down a lot when I put them on. I'm just going to go to my filled orders.
I think when I put mine on, SPOs were down like 32, 33.
Okay, so SPX filled. So 90804. Okay,
90804. And what was the price? Because we could see SPOs right now. SPX now is 67.24.
And I'm doing the at the money. So I'm doing the just out of the monies. So it was 67.40.
40 points higher. So yeah, SPOs were down 30.
Yes, SPOs were down 30.
Yeah.
And then I got out at, oh, you know what? I'm sorry, 67.50. I was reading you my long. And then I got out at 926. So 908 in, 926 out.
And just a little bit of a pop. And you go put your GTC in for 50%.
50%.
So you sold that $10 wide put spread for what, $4?
I sold it for $380.
$380, and then you got a little pop and got out for 50%.
Yep.
So you made $190.
Correct.
And SPOs around 70.
Yep.
And so you put on a bullish trade.
Well, and that's just it is. I don't know that I'm ever going to leave those on. I know that was like something that was talked about too, being like, hey, just leave them on. And then whatever happens, it's SPX because it's cash settled. I don't do that. I mean, I think 50% is a little aggressive. I think I need to, bring it down. I did like Jacob's study about the 35%. I think 10% is a little too low for me, but I think 35% is kind of a happy medium between the 50% and 10%. So that's, I think, where I'm going to hang my hat. But then
I've been putting the 35%. I've been putting the 35% GTCs, and I've been doing both sides: $10 wide put spread, $5 wide call spread. And I don't put them on as one package. I don't put them on as an iron condor. I sell the put spread, sell the call spread, and then I put in the GTCs for both individually.
I think that's a very important thing that you're saying, because I was like, oh, yesterday I was just like, I'm going to just kind of be a blue wackadoo, and I'm going to do this, and I'm going to do this. And I was layering them all in, and I did the put spread. I was out of the put spread, but then I did Jenny's $5 wide, $10 wide, 30 delta-ish, and I put them in as a package, and then I tried to close them for 50% of each. You got to put them in separately. I think that's kind of a keynote if you're doing both sides.
Yeah, because if you're doing both sides and putting them in together as one, the pricing might not be like, if you go, oh, let me take off this call spread for 50%, or let me take off this put spread for 50%, the pricing might not be the way it gets priced when you put it all in as one package. It might not, the percentage.
It wasn't priced right yesterday when I was trying to close it. So you're right. I mean, I think I was trying to take like 5 cents out of something, you know what I mean? Instead of a real profit on it. So I think that's key when you're doing that. But I have been liking the impatient bulls.
I have too. I have. I was trying to teach after my driver picked my fantasy team, I was trying to teach him the 0 DTEs, because so he's a driver, but he has a lot of free time in the car waiting for people at airports. And he said he's been trying to make a little extra money sports betting. And I said, Patrick, I could teach you, some better ways than sports betting.
Yeah.
So, but do you want to hear something funny? What he's been making the most of his money on betting on ping pong.
Betting on ping pong?
Yeah. Yeah. He says he's on like FanDuel, and you can bet on these ping pong like these European ping pong tournaments. He watches them play and bets on them.
Okay. Fun fact. You know that my grandma held a silver medal in ping pong.
Yeah, tell everybody. I don't know if everybody knows this story.
Yes, I have ping pong in my blood. And I tell my kids this every time we see a ping pong table. I was like, go up there. You've got it in your blood.
Hey, we might be able to find one in our hotel by the pool and play tonight.
Terrible. Well, when I was on the trading floor, I don't know if you remember, I don't know if I could say people's names, but it was somebody from Susquehanna. It was a good friend of mine, and he was hilarious. Like, I loved him a lot. And I was getting married, and he's like, here's the deal. He found out my grandma had a silver medal. Now, my grandma at this point was older, right? I mean, she's, rest in peace now, she's gone. But she was older, and he's like, here's the deal. We're going to fly your grandma up. I'm going to play her in ping pong. If she beats me, I'm paying for your honeymoon. And I was like, oh my God, yes. He goes, the catch is I'm going to yell insults at her the whole time. I was like, so I immediately called my dad. I was like, Dad, does grandma still have it? He's like, I don't think so. I was like,
Now, when you say she was a silver medalist in ping pong, not in like the regular Olympics, but it was the senior Olympics.
The senior Olympics, yes. I like to say that. So it's so funny because that's the one thing that I got willed was her silver medal, because of the whole ping pong, the trading floor. But the trading floor, that's how they would bet on anything down there. He was going to pay for my entire honeymoon if my grandma beat him in ping pong.
Oh my gosh, your grandma. That would have been, and I bet she would have been wearing like all decked out in jewelry while
she never was not decked out. She was like, she wouldn't leave the house without a full face, hair done, and a full ensemble.
Yeah.
With tons of jewelry. Yeah.
Oh my gosh. That's awesome. You have to bring the silver medal on the show one day.
Oh, you know what? I will.
Yeah, definitely. Okay, I'm going to get back to going through our account, just because we haven't done this in a while, and I found some things that I didn't even know we had. So like, take a look at this. We bought 100 shares of LUNR at $15.
This is what I was telling you. This is one of the only things we have stock in here.
Which means we were short, if we bought it exactly at $15, that means we were short the 15 put. We were short the 15 put, and we were assigned. And so we bought it at 15. We sold 115 call for $1.19. So that brings our cost basis. And you could do the math right here. Like, we bought it at 15 and now it's trading 980. So we're out 518 on the stock position, but we made 108 on the call, improving our cost basis by $1. Let's try to sell another call against our lunar.
Yeah, for sure.
So I'll buy this one.
This is the Wheel of Fortune.
Yeah. This is the wheel. Now I'm going to go out. Let's see.
To December.
Now, I can't sell a 15 for much, but I can bring it down to the 13.
Sure, go for it.
38 cents.
Yeah.
Do we want, if I did the strangle around it, which I like to do the strangle around it. It gives us a little extra oomph. What do you think of that?
I don't mind. I actually like that better because it's not holding up that much capital.
That's why I don't like to start with your max size, because then once you get put the stock, I like to sell strangles around my stock.
Yeah, I do too.
Because just that call was like, meh.
Okay, so we also have some tweets coming in.
Okay. Let's take a look. Tweets coming in. It's here somewhere. Twitter. Got it. In earnings, here's Bob's today's potential earnings. TTD, I think that's Trade Desk.
Okay, where in Texas is Bob? And are we going to see him tomorrow?
I think Bob's near Dallas. I don't think it's close to Austin. But Bob, we would love to see you. Bob, if you're
love
around,
to see Bob. He's one of my favorites.
Iron, and we've had Iron before too. Oh, DraftKings. So
Yes.
DraftKings has an SMR. I have SMR. So this tomorrow could be a real doozy for me. If DraftKings, I'm not having a good week. So if SMR, DraftKings, I don't know. We'll see. We'll see how it goes.
It'll be fine. And then go. Blue Wackadoo comes in, but we have some that are coming in top down too.
Yeah.
And Blue Wackadoo, we will see you bright and early tomorrow. Doors open at 8. So I know people are going to try to get there early. Jenny and I won't even have our faces on until 8. So don't come early.
So you could see here his break even's around 67.20. So I think it doesn't look bad now because that's right. No. Because where are we? SPX, we're probably 67.30, 67.29. Yeah. So it's just going to take time, and hopefully we get a little bit of a bounce.
Yeah, and then hit top down. There you go.
Oh, my favorite movie. Thanks, Mikey. First, hope you have a great show tomorrow. Give Bet a hug for me. Jenny, now is the time you can do what all the cool kids are doing and short one VXM since it is at 2018 at the moment.
Come on, you want to. This is so funny. Hashtag peer pressure. I love it.
I know. Oh my gosh. Mikey.
I don't think she's going to do it. Look at her. She just yawned, Mikey. I don't think she's going to do it.
One VXM. Oh, BXM. There's the mini SIBO VIX. Look at that. Do we get in with Mikey? Should we do it?
I don't know how to put a stop loss in this, so I don't know.
Mikey, we're chicken. We are two chickens.
You know what? Do it, and then we'll close it at the end of the show.
You think so?
If we're either going to be out money or we're going to scalp it. Okay.
221. Mikey, you owe me. Next time I see you, this is raising my blood pressure right now. We're in. We did it.
Yeah, we're scalping futures. We're zinging futures. Okay, I'm publishing to file feed. Okay.
All right. Florida 7. Good luck with your travel itinerary. I feel for you. Oh, to Liz and everyone going in 3 different directions.
Yeah, it's going to be tricky.
Okay, so I was in West Palm Beach on the morning of September 11th, flying out to Nashville. I was literally at the gate waiting to board when they announced the terminal was closing. All flights canceled until further notice. So, there could be worse places than being stuck in West Palm Beach.
That's true, but still, it is still not fun to be stuck anywhere.
No. Do you remember? I was stuck. This was when our show was newer and we felt like we couldn't cancel the show.
Oh my God. And you drove for like 27 hours home in a snowstorm.
Yeah. Like my flight was canceled because there were snowstorms all over. And I said to my family, like, I can't miss the show.
What's wrong with us?
So we rented a car and drove like through a terrible, literally like 20 hours through a snowstorm to get home so I could do the show. You know
what though? That wasn't for the show. And I will tell you, this is how good of a friend you are. That was for me because we were so new that we didn't know how to do the show with anybody else yet. We weren't on-air personalities. We're not media trained, clearly. I mean, people that have been watching us for years know that. So, and it was nerve-wracking to be on camera. Very nerve-wracking in the beginning. Now it's like old hat, but that's why I understand why people get nervous. But you did that for me.
So you didn't have to do the show with the guest?
Yes. I don't think I was like, get your ass home. Maybe I was.
I can't believe that I was like, we're driving in this snowstorm home, renting a car instead of waiting a day for another flight. Yeah. But you're right. In the beginning, for like 3 months, we were nervous on air.
It was very nerve-wracking because we're floor traders. We didn't know how to, and that I think we failed to mention that because sometimes people come on and they're a little bit more nervous. Not any of our like the normal filler inners, but when like the people on the trading floor, they're very nervous to talk, even to walk by on camera.
Yeah, the only one who's not is Hollywood. He wants to come. He walks past our show every Tuesday and Wednesday.
Oh yeah. After he gets out of his tanning bed, he's so tan. Okay, let's see what Jack JT has to say.
Okay. Taking the 418 shekels from yesterday in Eli Lilly. So that's pretty good. Pretty good.
That is pretty good.
Yeah. Nice.
I like it, Jack. Okay, look at this. We're going to see Theta Buster.
Oh, good. See you in Austin. Also, go and do boating in Lady Bird Lake in the evening. Huh. Now we know what we can do after dinner tonight. At places, water is waist deep, so you can even get out of the boat. Okay, there's no way I'm getting into natural water in Texas.
We were at my house in Florida in a gated pool. And Jenny goes, look out for snakes and alligators to her daughter.
You just don't know. I've seen people in Texas with snakes in their pool.
I know, but it's just pretty funny. So yeah, I can't imagine me like, stop the boat. I'm going to get
Stop the boat. I'm going to get into it's only waist deep. I'm going to get into the water with all the snakes.
I'm going to get in right here. This is where I want to get in.
Never. I mean, here's the thing about Texas. Snakes, scorpions, there's a lot. I kind of like.
You remember when we were with Dylan Reddy? And by the way, Dylan and Ilya and Nick did a great job today on their segment. I really enjoyed it. But do you remember when we were in Texas with Dylan and there was the snake?
Yes, a snake right on the sidewalk. We were walking to a restaurant and the sidewalk was blocked by a giant snake. We had to, it was either like step over the snake or go another route.
We went another route. I don't think we didn't all like over it anyway.
No, I don't know what's more terrifying, a snake. What do you think is more terrifying, a snake or a scorpion?
I don't know.
And you had your Florida house for a while. Did you ever see anything around your Florida house?
No, never. I mean, like I said, it was gated. I mean, it was like a gated community that they did come and manicure there. But to your point, there was an alligator in Magic Kingdom, so.
Oh, I've seen tons of alligators. I've seen alligators, especially like Beach Club. We used to stay at Beach Club a lot, and in the water, we would see alligators all the time before they started really monitoring for the alligators.
Yeah.
And I've seen snakes. If you like the walk between Grand Floridian and Polynesian, I've seen plenty of snakes.
This has taken a turn. Let's get back into the market.
Anyway, the point is Theta Buster. There's no way I'm getting into the Lady Bird Lake.
Okay, so Theta Buster. They don't have a picture of him, do they?
No. You're gonna have, when you walk in, you're gonna have to tell us I'm Theta Buster because we don't know what.
And then we're gonna take a picture with you and we're gonna post it.
Yeah.
After we run it through the Hansen filter, not for you, Theta Buster, for us.
Jenny, you got to have diamond hands. Put it in GTC to lock in $100. If this goes south, I'll make you a cheesecake. All right, that's actually worth it, Mikey.
Yeah, except the problem with the cheesecake is I eat all of it. It was so good.
I don't know about that. You know what? Liz barely eats. Yesterday, I had all these snacks lined up on the airplane. She doesn't even eat them.
No, Jenny, here's the deal. There is two types of people in this world. I don't eat while I drink alcohol. You eat when you drink alcohol.
I had snacks. And I was passing it around. We were on the plane. We had a whole hockey team. We had the whole...
We did have a hockey team.
But the whole Winnipeg Moose hockey team on our flight.
They were professionals. Jenny thought they were college kids, and she's like, "Oh, what college are you from?" And he's like, "We're professionals."
I know. But okay, so professional hockey players, but like a step down from the NHL. So basically,
they're the farm team for the pros. So like at any time, one of them could be pulled up to their.
Yeah. So he's like, some of our guys play on they get pulled back and forth. Back and forth. So it'd be like our Blackhawks team in Rockford where like those guys are prepping to move to the Blackhawks, but they can go between the Rockford team and then the Blackhawks. So that was their equivalent. But they all, in my defense, they looked young.
They all looked young. They all looked really young, except for the medical man sitting next to us, who was an adult male.
The guy, like the older guy sitting in our row,
Yes.
he had on the Winnipeg Moose a hockey shirt on too.
But did you hear him talking to? Because all the kids, when I use kids loosely, because they were all young, we're kind of talking to the guy. Did you? They all talked like Canadians. It was amazing. Oh yeah, hey there. Like it was so cute. Whenever they would talk, I loved it. And they're so nice and polite.
I know. And but the guy next to us, he was like, I don't want to say he was our age, but he was much older than the rest of the kids. And Liz was like, "What position do you play?"
I did not.
I'm the medic. I'm the medic for the
I
team.
did not ask what position he plays. You got to give me some street cred. He was clearly younger than us, but for sure.
But too old to be on the Winnipeg Moose hockey
Okay,
team.
hold on. And I don't think he's watching because he didn't ask us what we did for a living. Not fit enough to be on ice skates. How about that?
And not fit enough to be on ice skates.
Not fit enough to be on ice skates. I feel like that's a fair representation, right?
Oh, that was funny. And honestly, it was nice having the whole hockey team on the flight. They were all very nice kids.
Yeah, they were great.
Mm-hmm.
They were great. Okay, Jenny, in our last 10 minutes before, oh my God, Spooks are down 82.
Ugh.
Let's look at,
look at this. Like Spooks down 1.2%. NASDAQ down almost 2%. Ugly. What? Okay.
Was this the jobs report? I'm actually I'm gonna lean in. I'm gonna actually ask Twitter because
look what's actually up today. Netflix.
What?
Netflix is green.
Huh.
Right?
Yeah, that's crazy.
We've got the 1085, 1075
jobs report. I wanted to take it to YouTube, but now I can't figure out how to turn us off. I wanted to ask Frank the Great. Why are we down?
I'm going to put in GTCs here. 50% for Nike. And then let me finish going through. I'm only in M. And let me get to Z to see if we have anything that's expiring tomorrow.
Oh my gosh, Netflix is up $2. I thought it was up more than that.
No. Oh no.
That's green.
$2. Just $2. Okay, so here's something interesting. If we're like, oh, well, market's down. The day we had Tim Knight on and we did the triple Q's gold pairs trade and we sold a share of triple Q's, we sold it at 605. So we're not even back to where we were when we put that pairs trade on. So so triple Q's, we sold it at 105. No, we sold at 105 or 605.
605. I think that's
605. Sorry.
Yeah.
605. And we're not even there yet. So that was like.
And what is gold?
We're only giving up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. 10 days.
What is gold doing right now? I can see it on the side. Down. GC down.
Down a little bit. Our pair has not been.
Small, and I'm okay keeping it on there. It's a small trade.
Okay, so SBET 15 days, nothing crazy. Starbucks 15 days. There's nothing that's expiring tomorrow.
We did our Starbucks yesterday, right?
What did QBTS do on earnings?
Oh, and IONQ, we can take a look at that kind of stuff.
Down 6%. And what did Hood do?
Hood's down a ton.
10%.
Yeah.
Oh, my poor little guy at UPS.
Yeah. I had one diagonal and I'm in protection mode with Hood. I don't want to give away my profits on the air. Do you know what I mean?
Yeah. No, I get it. I get it. I don't know.
Okay, so are we doing anything in DraftKings or SMH? Was it SMH tonight? Not SMH, SMR.
So I don't know what you have in DraftKings. I'm just long shares. At this level, I'm just long shares.
Me too. That's why I was in Snap. So what are we going to do in this account? Let's look to sell put.
Let's sell a put at least. 250 expected move. Well, let's not do the 1 day because we're not going to be here tomorrow. Well, let's just go to the 15 day.
Okay.
Right? Because we're not going to be here. So
yeah.
What do we want? Just the 26 put for 90 cents?
Yeah.
I mean, I keep waiting for the day that DraftKings can start turning a profit.
Well,
I was still negative.
I was surprised they weren't up more this morning when I heard the DraftKings news that that ESPN is taking them over Penn.
Well, look at the bar on this quick view. It looks like it might. So this chart, you see this little pop here. Maybe this that shows a much higher price than the chart I saw here.
That's what I'm saying. DraftKings was up a lot higher. My account, when I opened up my account, it was up a lot higher.
Okay, I don't see that here. What am I on? I'm on a 1-day, 10-year. I don't see that here.
Yeah, but you know what though? That chart might be pre-market.
Yeah, in the overview.
I know it was before 8:30 when I was like, my account looks great.
Yeah, because here in this overview, you see that spike over 30.
Mm-hmm. That makes more sense to me.
And again, here we've got earnings per share. Last one, -65. I just think they've been around so long. When are you going to start turning a profit?
Okay. Yeah.
Then sell put. We're going to sell the 26 put for 93 cents. Use 3.
You know what I decided to? I'm always going to have DraftKings in my account because it's kind of like my last name.
Oh yeah, Dear King, DraftKings.
D King, like right?
Funny. 10:48. I'm keeping an eye on time since we got a hard 10:55 stop.
We do have a hard 10:55 stop. Okay, so I'm glad you went through all of that to get it all done. Do you want to take a look at our FX positions in honor of our Glenn Gear?
We can. There's nothing good going on in there.
Oh, all right. Don't even open it up then.
So here, our positions, we had 3, we still have 3. The new one we put on is only down $5 since we put it on, and that is the Euro Great British Pound, and then we have still the dollar shekel. But let's take a look at some other dollar pairs. Let's see, Euro USD, what are these looking like? Here's the Euro USD. It's starting to get a little...
I just wanted to glance at our positions. I don't know that we need to put anything else on because I need hand holding and I need Glenn.
No, I mean, USD JPY, we don't have that on. Let's see what that looks like.
But we have 6J in.
Oh, yes, we do.
Yes.
We do.
So if you take a look at that, we have 6J in. And you know what's finally catching a little bit of a bid is that live cattle.
I mean, it's down.
I know, but we're green on the day, and that's all I can see I can only see colors right now. I can't see numbers.
I mean, live cattle. Oh, is this a spinning top? Is this green bar a spinning top? Looks like it's kind of.
We need like a bat line to Tim Knight.
Tim. Yeah, I don't know. Like if it gets built up and the bar gets bigger here, and then you got the line, I think that's a spinning top, and I don't know what that means.
I don't know what that means either.
And how? Oh, and what did he say about Robinhood when you asked him yesterday?
He said it reminded him of Rivian because it was just like off the races. I mean, when I look at that, no, granted, it's a bird's eye view, but I see a blip in the radar.
Yeah, and Rivian, which was up a lot yesterday, it's down today.
A little bit. I mean,
yeah.
So Rivian, we sold puts, got out of them, sold more puts.
But then didn't we get out of them again? Like I think we got out of that day. Yeah. QR.
Oh, we did 2 sets. 2. We double dipped in Rivian.
If I go to our activity in Rivian yesterday, we bought back the puts, we sold more puts, and then bought them back. We bought back the 14 puts in December for 67 cents. Now those 14 puts in December are 88 cents.
Oh.
I'll sell them again.
Oh.
Right? I'll get back in them, 90 cents for those 14 puts.
Yeah, sure, do it. And then I ask and I shall receive. Somebody answered my question on Twitter.
Oh, what? About what's going on? Was it the jobs report? What was the report?
No, do go. I thought it might have been the jobs report, but let's go give this person their due. So go top down.
OpenAI wants federal backstop for new investments. It's down because it looks like OpenAI is asking for a bailout.
Oh, that's pretty interesting.
Yeah. OpenAI says the company wants a federal guarantee to make it easier to finance massive investments in AI chips for data centers.
Okay.
Well, thank you for posting that.
Yeah, I appreciate that because I really had no idea. I mean, I know the first flip down was I thought Chris said that it was a bad jobs report. And it was Vecchio, and he's back, by the way.
Oh.
Chris Vecchio is back. I know you'd be so excited. I miss my Vecchio.
Yeah. Yeah, because well, I'll have to connect with him. I'll have to send him a message.
Yep. Yes, you will. It's so cute. Okay, now we said we were going to get out of it. Take me to the mini VIX futures.
Well, let's see where SPOOs are. We can tell by SPOOs down 1.1%, SPOOs down 75. I don't think we're going to get out of it yet.
I know. Just can we look at it?
We're up $14. Mikey, we got
Take me to lunch.
I can buy Liz one glass of wine.
I was going to say you can buy me a sub sandwich because I want to eat before I start drinking.
Hey, okay. So we thought we'd be nice and invite Tom to lunch with us. And he's not hungry yet,
I'm starving.
I'm hungry. You're hungry. And I want to go to the pool after lunch.
I say we just go eat at the pool and we'll just go meet with him later.
This is really going to cut into our pool time. So yeah. I don't know.
All right, close it. We said we'd close at the end. Thank you, Mike. We appreciate it.
For 2021, and I'll buy it back 2007.
Perfect.
2021. This is only if I buy it 2011, I'm only making $10. I want more than that.
I get you want more than that, but it's a
2007, and we got to end the show in 1 minute. We better hope it ticks 2007.
Just close it.
All right, I will. Fine. There's my 2007 bid right there. 2007.
Yep. Filled. Good.
Mikey, thanks. Thanks for the $14.
Hey, yeah. I mean, you say it like it's mad. We didn't lose 14.
All right, that's it. That's it for the show. If you're in Austin tomorrow, we will see you at Work by 11.
At Work by 11, doors open at 8. Everybody out there have a wonderful afternoon. Good luck with your earnings trades, Jenny. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow. We'll see you on Monday on air.
See you on Monday on air. See you tomorrow at Work by 11.
Stay tuned for the boys. They're live from the SIBO floor.
Oh my gosh. Yes. Live from the SIBO floor. Yay. All right.
Yeah.
Well, stay tuned. I can't wait for their show. Goodbye.
Bye.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty.
Mike, I'm here with Jamal, and you might notice a brand new background here.
Setting's a little bit different. We're here, baby. We're on the SIBO floor. What's happening?
Yeah, it's incredible. Energy's electric.
Yeah.
We got a nice market sell-off today. We got orders flying around like crazy. It's crazy. It's awesome.
It's super exciting, dude. Like, what's wild is that we're actually here on a day where the market really is moving down. Obviously, there's been all this talk. You and I were talking about it off air. It is a little wild that there seems to be, and this is how sentiment goes in the market, right? Like all of a sudden, everybody's saying, "Oh, is AI overvalued?" All this other whatever, and it's definitely clearly an AI-led sell-off because the Nasdaq just went down more than 2%. Spruce is only down 1% and change. So, but I hate to see market down, but I love it because look how wild it is in here. It's pretty busy in here. If you guys can tell, it's a lot of activity.
Yeah, we were here a couple weeks ago, and this is definitely a lot more action, a lot more orders going through the books. But E-minis down 80 points, Nasdaq down almost 500, completely reversing and more that rally we saw yesterday. Bitcoin retouching 100K, but yeah, I think when it comes to trading opportunities and opportunities from what's going on with the government shutdown and what have you, this is kind of that trader's market we've been looking for.
It's interesting you mentioned that the government shutdown because we did so many studies, we did so many things early on about the idea of the government shutdown not affecting the market, and honestly, it didn't. It really didn't. Markets just kept going higher. But this is where you talk about the wall of worry, right? Like I've been very adamant about the fact that there's literally no wall of worry more recently. It's starting to mount up. All of a sudden, is AI overblown? Are the fears overblown? All of a sudden, the government shutdown is starting to affect some stuff. You're hearing what's going on with airlines, which I'm glad I'm not flying anywhere. I don't know about you. Speaking of, obviously, Tom and Tony are doing the last show this weekend and at some point in Austin. But look, you're hearing about what's going on, and they're cutting back. That's going to have an effect on airlines. I don't see how it does.
Oh, yeah.
You know what
I mean, I got a personal email from the CEO of United this morning.
No kidding. I didn't know you guys were on a first name basis.
And he told me that, you know, they're going to start closing down flights, canceling flights, but luckily United's a hub at O'Hare, so it won't be affected at O'Hare, which is great.
Let me tell you something right now. If November, what's today? November 6th?
Yeah, that's right.
We're like 2 weeks. Is it 2 weeks till Thanksgiving?
3 weeks.
Seriously? 3 weeks? 3 weeks. 3 weeks is Thanksgiving. I don't imagine this is going to resolve itself in 3 weeks. That's going to be a serious problem.
No.
And if we go through Christmas like that, holy cow.
Yeah.
I mean, do we just buy puts on UAL now? I don't know.
I'm supposed to be flying international to Japan the day after Thanksgiving.
Oh my God.
Yeah. I might be taking a boat.
Yeah, you might be. You might be getting shipped over there. Not that there's any issues with shipping neither.
No. But yeah, why don't we pull up the platform and take a look at these markets here. We've got Ethereum, wheat, Bitcoin leading the charge, down 4%, 3%, 2% respectively. E-minis down over a percentage point. NASDAQ, like Jamal said, down 2%. Not much really to the upside. We've got some energies here.
Don't worry, nat gas is up.
Yeah. Always. Nat gas up over a point and a quarter. Heating oil, gasoline leading the way, up 1%. But yeah, there's only 3 products in the CME futures world that are up over 1 percentage point. Everything else, big to the downside, including crude oil too. Crude oil sub 60. We've been kind of playing that range here, trying to get in sub 60. I think this might be a time to get back in here.
Yeah, right,
we did see that liquidation down to 55-ish, but I kind of like biting on micro crude here below 60.
I know, right?
I think I'm gonna send that right now.
Isn't it funny how when you see something, you just start talking about it, you know what, this is actually a good idea, right? This is a good thing to do.
Yeah.
I'm with you.
We'll throw in a little order there, but I haven't done anything in this portfolio as of yet today, but we are, the CBX or the SPX floor is literally right behind us.
Yeah.
So a couple trade ideas for you in SPX coming up shortly. If you want to join us in the YouTube channel, of course, we're streaming live there. Just head over to the Tasty Live channel. You can pop in your trade ideas, questions along the right-hand side chat. Jamal's going to be checking those out in just a little bit. But I was just filled on that micro crude contract, 59.05. So
you got filled?
We'll see what we can get out of that. But yeah, awesome day here. Glad to be here. And yeah, should we pop over the slides, get some trade ideas?
Yeah, let's do it.
All right. It is November 6th, so we've got a couple trade ideas for you. Nice Thursday morning. And like I said, SPX literally right behind us. So I'm placing a couple trades here in SPX.
Yes.
First things first, we are of course down 80 points on the day, so I want to throw in this 0-day iron condor. I think these are the times where I think these can really work out, especially if we get a day like today and then some chop tomorrow. So this is my cookie cutter setup with a 0-day SPX iron condor. I should say 1 day leading into 0-day. So I'm throwing on the 66.90, 66.85 put spread, 5 points wide, just below 6,700, and then I'm throwing on the 6,800, 6,805 short call spread. As I always do, I collect $200, risk 300, kind of that chicken iron condor feel if we continue to crash into tomorrow, or if we rip higher. My risk is somewhat equal to my potential max profit here, but if we wake up tomorrow morning and we see a little bit of chop up, down 20, 30 points, that's going to be a non-event for this position, and I should be able to close it for $100 profit, 50% profit shortly after the open tomorrow morning. So just looking to play for this vol pop leading to a vol crush, see if we get it tomorrow on hopefully a calmer Friday, but we'll see. So yeah, keeping it small, and we've done this a handful of times. The setup is almost always the same, collecting 200, risking 300, and just going towards that expected move. If I want to skew it a little bit, this position, as you can see visually, is skewed a little bit to the upside. So just leaning into the potential that we might see a little bit of a recovery tomorrow, but if not, I've still got plenty of room to the downside as long as it's within the expected move here.
Nice, man, nice. All you got to do is just lean over and ask them to fill it for you. Fill it for you really.
Literally. So that's the first trade. So 1 day leading into tomorrow, 1 day to 0 day iron condor. You get a little bit more premium if you set these up before the morning. You could do something like this tomorrow morning and try and play for that vol crush from 8:30 Central to like 9:30, 10. This one though, you're going to be able to move it much wider out of the money because we still have three hours and change of trading session today, plus overnight risk, plus tomorrow morning. So that's the 0 day trade, or 1 day going to 0 day for SPX.
Now would you say do you, and obviously we're doing this, obviously real time for the show, but would you say this is your optimal time for like putting this on to get filled, or would you rather do this and later in the afternoon? Like, how do you look at it? Obviously this is a good day, it doesn't matter because vol is a little bit up in SPX, but just curious.
Yeah, I mean, it's a good question. I think really the trade-off is if I place it now, I still have that afternoon volatility. If we're down 80 and we stay down 80 for the rest of the day, this premium is not going to be there. Like, this could come in 50 cents into the close today if we just chop around where we're at now. So if you do place this closer to the close, you're going to have a different price where you can create symmetry around. But at the same time, you might have lower implied volatility to be working with. And for me, because we're seeing weakness in the markets today, I think setting this up, even if we continue to sell off, I would want to lean more bullish anyways, leading into tomorrow. But I would rather just capture the current implied volatility, capture a little bit more time value as well, and set those strikes wider. I'm covering basically a 100-point range in SPX for tomorrow. So doesn't directly answer your question, but I think if you want more room, then you need to place a trade that has more time to expiration. I would say.
I was just curious on like a regular day. Honestly, a day like today, I don't think it really matters much, like you said. But I'm just curious.
Regular day, like you said, if we look at SPX for the rest of the day, we have a little bit more elevated implied volatility. But sometimes we'll look at it at 11 a.m. and it'll be like 9 points, 10 points. In which case, it might not matter as much as long as that stays true to the realized volatility. So the next trade is a condor, a stupid, whatever you want to call it, short put financing the cost of a long call spread. So this one I'm going to the December monthly cycle, and kind of a similar idea, similar strikes as well, but like we just talked about, because I'm going to December, I can go another 100 points out to the downside. So this is the 6,600, 6,590 short put spread. And that is financing ultimately the entire cost, almost the entire cost of a 6,800, 6,805 long call spread. So I paid 30 cents for this. My max profit here is $470 to the upside. Max loss and max risk is that downside risk. So the 6,600, 6,590, if we go all the way through that spread and expires in the money, I paid 30 cents. That has $1,000 of risk, which is how we arrive at that 1030 max loss. But this 30-cent debit is very negligible, especially when you look at the raw value of these options. Look at the put side. Both of those options are basically 10K. The upside, we're looking at 13K. So the fact that I'm trading $13,000, $10,000 options for a 30-cent debit tells me, yes, I do have risk in between the strikes, but this is not really going to move at all. We'll have a couple $100 of risk to the downside if we start to sell off, but this can be a profitable trade well before expiration if we get that move to the upside where my short put spread is losing value, long call spread's gaining value. That long call spread won't gain more than, I would say, $250 to $300 if it goes in the money. But if we do get that move, we could be closing this thing for $100, $150 in the near term. So if we reverse this move that we're seeing today, if we see that reversal tomorrow, this will be a nice trade. I'll be able to take it off. But just want to set this up for a potential reversal. Maybe the market's calming and rallying into the end of the year in December. But those are the two SPX trades of the day. Both are filled. We'll be placing those on the Tasty follow page shortly, for sure.
I like the idea, mostly because of where the downside is. So 6,600, essentially, like I'm looking at just moving averages. And again, I always just look at simple moving averages. But 66.65 is kind of the lower end. I mean, essentially, about 60 handles from here. Think about 50 handles in a way, right? Because right now, I saw the same thing in ES futures. About 50 handles from here, 6,700. I think that's an area where we're going to be. I could see that happening. I don't know if it happens today, but I could see us going there. I mean, given the sort of nervousness in the market right now, and I think that's an area where we'll kind of sit. Maybe I don't know how much we breach that. If we breach below that, then clearly something else is wrong that we don't know about yet.
Yeah, totally hear you. What do you got for us?
Oh, something straight up simple. You know me, I'm kind of simple. Robinhood had earnings today. We were talking about it yesterday ahead of time. I did do calendar calls in here. They didn't work out, obviously, which is fine. It sounded like they had pretty good earnings. I think a lot of this nervousness is, well, again, it's the effect we've seen, right? And I know Robinhood is financial, but truth be told, it's a fintech. I mean, I think we know a little bit something about that. And so you're seeing some, it's up. It's been up near highs. You're seeing some fall here. Again, I think this is a similar effect we've seen in a lot of earnings. There's been, even if you have good earnings, unless you just say something that gets the people excited, a lot of these names have fallen on earnings, and this is no different. What I'm doing is, now that it's down, there's still a little bit of, IV, 24 IV. This thing also has just high implied volatility in general. Forget IV. It's in the 60s. And so I'm just selling upside here. I could always use a little bit more upside sale, a little bit short delta, even on a day like this. Figured I'd sell upside. A lot of times we'll see this. After a move to the downside, it takes a minute to get back up near towards highs. So that's exactly where I'm selling. I'm selling near towards highs. Selling the 165 call. I think I did it for 315, 87% pop. A little high on the buying power side, but I feel good about this. 87% pop. You don't get that often, and so selling $35 upside from where we sold it. It's actually it's still right there. It actually dipped to 128 for a little bit, but still around 130. So that's what it is.
I like it. Yeah, and this is another one where you could easily see a couple days of chop and get a big vol crush, and this could come in well before 21 days holding it, or even 1-2 weeks. So I love it.
And it's nice because it's Dece, right? And so it's in that 45-day window, which we all know and love so much.
Yeah. All right. Checking out the markets here. Catching a tiny bid. E-minis up or down 76, coming off the lows of 80 and change. Ultimately, what we're looking at in terms of hood, let's check this out.
That is a great question. Yeah, it's a great question about LeBron.
So I'm starting to realize, I've watched Liz and Jenny do this show from here before, and I see them turn around, they're seeing what they're talking about.
No, it's a good question though. Yeah. I would notice this last night.
Do you want to repeat the question in case people didn't hear it?
Yeah, LeBron James has not played a game this year, but the Lakers are 6-2, 7-2.
Yeah.
I mean, it's a legit question. Dude, Luka looks great.
Oh yeah.
He had 35 and 6 and 13 last night, or something like that. He looks great. Dude. Yeah. I was looking at, and Austin Reeves. Dude, I like his game anyway. He looks good.
He was sick last year too.
I mean, it's time. I think it's time for LeBron. I think it's time.
He might just sit out until playoffs, and then he's like, "Hey, I'm healthy now."
He'll be back for that mid-season thing.
The mid-season tournament. Yeah.
Anyway,
but yeah, hood down 12 points, down 8%. Big red bar here. And when you look at this implied volatility, 72%, you're well outside of the implied move here. Implied move 20 points, you're going 35 points the upside. So again, if you get an IV rank or an implied volatility crush here, IV ranks at 24, you can see this thing go significantly lower. If we look at hood.ivr, you can see we were sub-zero, shout out Mortal Kombat, beginning of October. So
I love it.
Yeah, you can totally see it. And then these SPX positions, if we look at what we got here, so the 1 day kind of leaning long, as you can see. I've got about 30-40 points to the downside before I'm tested, but plenty of room to the upside. So I'm clearly playing for a reversal here to the upside in SPX in that 1 day trade. And then the December trade, we're looking at just inside the expected move, selling that 6,600, 6,590 put spread, and ultimately just going for a reversal here. And again, this call spread right now, I think we could see it appreciate if we get in the money, but really the meat of this trade is from this put spread here. So just routed it for a small debit, see what happens.
As you're on SPX, I got to call this out real quick with the Broken Heart butterfly that we put on yesterday. We have the 6950, 6960, 6980. 7,000 is what we originally had. Got to call out my brother Mike, Polish Hammer. We were so busy here getting set up for the first time doing the show here. I didn't get a chance to look at positions that way, that much, but was able to roll down the 7,000 strike to the 69.90. So now it's literally essentially a call condor, if you will.
Yeah.
Right. And 10 points wide, and I got it on for credit. I mean, it's riskless. Literally, I don't have to do anything.
So what did you route this for initially for the credit?
Initially, I think it was $1.40.
Okay.
Yeah, $1.40, and
Cool.
I paid 90 cents to do that roll, that call, and now I have it on for 50-cent credit.
Beautiful.
And again, it's free. I mean, if you would see the actual, like with this. Yeah, there you go. It's more like that. Yeah, there you go.
You have something like this. You got the credit,
exactly.
40 cents. So
that's exactly it.
So it's just like this was a broken heart butterfly. The only difference between a broken wing butterfly and a broken heart is we're just separating the short options here. So a broken wing butterfly, you might have 2 of the 69.60s, and then you define the risk to the upside. But I like this trade. I like this adjustment because when you collect a credit and you're placing this to the upside, and then you get a washout to the downside of 1 percentage point and the E-minis. Like you said, you picked up $1.40, you paid 90 cents to bring in the risk.
Yep.
Now you have a symmetrical butterfly, or iron condor, whatever you want to look at it as, but 10 points of a call debit spread here offsets completely the intrinsic value risk of the 69.80, 69.90, and you have this on for a 40-cent credit since you collected $1.40 or $1.50 and paid 90 cents to make that adjustment. So this is literally what your risk profile is now.
Yep.
You make 40 cents to the downside, 40 cents all the way to the upside, but you've got this nice $1,000 profit tent here. And this is one of the ways that you can trade SPX is if you see a price extreme, like you had this, you put this on yesterday, and you were able to remove the risk. Today, you could throw one onto the downside, and if you get a reversal, you could do the same thing.
So that's what he was saying. He was like, why don't you put one on the downside? I was like, I'm going to wait a little bit. I think we got another 25 to 50 handles here in SPX today. That's just how I feel. And if I'm wrong, whatever. I think we'll win on our upside trades. And if I'm right, I'll get a better price fill. So I'm going to wait a little bit, but it is a good idea. I like the idea.
Yeah. This is what Nick does, and not always SPX, but he'll do this over and over and over, and then we call it like Mount Olympus by the time he's done, because he's just got every strike, and it's just like the risk graph looks like a mountain peak. But
the only difference now that I have the call condor and the broken heart, I can't sing to it. I can't sing, broken heart, something like that. I can't sing to it now.
But no, I like this as a downside hedge specifically because one of the big questions we get all the time is like, if I want to throw on a downside hedge in SPX or the Qs or whatever, when do I take it off? And if you're using a strategy like this, where on a day like today, you're throwing on a put broken wing butterfly or a broken heart butterfly, and then you have the ability to remove the risk, now you just have that hedge on for free. And it doesn't matter if it expires out of the money because you can still keep that small credit. But if you get closer to expiration, we start to move down towards that spread, it appreciates and you have it on for no buying power. That's another point we didn't talk about. You've released your buying power when you make that adjustment.
I got like $900 buying power back. Which was nice.
So yeah, downside might be something like this. If you did like 6410, 6400, 6380, just like a 10 by 20. And you kind of have a similar risk profile here, but basically the same idea applies. If you route this for $1.50 and then tomorrow you get a 40, 50 point upside move, you could bring in this 6380, bring it up to 6390, and you would create that same 10 point wide symmetrical butterfly. And as long as you're doing that for a debit less than $150, you have no risk in the trade. You free up the buying power. This buying power would be $850. You would free that up tomorrow if you got that reversal. Beautiful. Market's selling off a little bit more here, down 87, marking the low of the day.
I'm telling you, man, it has that feel. It does have that feel to it today. And we've obviously heard, I mean, it's always busy in here, but it's even busier on I mean, if we drop another 50, you think it's been loud now, you wait. it gets busy.
Yeah. If those platform numbers are flashing faster, that's when you know.
And not only them, I mean, the VIX is over that way. They'll start to get a little bit busy too if we get another, especially if we get into backwardation. They'll get super busy as well. They'll start to get more orders in, right? Because this is that time. Once we get above 20, right, things get a little hairy, as we know.
Yeah. So I was talking to Dylan yesterday about this on Overtime. He was asking like specifically what I'd be looking for in the volatility markets to maybe take my hands off the wheel and see how far we go to the downside. And we're kind of seeing a little bit of that today. But my answer was if we flatten out in the volatility curve, that is a sign to me that there could be more turbulence on the way. And yesterday we had a point of contango between the X, the Z, and the F contract. Now you can see here we're looking at 2020 in X, 2050 in Z, and 2150 in F. So the X and the Z contract have flattened out, which is interesting. But to your point, Jamal, if we go into backwardation where the X contract is a higher print than the Z, now we're dealing with true uncertainty in the markets. And I say this all the time, but you won't get a market washout, like a 10%, 15% washout, unless you're in backwardation. It's just not going to happen.
Right.
And the same is true to the upside. After the washout, once backwardation flips back to contango, that's when you shouldn't be surprised if you see a rally that starts to come back to normal levels or even highs. So yeah, we are flat. Uncertainty is real here. If we look at the VIX specifically, up 11%, and you can see the choppiness here. I mean, we got as high as almost 30 a couple days ago, dropped right back down to 15, 16. That was when the dip was instantly bought. But now we're seeing a little bit of two-sided action here, sitting at 20. But I want to see more of this. Like if I'm thinking we're getting those 150, 200 point moves back, I want to see more of the VIX in the 30s or higher. This was the April tariff craziness. We had a couple of blips, but it's really been a buy the dip market where you have this one-day blip, it gets erased halfway, and then we just crush. Same thing here in August, crushed immediately. Same in September, crushed immediately.
Yeah.
And a couple of weeks ago we had a little bit of elevation, but that was even crushed immediately. So it's like the only time where we've sustained a VIX in the 20s or 30s and above was COVID, when everyone was just chilling at home and everyone really that was like
up for a while, yeah.
Max uncertainty, at least in my trading lifetime, of like where do we go from here type feeling.
Yeah, I mean it's interesting. I mean, because again we are hanging out at some elevated levels right now. It's always a stair step, right? Like it stair steps a little bit and then boom, something happens. So I don't know if we're, again, you mentioned, like, look at August. You could see the stair step and then it's flattened. But a couple weeks ago, we had the stair step and we kind of stayed elevated. I think that's what I'm saying. Right now, we're in a very fascinating area because it is a stair step happening. We're hanging right now. Like, we're hanging to the downside. You can see we're kind of hanging around former bounce levels. If we get another 50 handles to the downside, I wouldn't be surprised. But I wouldn't be surprised if we get some positive news. We need some news at this point to sort of make us bounce, honestly.
Yeah.
Feels like.
Well, the government shut down, so good luck with that.
I know. It's a trip how all of a sudden, but again, it's starting to permeate, lasting this long, I think. I still don't believe it really. Initially, I really don't feel it's a big deal at all for the markets. But once you start lasting this long, you start affecting infrastructure. You start affecting, airlines. Who knows what else? I think then it could sink into the market at some point if it somehow.
I mean, this is one of the longest shutdowns we've had. And to your point, like you can shut down for a week or 2 or 3 weeks, and people can be okay. But once you have people that rely on these paychecks coming in, and it creates a bigger issue the longer we're shut down. I mean, this is where we're at, it feels like.
Speaking of paychecks, I didn't talk about this with you yesterday. I'm curious what you think. No, seriously, this whole YouTube and ESPN thing, you know about this?
Yeah.
YouTube TV and
it's an
ESPN.
absolute joke. I was ticked off on Monday Night Football.
You have YouTube TV?
Off.
Yeah, I know, right?
Yeah. Yeah. It's like, what are you doing?
I'm actually surprisingly, what do I want to say? I am happy that YouTube TV has chosen not to do it. Because again, right now, did you notice that it's $20 they're going to give you a credit? $20 credit. that they're going to give if it lasts for a month. So basically what that says to me, I mean, and it's like, let's just call it about $80 now for YouTube flat. So they're 1/4 of YouTube TV. I didn't really think about it like that, but that's huge. And they're holding the line because you know what's going to happen. They want another additional $10 if they put a deal, and then all of a sudden it's going to be $30 of a $90 situation, which is 1/3. They're going to go from 1/4 to 1/3.
Yeah.
I mean, that's probably eventually going to happen, but it's made me I love sports, dude. It's made me evaluate how much I'm willing to pay for it.
Yeah.
I mean, it really has. I don't know.
No, honestly,
I
mean,
you thought.
Well, I was ticked off. I had to download Fubo. And
which Disney owns, by the way, too.
Perfect.
Remember, they bought that. They bought that stake. That's what's so crazy. Like, this is actually affecting a lot of stocks we pay attention to.
Yeah. Well, I'm unfortunately handcuffed because I have NFL Ticket. So I have NFL Ticket through YouTube TV.
Oh.
So they checkmated
Wait, no, they gotta have an app though, right?
I mean, probably. Yeah.
NFL Ticket has to have an app.
Yeah, but this is one of those scenarios where I will not be resubscribing to YouTube TV. And I'll probably, well, the nice thing about Fubo, being in Chicago, is you get the Bulls and Blackhawks games, where you would have to subscribe to yet another subscription if you didn't have it. So the fact that Fubo gives you ESPN, Disney, and the Bulls and Blackhawks games, like that's enough for me to just make the switch. But yeah.
My wife showed me some charts last night about who's benefiting and who's not, and there are like Fubo, their registrations have gone way up. DirecTV registrations way up, right? Because they've always been about sports.
Yeah, of course.
This thing is really interesting, honestly. It really is. I think people should be paying more attention because, again, this is affecting the streaming, where streaming is going, how things are changing.
Yep.
I'm like super interested in it.
Yeah, I think from a regional standpoint, I think you will have a ton of people going away from YouTube TV in Chicago and going towards Fubo just because of the access to Bulls and Blackhawks games.
Yeah.
That was my first Bulls game that I watched, where they came back from the 24.
Yeah, I haven't
that was
seen
literally
any
the
of it.
first game I watched all season.
Against Philly, right? And Vooch hit the game winner, in the corner? Yeah.
Yep. Emini's chopping around here. Not too much of any movement. We've had a 10-point range since we've started the show here. Do we want to pop over to the YouTube chat, see if we got any people with some questions?
Yeah. I haven't seen as many. Actually, I haven't seen as many questions. Most of them marveling us being at SIBO, actually, and a lot of people seem to know the area. They're right. I saw somebody mention about the Federal Reserve Bank, which literally is right across the street.
Yep.
So we'll have them on the show at some point.
So I went to DePaul University and I walked by the Barnes & Noble, where you like walk through the Barnes & Noble to go up to DePaul.
Yeah.
And there's a Chipotle across the street. I went to school there 15 years ago. Chipotle's still there. All the other places around Chipotle.
You were there? I didn't realize you were there.
Oh yeah.
Yeah, and 15 years ago I was here.
Yeah.
That's funny.
That is funny. But I sent a picture to my friends that went to DePaul with me, and they're like, "Are you going to Chipotle?" And I'm like, "You bet your ass I'm going to Chipotle after this." But yeah. Speaking of Chipotle, can't catch a bid.
Cannot.
Multi-year lows here. Let's look at a monthly chart. Split adjusted here.
It's funny. Everybody's talking about a lot of the buildings around here. This is awesome. I mean, the Rookery building is actually one of my favorite buildings.
Yeah.
It's actually right over there. Yeah, you're right.
Well, Chicken Hut's right around here too.
Yes, it is.
The TP special.
Yep.
That was always funny when TP would come into the office. He would get to request what lunch we had, and it was always Chicken Hut. And like half the office despised Chicken Hut because it was like salsa,
I never like it. Yeah,
half a chicken.
It's not really that great, but
I mean it's fine.
Honestly, there's not really many trading questions today. These guys are just enamored with us being on the floor, which is nice. Appreciate you guys.
Yeah,
man.
Appreciate it. It's fun. But yeah, do you have any position on Chipotle? I feel like this is one of those.
It's a dog, no.
Yeah, I mean, I tried to buy the dip. Let's see.
I feel like this is one of those situations where because it's been nothing but bad news ever since they split. And that's unusual. Usually when you split, it's usually good. Ever since they split, it's been nothing but bad news. I mean, you can see it in the chart.
Yeah, this is a monthly 20-year chart. We are back at 2023.
So there you go, folks. Splitting is not always good.
Yeah. 2023 lows here. Hasn't traded sub 30 since March of 2023. But yeah, I mean, this is a pretty disastrous chart here.
So outside of sentiment, I gotta say, outside of just overall sentiment, I gotta say, once again, I'm almost a little bit confused, opposite of yesterday, because today we got markets down, we got gold down, we got Bitcoin. Those three have seen. I mean, if you're paying attention for the last 4 sessions, they're trading the same, and the dollar is doing different things. On Monday, was it, or Tuesday, the dollar was up, right, and they were down. And then yesterday, the dollar was down and they were up. And now today, the dollar's down and they're down. I don't know what the heck's going on. It's hard to find a trend, but the only trend you can see is that SPUs and gold and Bitcoin are trading in the same direction over the last couple of sessions.
Yeah, good call out with gold. I mean, it seems to be finding this chop range around 4,000. But to your point, if you look at DXY, we had 1, 2, 3, 4, 5, 6 trading sessions in a row, making higher highs from the open, and then today we get this washout. I did put on a couple of Tasty FX positions yesterday with Glenn, and if we take a look here, somehow I'm losing on both of the US dollar positions, which feels impossible. Because I'm long the dollar franc and I'm short the Aussie dollar, or I'm long the Aussie dollar, so I'm short this denominator by proxy here. How is that possible? Well, if you have a rallying franc and a selling Aussie.
I mean, is the Aussie down? Is the Aussie somehow down?
Must be.
It must be, right? Look, I don't know.
Yeah, it's down 0.5%.
There you go. Yeah.
Perfect. So we'll wait on that. We'll see if we get a little movement in my favor. But
see, it is for this reason that I have the opposite positions. Remember I said yesterday, I'm actually short dollar in the Tasty FX count, but I just put on that long dollar via the short the short delta, long put spread in the euro for that reason. Because these currencies, man, they're just different.
Yeah. I'm gonna send Glenn an email after this.
Yeah.
Be like, what's happening here?
That's right, Glenn. Yeah. What's going on?
E-mini's taken a bouncing off the lows a little bit here. Over the last 5 minutes or so, we've had a 15-point rally from the lows. Bitcoin catching a bit as well. If we look at the 1-minute chart, NASDAQ trying to rally, having a hard time. But yeah.
Oh, we got a little question here. Somebody's asking me about Palantir. Call calendar spreads here on Palantir. I like the 1226, 190, and selling next week's. I don't blame you. I mean, typically we don't look at weeklies outside of earnings, but I feel like Palantir would probably be one of those that actually has. They're looking at basically the end of the year, 1226 weeklies, buying those and then selling. They're looking at the 190 strike. I like that. I mean, I don't blame you.
Long January?
Well, they're looking at long D's, that D's 26 weekly. But yeah, I would probably do long January. I'd probably do just long Jan, short D's, right? I mean, why not?
Yeah, I mean, so these calendars, like especially into a big sell-off like this, I'm just looking to capture somewhere in between this range.
Yeah.
So for my strike selection, I would go either 190 or 200.
I would do 200 for sure.
Yeah, I mean 200, you definitely have the most upside profit potential if you get that reversal.
Yeah.
190 just brings you back to where we were yesterday. But let's take a look here. So if we do the 200, the D's is trading for $600. The Jan is trading for $9, so that's a $300 calendar if you're long Jan, short D's. Is there enough premium to go to Nove? Maybe. So you could do something like this, like long D's, short Nove.
Yeah.
This will be a faster moving trade because you only have 2 weeks in Nove. So if it takes you 2 weeks to get back up to 190, this option expires worthless. If you go long Jan, short D's, you won't have as much profit potential because D's has obviously a much longer time frame. But Nove is trading for $2, and
which, quite honestly, that's pretty big, to be honest.
It's pretty good, yeah.
That Nove 200 with 15 days to go, trading $2. That's probably almost a better trade. And you can just hold that one until it probably likely expires, and then you can eventually just roll into the short upside Ds.
Yeah, and I think the fact that we're seeing such a big move to the downside today in Palantir makes me lean a little bit more on the aggressive front where we can sell NOV, buy DEES. But yeah, if we just look at this analysis here, let's throw up the curve analysis. So this is a risk profile for just today, not adjusting anything. If we go to, let's go to next Friday. So November 14th, next Friday. And then let's crush implied volatility a little bit here. Let's do 5% here. Let's do a couple percent here. So yeah, you're looking at, if you get a slight rally back to 190, you're looking at a $300 profit potential here. And this is all because your 200 is going to have a strong decay. And of course, if you get closer to November 21st, this option is going to be a lot less sensitive to directional movements because it's going to be 0 at the end of this day. So let's put this in our back pocket. If we go to long Jan, short DEES, same strikes here. You're collecting a little bit more from a ratio standpoint. You're collecting 6, paying 960, but like we're talking about, you don't have as much profit potential to the upside. If you get a rally to 190, you're looking at $200, and that's because your short call in December will appreciate against you a lot faster than the NOV will. So
there's a lot more volatility value to it.
Yeah, but you have a lot wider range to be profitable here, because if you look at the cost of this option by itself, $1,000, but you're only paying $350 for the whole package, that's where you get the width of profit potential. The December NOV is going to be a little bit more narrow because you're not reducing cost basis as much. Here you're reducing it by 60%. The previous trade we were looking at, you're reducing it by 30%. Which one would you do? I'll do the other, and so we can compare and contrast.
You know what? I would.
Or would you do none?
No, I definitely would. I would probably do. You know, given where stock is right now, given the type of move that it can have, you obviously see it's moving down $11. We've seen it move up big. I would probably do the Jan. I would do some 200 strike Jan NOVs.
Okay.
And then if I really believe in it, I'd do some 215 strikes Jan DEES, right? So you can layer into these, and that way, the further upside I go, if you really believe that Palantir is going to bounce back to 220 or whatever it might have been, I would do those. I mean, again, that's $50 away, so I would give that a little bit more time.
Yeah.
Essentially, right? Forget options. Think about stock. How quickly could this bounce back up to 200? In that case, I'd probably do the Jan NOV, right? How quickly could it bounce back to, I don't know if it ever got to 220 or 250, but if I'm using those strikes, then I would go Jan DEES, right? So that's kind of how I would do it.
Fair. I'm gonna do the DEES NOV 200.
I gotta look and see if I have any on. Do I still have some on?
I'll do the DEES NOV. Try and capture this really aggressive theta decay in the 15-day.
Yeah, I like that too, actually.
We'll do it for 410. Instantly filled.
Right now
oh God.
I have a 230, but it's Jan DEES.
Okay.
For the exact reason I described.
Yeah, but really, plan is if we get a reversal of this move tomorrow, even if it's not this dramatic, if we get a 6-7 point move tomorrow, this trade will probably be a $150, $200 winner.
Mm-hmm.
And you can see this here. If you get a 10-point rally, so just looking at what the 190 is trading for about $9. This is trading for $6. So let's call it $300 here, and then in November, the same assessment, you're looking at, let's say, $150. So yeah, $150 winner if you get a reversal of this move tomorrow.
So we go with the Jan DEES, that what you did?
I went DEES NOV.
You went DEES NOV.
But yeah, if you want to do Jan DEES, then we can compare the two P&Ls.
I'll do the Jan DEES for $350.
Cool.
Let's see. Come on, give me a fill. Come on.
Give him a fill.
Somebody had a question on URA. URA, any thoughts on URA? Would it be a good time to take a long position? I'm short strangling here, personally. I think this vol's a little high.
Yeah, I mean, uranium ETF, if you are long-term or even like mid-term bullish on it, then yeah, you're seeing a big price reduction here. We hit a high of 60, sitting at 47. So yeah, I think when it comes to products like this, you could do something a little different. I mean, you could go just straight up calendar route. It would be a very cheap calendar, and I can tell you that already just because you've got 66% IV and NOV, 61% IV and DEES. But if you just look at this implied move here, $5 and change, $4 and change for November, $7 and change for December, and you have 3 times the amount of time here. So if you were to multiply 450 by 3, you're looking at 1350, and that's clearly not reflected in the 750 move we're seeing in DEES.
Yeah.
So you have way more implied volatility in NOV relative to DEES. So long way of saying this is going to be a really cheap diagonal spread and a cheap calendar spread as well. Let's just look at same assessment here. Like, let's look at the 55. Let's try and just cut this in half from the high to where we are now. Let's try and get back to 55. That's going to be long DEES, short NOV. So yeah, you can throw this on for $1. Paying $1.60, selling this for 45 cents. I would rather do a little bit more meat on this thing and get closer to the current price. So long the 50 call in DEES, short the 55 in NOV.
Yeah.
This is more my style here, especially with the heightened implied volatility in NOV.
Yeah.
And yeah, I mean, you could do the same thing Jan DEES if you wanted to. Buy the Jan for $3 and change, sell the 55 in DEES for $1.30. So either way you cut it, it's $2 debit for a 5-point wide diagonal spread. The Jan DEES is more conservative, so I think I might go this route here.
That's even better, actually.
So yeah, we'll throw that on. We'll get long. We'll buy the dippy do here. Let's see what you filled at. $1.95. The low price of $1.95.
Immediate. We gotta have it. Ma, we want the meatloaf now.
E-minis trying to get into the 60 handle. Down 60. Catching a bit.
Got a wait, what? I have a long Amazon 250 as a result of the calendar trade. Okay, so they're long a DEES 250 call. Any advice on when to sell? That's all you got? It's just a 250 call? Where's Amazon right now?
244.
244. I mean, wow. I hate telling people when to close out calls. It's hard.
So what's the?
I think they had a calendar. I think they had a 250 calendar. Now they just got the long.
Okay.
Long DEES. I mean,
so they probably had like.
Yeah.
The
probably.
1 day.
I mean, personally, I probably would have closed out of it already yesterday, probably, just because. Why not? Because you just never know when you're going to get days like this.
Yeah.
But I am not going to be Monday morning quarterback for you, like some people have been for us today. I'm not going to.
Yeah.
It's totally your call, but I mean, you just got to understand your risk, right? Like, is this something that you're holding against other positions here? Are you short some other Mag 7s, or are you just literally long an Amazon call? I mean, again, understand your risk right now. I don't know what the rest of the day looks like. Personally, I think we fall, but that's just how I feel. Again, we've already bounced some. I think this is a head fake. I think we do fall.
I think for this position, especially if you had, I'd be curious to see what the total debit is on the position. I think that is really the driving factor here, because if you have this call on for a debit of like $500, let's say, and you're up $300, maybe you take it off and you restructure the position. But if you have this on for $500, you could sell the 255 in NOV against it, pick up another $300, you reduce your basis down to $2 and change, and you leg into a 5-point wide diagonal with minimal risk, and you'll still benefit to the upside if you get a reversal. So really, if you're long DEES, the only adjustment I would make is selling something in NOV. I don't like verticalizing it. I think you just take the trade off if you're just going to turn a vertical spread.
Yeah.
Especially if it's a profitable trade. But if you're trying to hedge, I don't mind selling a 15-day into a move like this, where you're getting a little bit of a boost in implied volatility. This option lost $2 from yesterday, but I mean, you still are in a decent position as long as you have a debit that is less than $500 overall on the position.
Yeah, I mean,
if you want to keep it on.
a long $8 call option in the 45-day window is, it's a little risky.
Yeah.
I use that word lightly because it's really not risky, but it's risky. I mean, that's $800 just, sitting there.
But yeah, if you can let us know your debit right now, we can take a look. But as you can see, the current price, if you get into like $6, you have a narrow profit range. But if your debit is only like $350, it's a totally different trade. So let us know what the debit is.
Somebody got a question on Celsius, CELH. Has it gone too far here?
Jesus.
I mean, they only just have the energy drinks, right? Like, that's it? Is that their only revenue stream? Is there something else I don't know about?
I believe so. Well, they had that mess up, the flub with the Celsius drinks that didn't have the black top, and they were labeled as Celsius, but it was actually High Noon. It was something like that.
Really? No, I didn't know about this.
If you look it up, it's actually hilarious. Well, hilarious to me because I wasn't getting drunk at work trying to get an energy drink. But yeah, it was something like the black top on the Celsius. They like mislabeled it, and it was actually a seltzer, a vodka seltzer. Yeah. So a different kind of buzz at work if you're trying to chug that. But yeah, this is a big.
I've got enough of these already. Names that got rocked on earnings that I'm selling. I mean, CarMax is one of them. That's a dog today. DraftKings is another, which bounced today. I got FI. I don't need another, but I could see why you would want to sell a put in here, and it's not that expensive neither.
Yeah, I mean, this is a big washout. I mean, for me, this is one of these where if you want to sell a put, you have to be willing to take the shares here, because this premium. So what I'm thinking is like this premium here is reflective of a 6-point move right now. We're seeing a 16-point move today from earnings. So this implied volatility isn't really high enough for me to want to take undefined risk. But if you are trying to take 100 shares at a lower basis, then sure, I think you could do something like this. But for me, I think if I'm placing an upside trade, I'd rather do something like diagonal spread, where I'm buying the 45 in Dees, selling the 50 in Nove. For a $200 debit, you can make a couple $100. And this is another thing, like the max profit on this trade, a 5-point wide diagonal with a 250 debit, is basically $200, we'll call it. If you are selling a put in Dees, your max profit is $200 with all the downside risk. Like this thing could be down another 15 points tomorrow, you just don't know.
Yeah.
So when we have these big liquidity washouts, I prefer to keep it defined risk. And yes, implied volatility is a little bit elevated here, but that's why you offset it with a short option. Like if you buy Jan 45, you can sell D's 50, same story. So I would much rather do a diagonal spread where my risk is defined. I'm still taking advantage of the near-term implied volatility that's still a little bit elevated, and I'm inventorying delta in a later cycle. So I would do something like this. And you know what? Maybe I just will. Long Jan, short D's. 50 strike is right here. We've sold off here, but if we get a reversal to 45, 46, 47, this could be a $100 winner tomorrow. And this is a really small trade, so I'll dig in. We'll get in.
Yeah, and that's why I mentioned Pfizer, because that's exactly it. Like that's one where it fell on earnings. It's still kind of hanging down the lows here. And I don't know what these guys, something's going on behind us.
Craziness.
Yeah, craziness is what it is. Is what it is where we're here. I mentioned Pfizer because that's been one of those names too. Like it's dipped below, it's dipped down low, and it's kind of hung out there, still hanging out at the bottoms here. I mean, eventually it's going to find the bottom and probably bounce back. But you know, to Mikey's point, you got to be willing to take those shares if you're going to sell that put. At least be aware of that.
Yeah, speaking of DraftKings, I saw some news hit the tape this morning that ESPN and Penn got rid of their relationship, and ESPN is now partnering with DraftKings. And it's interesting because the Penn-ESPN relationship still had like 6 or 7 years on the deal. and they were just like, nope, we got to move immediately. So
what
that's
was that
interesting.
about? What
I don't know.
Think? I don't know neither.
I didn't actually read the article. I just read that line. But yeah, I mean, DraftKings sitting at lows.
You know, ESPN is almost. ESPN is, in a way, and this might be a bad analogy, but they're almost like OpenAI in a way. Like they make all these moves, but they're not. They're owned by Disney. But they're like the big engine for them in a way. They become that.
Yeah.
It's kind of interesting.
Yeah. But yeah, DraftKings sitting at 28.
Yeah.
Crazy.
Well, it needs to go higher. I still have a couple of short puts in here, the 32 and the 35. Come on, keep going.
Come on. A couple minutes left here.
Yeah.
Do we have any other last minute questions we can try and tackle?
Let's see. Somebody, I guess this ACHR earnings, certainly not one that I trade.
Archer Aviation?
Yeah, I don't know. You can do a quick analysis on that. Someone's got a question about it. There's two questions, actually. I know two other ones that might be better than ACHR. It's not one I've ever traded, but this is another low dollar one, right? You either buy the shares, whatever. There's a question about a Google broken wing butterfly or diagonal to the downside.
Yeah, Google up $1 somehow.
And a question about cattle once again. So it's dealer's choice. You choose.
Yeah, let's do Google.
With the short time we got left here.
Yeah, what do we got in Google?
Yeah, they're just asking about no specific strikes. They're just wondering if it's a good idea to do a Google broken wing butterfly or diagonal to the downside.
To the downside.
Yeah, it's surprising strength in here today, huh? I didn't realize that. Wow.
Yeah, this is 36% implied volatility, pretty low, all things considered.
This thing hasn't even sniffed negativity today.
Yeah, I mean, like these are in this kind of market, I think I would stick to defined risk, diagonals. Broken wing butterfly is possible. I think the problem with a broken wing butterfly in Google specifically is you're dealing with 36% implied volatility, so it's just going to be really hard to make this work outside of like a 5x10. So like if we look at this, I can only do a 280, 275, 265 in December for $1. Like I can't do this wider because it's just not going to set up well. So like a 280, 270, 250, you pick up 50 cents, but the issue you run into is, like you did with your trade, you're not collecting enough credit here to where if Google rips higher, you won't be able to move this 250 to 260 for a debit less than 40 cents.
Yeah.
So you're just going to have this risk on unless you convert it to a debit trade. So any product that's under 50% IV, I really lean more towards diagonal and calendar spreads because you're dealing with super low implied volatility relative to the stock price. Like you can buy these options for $1,000. This is a $300 stock. So I think to the downside, a 280, if you're going D-Snove, 280, 275 for $6 or 280, 270 for $7. Like this is more my wheelhouse. You could go calendar spread too for less than $500 and just mess with these strikes. But that's a shorter term one that's on the table. If you want to be more conservative, you could do something like long Jan, short D's, and that will bring your basis down a little bit. So just depends how much risk you want to take, but yeah, I definitely like the diagonal or calendar spreads a little bit better than the broken wing butterfly here just because of the low IV.
Nice.
And then yeah, ACHR, $9 stock, not much to do here. I think you buy the shares if you're playing it to the upside, or you can buy call options. Like these $9 stocks, like this, there's no reason to get cute here.
No.
When you can buy a Jan 2027 option for $200.
It's just way cheaper.
Yeah.
Man, I mean, what a great time. What a great day to have a show from the SIBO floor. It's been awesome. I mean, thanks to our partners at SIBO. This has been great.
Totally.
It's been a homecoming of sort for me. It's been a great first day to you. What are your thoughts here as we round out the show?
Energy's electric. Love it. I think we got lucky with a little bit of market action here to the downside, a little turbulence. We'll see how it is when the markets are calm. Maybe there'll be people behind us watching the show, seeing what we're talking about. But yeah, I think going forward, we're going to be trading SPX a lot on this show. I think it makes a lot of sense, and a lot of people out there are trading SPX 0 days anyways. So we'll continue the SPX theme for sure. But yeah, it's been a pleasure. Thank you so much. Thank you guys at SIBO. But yeah, we'll pass it along to the next talent at Tasty Live. If you want to join us, we'll be back tomorrow. Nick and I are doing the morning show tomorrow morning, so tune in for that. But yeah, thanks so much for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. But stay tuned, we got plenty more content coming your way on Tasty Live on the YouTube channel as well as the website. And we will see you next time.
Peace.
Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Scammed it, making right off like a bandit. I know what I know, it's time that I go, 'cause baby, your love is too good. Baby, your love is too good. helping me through it. Baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it. You're helping me through it. Baby, your love is too good. 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 Baby, your love is too good.
What's going on, everybody, and welcome back to Risk and Reward. Today's Thursday. Vol is picking up another volatile day in the market, but we'll get into all that. We got a couple trade ideas for you today, so we'll get your thoughts, get your opinions, see if we want to put any of these on, and we'll do the same ourselves. How are we doing today, guys?
Doing good. I'll tell you what, we got wonderful lumbar support on the chairs in this office. That's something that I'm very grateful to our wonderful management team for. But it's got me in pretty good spirits today. Still can't do a lot of twisting or bending.
Yeah, how you feeling today, brother?
I can do some sitting and standing.
Yeah,
so
yeah.
that's really all you can ask for.
The back pains is no joke. How you feeling, for real?
It's I'm doing fine. Really, it's
just little tweaks, you know. It's never the.
Well, yeah, I get little tweaks all the time. This seems a little bit more major, but I'm optimistic that this is not going to require any extensive, medical care outside of what I can do for myself at home. So
how bad can it get?
Yeah, exactly. How bad can it get? It's just your back. So yeah, we'll see. But feeling good so far today. Market not treating me super well. I do believe I'm going to say that we may be being proven otherwise right now. I've kind of began my rotation out of just being deviously long throughout the course of this morning. I've made a few exits on positions that were, I guess broadly just anything I didn't think really had a competitive chance to ever be profitable, but it was mainly long positions which moved against me right off open. If we were still in a bull market, I would have been more inclined to keep them open and see the course, but because we seem to be stagnating a little bit market-wide, I've just been looking through for some of those less redeemable spots and making exits. And then, should things get too much worse, it would start looking into anything that's break-even or just slightly red that is long delta and making exits. But just been reining some capital back in today and opened a new short in a firm.
Nice, Affirm. Extremely popular stock, I think, back in 2020, 2021. That thing's still running. I think I'd seen you. What are you doing over there in Affirm right now, actually?
I just took a naked put. I'm just long one naked put. I came across the information this morning that Affirm is currently trading at 527 times their PE. And while I go on this soapbox all the time with Palantir and how far ahead of their PE that they're trading, I understand the value proposition with Palantir. Like, I think that there is justification for how far ahead of their PE or of their actual fundamentals Palantir is trading. But Affirm, though? I mean, Affirm, because Palantir is 587, and we're talking...
Affirm is buy now, pay later, something along those lines.
Yeah, it's a buy now, pay later, yes. Affirm, Klarna, Afterpay are the three big ones in this industry, and Klarna is publicly tradable as well.
Right.
But yeah, we're talking about Palantir has a 587 PE, and that's a lot. But we're talking about this speculative company that could be the AI company of the future that has military and civilian and outer space applications. Like, there's a lot of excitement. I can understand that for Palantir a little bit more. Affirm, though? Affirm? We're talking about practice?
Right,
it's true.
Practice?
I can't fathom Affirm. Thank you, studio audience. tastylive is filmed in front of a live studio audience. But yeah, I just can't get there on Affirm. It doesn't really make any sense to me. I don't understand why anyone would be that speculative about this stock. And if anything, I thought Affirm was going to fail anyway. I think that these BNPL services are going to blow up. I don't know which one of them it will be, but I think one of these three BNPL services is going to go belly up in the next 18 months. And so I'm willing to take the chance that will be Affirm. The credit reporting environment is shifting in ways that are bearish for these companies. Makes no sense in the world to me. So once I saw that valuation, I had a big short moment sitting at my desk this morning and had to get involved. So I have a 30 put for January of 2027, which I posted on the follow feed. Additionally, not posted on the follow feed, I have a 35 put for June 18th of 2026. So we're looking for some downside action on Affirm, and that could either be the market just adjusting to not have a forward PE over 500 for a buy now, pay later company, or it could be that a firm has some kind of major issue with repayments and, creators for one reason or another. But really, really like this trade. I'm super bearish now on this company.
Yeah, we'll take a look at a firm here in a little bit after we hop in the platform. I know it's another one that's going to be pretty volatile, so we'll take a look at it. What's going on, Greg? Big deal. Jared. We are actually going to get into a little bit of PLTR today. We got a couple trade ideas. So we got a firm today. Gus had gone on a firm trade. Check out his socials if you want to see more details about that. And then he gives a nice description down in the follow trader page. So if you want to get updated on that, you just join the live. You can get updated through there on what we've been putting on. With that being said, we can go ahead and pull up some of the slides. We got a couple more trade ideas. And we can go ahead and just jump into the first slide, jump into the first trade idea. We got two. Let's see which one we favor a little bit more, but good old Rivian, right? I know we were just talking about this one the other day.
Love it.
Still trading within that range,
Immediately
right?
adore this trade.
You said what? You're not biting the bait this time. You said, right?
I'm not taking the bait. This stock, it does this every time, every single time, once a month. Rivian is like, oh, we have this great thing happening. Let's go test 16. Let's go test 17. And then it comes right back down. I've had this position open for 6 months. It's burning a hole in my pocket. Yes, I'm annoyed with Rivian. Love this trade immediately.
Love it. And I think you'll love it even more because we've sold off a little bit more on the day. So vol has expanded even more and positioning us a little bit more into the middle of that range from those highs and lows that you were kind of talking about there. So we got a strangle. We're going to be able to collect 4 and some change. We'll get into the details of what that looks like, but 4 and some change. That'll bring our break evens out pretty wide past those highs. So I think a strangle is something worth looking at over here, especially been down 6% on the day. IVR sitting about just over 30 right now. Something to look at. We can jump to the next slide. We got more details about Rivian right here.
Yeah, amazing. I have this big mental block in my brain where I don't ever consider neutrality, which is a big problem for me, especially as an options trader. Like it doesn't even...
I'm sure you would have loved that on your Rivian, right?
Oh yeah, I sit here. I mean, that's what's making me have this thought. I've sat here for the last 3 months.
Like you have to choose direction.
Yeah, and once a month I come on here and complain about how I have these Rivian longs and it moves and it channels, and never once in any of those passionate soapboxes has it crossed my mind, why don't I just get neutral on this thing? And that's a big problem that I've identified for myself in general. So
there we go. He's quick with it today.
Apt noise.
Based.
But yeah, based noise selection. But yeah, remember guys, if you find yourself in the camp, if what I'm saying here is resonating with you, remember that neutrality is a thing that you are allowed to do. You don't have to be directional all the time.
And to that point,
I know I'm preaching to the choir here. I think I'm in the minority in this regard, but just saying.
I don't know if I would say that, but I will say being able to sell these strangles, undefined risk is kind of nice. A little bit juicier, get more credit. You're not buying that outer wing too. Something I remember a little bit more too is if it's a cheaper underlying, right? We can take advantage of those strangle opportunities and undefined risk opportunities a little bit more. It's nice to get some extra premium on order entry.
Absolutely. And Rivian, and I think Snapchat also comes to mind, are like the perfect stocks.
Snap. I hate Snap.
But they're the perfect stocks where they move a lot, but they never move. Is the situation.
Great point. I think that's why I get frustrated with Snap because they move, but they never move.
Yeah, they move a lot, but they never move. I don't. There may be a better way to classify those, but that's kind of how I class Rivian and Snapchat. They take these big swings within their range, but actually in the macro, they're never really moving outside of this range.
Yeah, it's like we're putting in a lot of work, but we're really getting nowhere.
Yeah,
they're fooling us right now.
How many times is Rivian going to go 15 to 16 before they decide to go to 17 once? I mean, what are we doing?
Spinning our wheels over here. We got a couple extra details on Rivian over here. Just the whole electric vehicle sector as a whole. As the EV tax credits fade and regulatory sales shrink, can Rivian's future growth via software services and new models like the R2 offset these headwinds? One thing that I love me a good piece of software. It kind of reminds me back to like the metaverse right now, right? We got the hardware, but sometimes we kind of forget to think about the development of the software on the inside, and now that has a huge, that's a huge reason for the success of the overall product. So I'm actually curious to see how AI is going to get integrated into some of these services, right? Like we've been talking about Rivian for some time now. They're not new into the EV space, but how on the inside are they adjusting to incorporate a lot of these elements of AI? I'll be curious about whenever they have.
Yeah, and I just fact checked myself before I shared this, but Rivian does partner with NVIDIA for the chips that go into their vehicles. Okay. So as far as AI applications go, they're in the right place.
That's a good detail to pick up though, right? Because with all the news coming out on NVIDIA, maybe if you're a shareholder or you're positioned, however you're positioned in Rivian, maybe you want to keep that in mind too.
Are Rivian and NVIDIA? No, there's no D. I was going to say it's almost the same ticker. You just switch the letters around, but
Rividia.
R instead of a D. Yeah, Rividia. Let's do the merger.
Guess celebrating Movember in style. What's Movember? What am I missing?
No Shave November.
No Shave
same,
November.
Same thing. Yeah, Movember.
Are you going with it? No shave?
No, I haven't been. That's funny you even bring that up. Can I just start now? I thought about committing to this with the rest of my face, just because it would look so goofy. I got patches and everything else. I could prove my theory that the mustache is the only thing that really grows in. But I think Movember specifically is mustache November, though. Okay. I believe that's the deal. Is that it's a mustache specific thing. So Nick Batista partook a few years ago. Had a mean stash there for a minute.
I look straight up like Eddie Murphy with just a stash. I already proven this theory. I had the whole beard and everything. When I shaved it, I just took that off and kept the stash because, it was a little bit in. So I looked at it. I was like, I see Eddie Murphy every time in the mirror. Can't do it. Gotta keep it thin.
Shrek.
No, every time I see Donkey, bro. I can't do it. And if I see Donkey, I know my girlfriend. I know she's. I'm just assuming that.
That's a good line of logic. But yeah, it's Movember every month for me these days. I appreciate the compliment.
No, we can jump back into these slides right here. A couple more details. How much does the market care about the software and services segment versus traditional vehicle metrics? When it comes down to how much does the market care, I feel like we're going to have to get to a point where we have to care. I think the software and services is going to start impacting these businesses even more moving forward, whether or not we care or not. So I think that'll be interesting to see how that kind of shapes the market over there. With so many moving parts, expansion, new models, policy risk, execution risk, where's the real edge for Rivian compared to its peers? I don't know. It's going to be interesting, right? That's why we always look at Tesla. They're kind of the head of the snake in the EV space. Rivian obviously following suit, and it makes you feel a little bit more comfortable whenever you actually see these cars driven on the roads, right? I mean, I think I've seen companies before release certain EV headlines, and I look them up. I'm like, what is this? What kind of company? I looked up one company. I forget. It started with the Y. It'll come to me. But they had it was like a two-wheel, one-person type car, but it was in the EV sector. So sometimes it is interesting whenever you see this EV news pop up, it's like actually research the company. But with that being said, Rivian is kind of beginning to be more of a household EV company name, not on Tesla's level by any means.
No, yeah, certainly moving into that household
credibility
kind of category. Right? Yeah, and I would also say, to that end, the initial reason for my thesis in getting long Rivian was out of the Liberation Day dip in April, and I believed that, I didn't believe, factually speaking, Rivian's entire supply and assembly chain is pretty much entirely domestic. Like everything, their plant in Normal, Illinois, I think it's just about 100 miles from here, is their main manufacturing plant, and most of their stuff is U.S. produced and assembled. And so in an ever-changing tariff environment, that could give them a little bit of a leg up, despite the fact that my initial thesis that we were going to do all these insane tariffs and Rivian was going to have this big leg up did not come to fruition.
Yeah. Again, we'll see where it plays out. Regardless of anybody's opinions on Rivian over the last year, we've been trading within the same range. So,
Omaha, Jared.
And with that being said, no, we can jump ahead to our second trade idea.
Yeah.
Any more thoughts on Rivian?
No, I got nothing else. I've shared my piece many times.
I'm
still long. Love that trade though. This thing does not freaking move.
Trust the
process.
And
honestly, maybe we have to put that trade on so that it will move.
Right.
Maybe that's the key. Maybe I need to trick the market. Although you see, if you give a mouse a cookie, because if I put on the strangle to be neutral, then I'm neutral and long. I win both of those contingencies. So then I leave the door open for it to go down. So, you give a mouse a cookie, he's going to want some milk. I got to buy some puts, and it turns into a whole thing.
Exactly. You know what that kind of reminds me of? I was running on TikTok the other day. It's like this 16, 17-year-old trader, and they're making just kind of a meme joke about how if I look away from the screen, maybe it'll start running in my direction. I found it hilarious. Like, these kids are 16, 17, making these jokes about, like, if I don't look at it or if I act like I don't care about the market, my position's going to start moving in my favor.
I've had that philosophy all my life. You remember what was it, the PS2? The PS2 loading screen?
That's so, niche. That's niche right there.
Yeah, the PS2, it would always crash. Like that one, the black Sony loading screen with the purple thing.
I literally just had emotions from that running through my body. I'm not even joking.
It wouldn't turn on 3 times. So you got to press it and you got to look away and see if it'll turn on if you're not looking at it.
Never forget the on the
oh yeah, having it blow on your DVDs.
Please work this time.
Yeah.
Please work.
Yeah, I tried all kinds of things to fix discs, man, like rubbing a banana on it.
Yeah, look, they think we're young. We're not that young. Like, we had the antennas. We had to fix the CDs, the whole 9 yards.
Yeah.
With that being said, our second trade idea of the day is going to be on Palantir. Shout out to Michael Burry. He's been bringing a little bit more attention to Palantir, and it's been getting hit a little bit even more on the day, down about 5.5% on the day, 21.5 IV rank. This is somewhere where I am leaning a little bit bearish, surprise, surprise. But some of the calls that I'm looking at right now, specifically the 195 strike, is not juicy enough for me. So what I'm thinking for myself personally, over the next few days, if we get a bounce in Palantir, then I'm going to most likely try to position myself to get short here. But if anybody is looking for another trade idea that, premiums are juiced in them a little bit and you want some maybe directional exposure, or you can, go neutral if that's what you want to do, Palantir is a pretty good stock to trade right now.
Yeah, as Palantir shows to, let me try that again. I'm having a stroke here again. As Palantir begins to show a propensity for, giving back these big gains, because forever, right, for years, we had this situation with Palantir where it was perma up. It would be $10 up, $1 down, $10 up, over and over and over to where we are now, basically. But now, ever since we first touched this 190-ish level, Palantir really has shown an affinity to, take these big runs. Like you see this gap on the very furthest left side of the screen in the chart that Errol has here. Big gap up, big run down to fill the gap. And then here, obviously, we have the more recent one as well, which actually features a gap down. But Palantir has been a little bit more willing to rocket back down off of these highs as of late. And so I'm definitely going to be looking for spots in this company, which has been on my no trade list this entire time, to take very short dated shorts in situations where it runs up for 5 straight days. And I can now feel a little bit confident that it might give some of that back. For 2 years, you have not been able to be confident that it would give a single dime back of any of its gains, but it feels like that sentiment is changing a bit now.
Yeah, and I mean, as we get our opinions over here on Palantir, it's another one we can add to our watch list. We can jump to the next slide here. We got a few more details on Palantir just to keep in mind. But Rivian is the largest cash flow negative of all pure EV companies at negative $22.5 billion. If they don't start making a profit on their vehicles, they won't survive. Amazon already pulling back from them. You got any thoughts on that? I mean,
yeah, I think
points all around.
I mean, I think it's that's a very good point, and I think that it's a very, very tough spot for Rivian to be in because they're already like luxury, like that's kind of their perception. It's like especially new off the lot, they're a little bit more expensive than the Teslas. They pride themselves in their luxury and the extra features that you get, all the way down to like little stuff. They got the detachable Bluetooth speaker in the car and stuff.
That's how you know you hit luxury level. Yeah, you got accessories like I know I need this, but I'm down.
Yeah, exactly. It's like is it Rolls Royces that come with the umbrella?
It is
that
Rolls-Royce.
Yeah. It's like the Rolls Royce umbrella, or the really nice Mercedes AMGs have cologne in the door.
Oh, I did see one of those.
Yeah.
And you can refill it. I think I see one where it comes through like the vents. You can put a specific scent.
Oh, yeah. I do know what you're talking about. Yes, you can do things like that. And so Rivian already has this luxury appeal and a semi-luxury price point, a seriously luxury price point with some of their nicer stuff. I know they have some things that are over 6 figures MSRP right off the lot. So what do you do? It's not even like you can rebrand and charge more money and try to make more on your vehicles. This whole issue this entire time has been trying to create more budget vehicles that you can make accessible to people. So yeah, the cash flow situation for Rivian is very, very turbulent, and I agree. I mean, it's going to be really hard for them to see any sustained growth until they're able to figure that out. But I will say the counterpoint to that is that when companies manage to survive and grow a little bit, see Uber. Is that a good example? Let me verify this. Yeah, I guess that's Uber is a fine example. When as super duper non-profitable companies that still manage to have some market excitement and see growth, the goalposts are way, way lower for them. The bar is on the floor because all you have to do is lose less. And that's the thing, is like Rivian could come back, what we say, negative $22.4 billion. If Rivian all of a sudden does negative $19 billion next year, it's a dub. It's like a massive success, and you still lost all that money. So there's 2 sides to every equation in that regard. They could go on losing for a while longer, and as long as they manage to lose just a little bit less and less, they will hang on.
Yeah.
But obviously that's
strategy right there.
Yeah, if I were in charge of Rivian, I think what I would try to do is increase revenue while decreasing costs.
Right. As you should.
Yeah, that's what I would do if I were CEO of Apple.
You should be
also
the CEO of Rivian, Apple, and everything else.
That's true. Jensen, get at me. I'll take care of it.
Let's get a Jensen.
You like engineering more anyway.
You heard the man. The U.S. Army awarded Palantir an enterprise agreement potentially worth up to $10 billion over 10 years, which consolidates about 75 contract vehicles and gives the Army and other DoD components the option to purchase Palantir products, right? Palantir is another one of those companies we know is involved with certain deals and contracts with the government. Palantir is a very, I want to say low-key, but a pretty vague company. If you want to do a little bit more research on them, you're going to know they're in big data analytics, so they like to take in large amounts of data, and they have softwares to help segment that data into whatever it is that they're trying to segment. So it's just another powerful AI. I call it big data. That's how kind of where I position Palantir because they're going to use it for whatever they need it for.
I love saying big stuff. We have
it sounds good.
Yeah, Chase and I have an inside joke going now with his girlfriend where we call skyscrapers big architecture.
Oh, that's good.
I'll bring you guys in on that. Big architecture wants to build more buildings.
We're living in the home of big architecture or big skyscrapers, right? One of the first skyscrapers were made or was made in Chicago.
Oh, is that? I think that is the case.
I think we were the home of the skyscrapers. Let me know if Chicago
Sears Tower was the tallest building in the world till like 98, like very recently.
My man is cultured right here. He said Sears Tower. Yep, he said Sears. Here we go.
Oh, bold strategy there, Gus. They 86 the Bluetooth speaker. They 86 the Bluetooth speaker?
Yeah.
Why would anyone buy a Rivian? The Bluetooth speaker was the coolest part.
One more point that I wanted to bring up on and just quickly touch on, just to keep in mind with something like Palantir, because it is extremely relevant right now. But Palantir holds contracts with the U.S. Immigration and Customs Enforcement, which is ICE, right, to provide systems for managing and deporting undocumented immigrants, giving near real-time data visibility. I think that's just a point to keep in mind, right? These are some very relevant things going on right now, too. And just knowing what companies are tied to what will give you a better idea on how to position yourselves and what to expect from these type of companies. So with that being said, and depending on who's leading the administration right now, when I read something like that, I might think, okay, Palantir might be important. Whether or not we like Palantir or not, it seems like this isn't a company that's just blowing smoke, especially with who and what they're affiliated with. So that's Palantir and Rivian. Two trade ideas, implied volatility are up on both of those. We can position ourselves accordingly.
Yeah, two strong ones. I'm for it.
Yeah, like it. And we can go ahead and jump over here to the tastytrade platform, check out some of these positions, and then we will jump to the NASDAQ platform. Big deal. I saw you bringing up NASDAQ not too long ago, but we'll get into it. ES chop. NASDAQ's been chopping around a little bit more here too. NASDAQ's more volatile, so the chop has been some good chop, if that makes sense, if you're picking up what I'm putting down. But some of the first positions that we have over here in the portfolio, we have gold. We're down $1 on the day. Don't know what I'm going to do there. No, I'm just going to be a little bit more patient. Gold is anti-climatic. We talk about this every single day. Gold's still not moving, or the metal's a little quiet during all this government shutdown and uncertainty, which I'm a little surprised by, Gus.
Yeah, it's just a really interesting situation with the metals where it's like it is a time of heightened uncertainty, but we did so much moving up before the time of uncertainty. I mean, the way that I have kind of mentally unpacked this is there was uncertainty and hype, and we've sold the hype. And I think that we are just at the regular uncertainty level now. Is sort of how I'm choosing to see this. Right. So we'll see if that comes to fruition. But like the government shutdown has been present through all of this. It's not like there's any increased uncertainty every day it stays shut down. I mean, the only way that comes into play is if we start fearing the government may never reopen, in which case there's a whole plethora of other larger issues than what metals might do in the stock market. So yeah, I think that we've priced it in. I think that this is kind of where we're going to be. And in my personal case, being short metals, I am praying that we get a government resumption before expiration. But we got to be pushing. I know the longest shutdown in history is 35 days. I would imagine we have to be pretty close to that if we haven't already eclipsed it. And I have like 45 days left in my contract, so we'd be talking about doubling the length of the longest government shutdown in history. I feel good.
I will say after this pullback, I mean, it's not going to be surprising if we go to the highs, but it would be extremely impressive. I mean, seeing us, I would be a little surprised if we don't cool off just a little bit more on the metals. Not that we can't go back towards the highs, but it would be extremely impressive, if we did that.
Well, yeah, and it tends to, as is always pointed out when we have this conversation, metals are really more of a hedge against the dollar than they are against, broader market uncertainty. So that's another consideration there, I suppose.
Yeah, perspective to keep in mind.
Yeah, but ultimately, I think government resumes, and we just get a small tick down in the metals. But I think the ship has long sailed of any hope that we're going to give all these gains back. I think it would just be, a moderate decrease to something like, what's GLD at? Yeah, something like this 350 level.
Yeah, keep an eye on it. That being said, we got Nokia pretty break even on the day. QQQ, this was one of the out-of-the-money call spreads that we were focusing on throughout the week. We ended up closing that one today. We ended up selling off to lower lows throughout the day. Extremely impressive moves that the market is putting in right now. It feels really volatile and kind of scary, but we just swept the lows from like last Tuesday. We really haven't gone anywhere. We just had such an aggressive rebound after the initial sell-off on Tuesday, rebound on Wednesday. Now we're selling back off to the lows on Thursday. So things feel crazy, but we haven't really gone anywhere.
Well, yeah, and VIX isn't even 20 yet.
Right.
And it's climbing.
Right.
But
I feel like that's almost saying something at the same time. It's like things did feel a little rocky, and it's like I would have, if I had to guess without looking at VIX, I would have guessed VIX is at 23.
Sure. Yeah.
If I had to guess, off a feel.
Yeah, I think that's apt. And I mean, yeah, just the sell-off that we got on the 17th was enough to drive VIX up to over 29.
Yeah.
So, that still wasn't even, that considerable.
Yeah. Oracle ended up just chopping off Oracle, going to redeploy that capital elsewhere. I don't think there was going to be enough time in Oracle to get back near break even or any of those things. So didn't want to take the max loss on that one. So decided to manage the risk there instead of just giving the market that extra change. Baidu is another one. This one's pretty much a break-even position. Haven't really gone anywhere over here. Sold an out-of-the-money call spread. Down $6 on the position. This one's another interesting move. We had a huge rally on a lot of the Chinese names. Very large pullback. Now we're kind of trading sideways, kind of waiting in the queue for that one. And then after Baidu, we have Beyond. 43 days left till expiration. Going to be more patient on that one. And then UNH. So that goes some of the tickers. Before we go on to NASDAQ and some of the other futures products that we'll look at, any other individual contracts or any individual assets you want to take a quick peek at, guys?
Well, I did see an interesting comment earlier. Is there any reason to trade quick serve restaurants like Cracker Barrel, Shake Shack, Wendy's, and then how did McDonald's earnings do? So, a few things to unpack here. First of all, yes, brick and mortar restaurants decidedly sliding, and particularly quick serve restaurants. I appreciate the verbiage that you use there because that is kind of where the hole begins to form, is in fast food. McDonald's earnings, I believe, were just moderate. I don't think that there was any major surprises. They did run up off earnings and have since pretty much given all those gains back today. And McDonald's, they might have a problem. I think did I mention this on air yesterday or the day before? That McDonald's, they're up 1% since the start of 2024. Which
I can't remember. We were talking about Wendy's fries the other day. I'm not sure if you said it when we were talking about.
Yeah, maybe I mentioned it then, but that was a shocking statistic to me. Since January 2, the first trading day of 2024, McDonald's has moved up 1%. That might be a little closer to like 2% now that we've moved up a couple dollars since I pulled this stat the other day. But that is serious stagnation. I mean, that's nowhere near outpacing the market. That's nowhere near solid growth. And it extends into the broader fast food landscape as well. I saw Wendy's was mentioned, WEN. Wendy's is this thing looks like a BlackBerry stock chart in 2011. I mean, it's just straight to the downside. So, yeah, it's a really interesting place for these brick and mortar food spots in a trading context as a trading vehicle. I mean, McDonald's definitely still has merit to trade. It moves for you. Shake Shack, I believe, is the same way. Yeah, Shake Shack still goes on some nice runs. So in a long-term investing context, I don't really think that there's any reason to buy these companies. I think that there's better things that you could do with your money. For instance, DoorDash would be the way that I would go because that's a company that's managed to sustain growth. Oh, boy, I see that they are totally dumping today. Did DoorDash report earnings this morning?
Yeah, they've been getting smacked.
Interesting. Okay, I might have to get long there.
This is, again, interesting around the conversation about people having less disposable income, and I feel like something like Dash could...
We're doing this again. I'm totally going to get long on this again. This worked. This is the exact same thing. Hold on. Time out. I need to get long DoorDash right now.
Not only the gap down, we continued.
They gapped down. Right, they gapped down because they missed expectations to their... to a legitimate point. 55 cents per share on 69 cents per share expected EPS. They beat revenue by 0.09 billion, 3.45 on 3.36 expected. That's all well and good. The reason for this slide, though, is because they said that they plan to spend, quote, several $100 million on new initiatives and development in 2026. You guys, the market I'm talking to, why do we keep doing this? It is okay for companies to spend money to grow. I don't understand why this keeps happening, why everyone gets so scared when a multi-billion dollar company wants to spend several $100 million on R&D. That makes sense. That's how you expand. It's how you grow. You must spend money. I did this. This is the exact same spot I crushed a DoorDash trade in last time when they acquired Deliveroo and 7 Rooms. For some reason, they tank on acquiring the 2 largest food delivery giants in the UK that they're now going to operate on their own. That made no sense. It ripped. After that, I wish that I was naked and I wasn't. This is a slam dunk. I'm getting some DoorDash right now. Just got to figure out what I want to do. I think I'm just going to go naked leap. Honestly, last time I did this, it was the exact same thesis, and I was kicking myself for not being naked the entire freaking time.
If I was a GM over DoorDash or a CEO of DoorDash for lunch, I would just DoorDash the food for everybody every day, reinvesting right back into the business.
Yeah, honestly, that's a good.
We order food. I would just use DoorDash.
Yeah, that's
honestly
true. Cater lunch with your own service. Yeah. I mean, yeah, why not? I guess that would be a lot for one Dasher, like a full catering thing. You got to go. I don't know. Anyway, Okay, these premiums are heavy, so I'm going to have to get a little bit cuter.
What expiration are you looking at right now?
Looking at like end of 2026. But yeah, let's go. Okay, I'm going to do something for the shorter dated recovery. Then I'm going to take some kind of gamma play way out. So shorter dated recovery, I feel like 220 is like really automatic recovery. That'd still be really low. So what if we go maybe just into the new year, January of 26. And then, yeah, we'll go short put vertical here.
We said our group went to Cracker Barrel this week. 32-ounce iced tea is over $4. Nobody has that kind of money. $4 iced tea at a Cracker Barrel. CBRL, I'm assuming is Cracker Barrel.
Yeah, that is pretty crazy. I just exited my Cracker Barrel longs this morning. I was such a genius knowing that they were going to change that logo back, and it just did not matter one iota.
Doesn't Dash accept Snap or something too? Is that the case?
Yes,
they do.
They do.
That I would assume some of that sentiment bled onto Dash even a little bit. I know it's not something you can quantify, but I would assume some of that sentiment definitely bled onto Dash there a little bit.
Probably, yes, and that's a great point. They do, and it's only from I believe, and this is a little bit speculative because I've just seen it around DoorDash, but I believe that the rule is the restaurant and or wherever you're ordering from must accept Snap. I don't think that it's DoorDash themselves accept Snap, but I could be wrong. Somebody can correct me on that. But yeah, I'm going to go 210, 220, short put vertical, January 16th, 2026 expiration cycle at 71 DTE. This is 400 debit for 600 credit, so a perfect exact 1.5 to 1 ratio there. And holy cow, it filled me. Wow. Thank you, Tasty Trade. Thank you, Apex.
Got a nice fill.
I got a freaking... What the heck? Yeah, I mean, I'm up $49. Like since
some wide markets
on the fill. Yeah, I mean, it was a wide market. I knew I might have to adjust it a little bit. What did I just get filled at? I put this through as a $6 limit. It got filled at $6.49.
Okay.
Shout out Tasty Trade for getting me the best fill imaginable. I just found $50 on the ground. How about that? So yeah, we'll do that, and then I would also. Yeah, we got the BP for this. I would also like to do something longer dated leap. Like way out of the money, like pure gamma play. Can I go like a 400 for December of next year? What's that look like? 390 is the highest they'll sell me, and that's very wide.
9380 said I didn't either, but I did a lotto for a house at the charity, and they were donating what I wanted to donate to, and the house was near me. Okay, Flower Power. Jack is also at multi-year lows. Take a quick look. Jack in the Box. Jack in the Box. Can't say I've eaten there in maybe a decade. I know they had a late night munchies menu.
I haven't eaten here in forever.
That's the last thing I remember.
My roommate in college, shout out to you, Wyatt, I love you, but he is like the biggest Jack in the Box bull I've ever met in my life. Like, loves this place. He's infatuated with it. Him and his family, they love Jack in the Box. And they're the only group of people I've ever met that, like, if you said, what's your favorite fast food restaurant? They would say Jack in the Box, like, quickly.
Really?
Yeah.
What about Jack in the Box is so fascinating?
Yeah. I mean, I don't know if it's necessarily fascinating. To me, I think it's kind of like mid to low tier, kind of greasy fast food, in my personal opinion.
Most people would probably land in that opinion. So I'm just like, what is their perspective? What do they see in Jack in the Box that we don't see?
They really like, I mean, they like the fries. They like the curly fries. And I will say, curly fries, that's a nice little sales pitch. But mainly they love those tacos. The Jack in the Box, you ever seen the Jack in the Box tacos? It's like it's in like a hard taco shell, but the funny part is that there's a piece of American cheese like perfectly sticking up out the top. Like they put it in there like diagonal so that it sticks out like a triangle of American cheese.
I think I've seen the animated looks of it with Jack in the Box, but I haven't seen them doing it actually with the burger. There's actually a piece of cheese sticking out?
Well, no, just with the tacos. Like the Jack in the Box tacos.
Okay.
It's just so comical because it's a taco, but then you got this piece of American cheese, something that's never used in a taco in any other capacity except at Jack in the Box.
Okay.
Sticking out the top. I don't care for the tacos. I'm not high on Jack in the Box, but more broadly, this is something that Errol and I discuss all the time, is that fast food is just, they're in a really tough spot with these prices. Food places, fast food places. I said jack food places, I think. Fast food places at large have raised their prices so much over the last 5 or 6 years that suddenly it has become just as cost efficient to go sit down and go out to eat somewhere, nice, somewhere not nice, but like somewhere fast casual that you can actually have a waiter and, enjoy your time, sit around and talk to each other, as opposed to getting some crappy drive-through burger. And this issue permeates across the entire fast food sector, I feel like. So I don't really know what they do. I don't know what the solution is. I mean, you got to find a way to get your prices lower. Fast food is inherently a value proposition. It is a value of your time proposition, which they still offer. It's very quick. And it is a value of your money proposition. You can get a lot of calories for not a lot of money. They may not be the best quality or the healthiest calories, but you can feed the family. And those two things have, while the time thing is still there, the value thing just isn't anymore. It's falling completely by the wayside. When I can call and, pick up a big bunch of good shareable food from Chili's and have it cost $2 more than one large meal for one person at McDonald's, why would I ever choose the McDonald's?
Right.
I was about to say the taquitos. Oh, we got some Jack in the Box takes coming in here. Too quick fill, LOL. That's true. Well, yeah, too quick fill, but I guess it was really good. Those crappy 99-cent mystery meat tacos were the best. Grumpy Mike, those are exactly the tacos that I'm describing.
Mystery meat. It's like Arby's, man.
Puke in a box. They were 2 for 99 cents. Yes, you're correct. I do believe they used to be 2 for 99 cents. I'm not sure what their new value deal is on the tacos. I was just about to say the taquitos.
Hey, Grumpy Mike was like, I was actually there yesterday. They're actually 2 for 99 cents.
Oh, Ryan, thank you for the kind words. I appreciate that. I am, still definitely on recovery road here, but it's coming along quick. Thank you. I'm using my heating pad. I know what's up. It's not my first rodeo with back injuries. It is my first rodeo with a back injury this severe. But yeah, heating pad and ibuprofen are the MVPs. But yeah, those Jack in the Box, you guys are crazy for those Jack in the Box tacos. Oh my goodness.
We'll have to try one of those on stream maybe one day.
Yeah, we could.
I don't know how I'm feeling about it, but I'm down. So
yeah, it's something.
Yeah.
But anyway, fast food sliding is my TLDR there. I'm long DoorDash against this move, and I like DoorDash more than brick and mortar fast food straight up. That's the end. Go ahead.
I like DoorDash more than brick and mortar's fast food.
Like as an investment, I mean.
Okay, yeah. I like that. Yeah. With that being said, guys, we did take a couple trades today over here on NASDAQ. We did make some money on the day, but I will say I did have a pretty terrible mistake, which was averaging down into one of the positions, not recognizing that one was still on. So we'll talk a little bit about that, why we were entering there at those positions, and how some of the trade opportunities played out today. But the market is ripping right now. We'll see if the market wants to make up some ground to the upside, because we've been down all day. Are we buying the dip on NASDAQ today? So, Ryan, we bought the dip about an hour ago. We bought the dip. I need to change the time settings on this trading view, but we bought the dip. What time was that at? At about 11:30, so about 30 minutes before we hopped on the segment here, we bought the dip. We used 2 contracts, and then we sold that at around 353. So we covered that just right before we got onto the show. So it was about maybe a 28, 29-minute trade. It was nice to catch that bounce. Right now, the game plan is to recognize if the market wants to trade outside this level of value here, or if it wants to reject once again at this level. We don't have any open positions on right now, but that's kind of the thought process there in terms of what we're looking at, because the market is trading at our area of interest right now as we speak, coincidentally. So we'll watch this one play out together. But let's talk a little bit about this entry that I was looking for earlier on in the day. And I want to show something that we, in my opinion, as traders should never really do, especially if you're using larger size. So you can see over here earlier in the day, we were trading at another level of value, and I was looking to dip buy off of this value area high. Quickly recognized this one wasn't working, and on another account, I was like, you know what, stopped out, got out of that position, and then later today, we got down to our value area low, right? And I was like, oh, I want to dip buy this value area low. So we did that once over here. We dip bought the value area low. This was about at maybe 3 minutes before 11 o'clock Central today. Dip bought that, recognized we already had a long position on. So I was like, you know what, this is still a great entry point. So it had to average down a little bit. Then the average price was maybe around 25,278 maybe. And then we made just a few bucks on that trade. I sold at around break even, came back down to that value area low again, got long off of that, and then sold at the value area high. So let's just pay attention to see if this value area high is now going to serve as a level of support or if it's going to fake traders out at this level. But we do have some action to hone in on a little bit. But those were some of the trades for the day.
I'm not gonna lie, chat had me laughing. I didn't pay a superb amount of attention to everything that you just said. You caught the giant down move. Is that correct?
No, we were just seeing pretty much how much the market would want to sell off.
Yeah, that makes sense. I mean, we're prime Arrow trading hours here, man. It's
we're getting a little bit of volatility.
Clear, well-defined value area, not at all-time highs.
No, not at all-time highs, which is kind of nice. I don't think I'm going to take any more trades for the day, but if something really stands out, maybe we do something. But
it's 30-minute time frames you use to establish the value area, correct?
You could use whatever you want to use. Sometimes using the 30-minute, it just aggregates that data a little bit more so that you can zoom out and still get and see more data. So it's just depending on how you want to scale your charts. You know what I mean? Let's see.
Interesting. I just got back from lunch and my kava is still too expensive and quite empty.
Let's see. Let's mark out the volume profile and just find some other levels during the day where we're getting a lot of trading activity.
Oh, and I see Rhett with the good info on DoorDash EBT situation. It allows EBT as a payment method, but you cannot use it for the delivery fee. You must find a vendor that accepts CBT, and then you're okay. Interesting.
Let's see.
Gap earnings.
Now is a good entry. Gap earnings are for NASDAQ. What are you talking about right there, Cole?
I think that was in response to Gap. Yeah.
Yeah. As we do that, we'll throw on the VWAP here too, big deal. We'll analyze that a little bit more. We have the pro account, so we can look up whatever indicator we want to look up, guys. We got the VWAP, we got whatever your heart desires. Got 2 VWAPs. Let's clean this one off. If you accidentally double click on an indicator on TradingView, all you have to do is come to the indicators. It's going to be at the top left corner of your screen, and then just hit the trash can. And then it'll remove an indicator. And you can see we've sold off so much. We're trading at the bottom side of this VWAP right now, which is just another standard deviation level on the VWAP. Let's see if we can clean it up a little bit. Let's just keep the middle band. There we go.
Yeah, I like the full range myself, but I understand.
Yeah, with the bands, we can keep it then. If we have preference for it, we can keep it.
I like the bands just for just to have a little more complete picture. But I mean, I don't know. Yeah, if anybody in chat likes their VWAP a particular way, you guys take precedent over me. So just let us know.
Oh, let's see. We can keep the bands. We're trading way beneath the VWAP is volume weighted average price. So right now we're trading way beneath the volume average trader price. So Arrow uses TA and quant. I dig it. What do you mean by quant?
Quant, like quantitative finance, like you use a tiny bit of quant. I wouldn't like.
Also, I guess it depends how you frame it.
Yeah. There's some elements sprinkled in. I would say.
I got you.
But I wouldn't like if somebody said, "What's your trading style?" I wouldn't.
I'm not a quant.
He's a quant guy.
He's a quant. Yeah, no, I'm not a quant. But we do like some numbers. We do like quantifying some numbers over here. Help put things into perspective.
Bands make her dance on the VWAP. I like it.
What's that?
So the VWAP. I said I like the bands, and then organic farming said bands make her dance.
That's a good song.
It is.
It's a banger, actually. No, with that being said, again, we're consolidating at this value area high. This will be interesting. Look, guys, I'm going to tell you right now, whether or not you want to get long or short, you're probably going to get a move from here. So position yourselves accordingly. I'm not telling you to do anything.
Breaking. The market is going to move.
And you'll see what I mean by that, right?
No, I'm with it. That is good info. I'm making fun of you, but like neutrality, as I said before, neutrality is a very real risk.
Yeah, no, 100%.
Got to be aware
when the market starts to range like that at your areas of interest. It just gives you the opportunity to actually like frame up that risk to reward type position. You know, math. Yeah, 100%. Math all day. Yeah, quant in a way of that. 100%. Sure. Math and numbers all day. Like sometimes getting long or getting short can be a little opinionated, but a lot of the times your opinion is going to be rooted in the math. I think when you look at it from a distribution perspective, just because it's got those built-in standard deviations a little bit.
It all comes back to the standard deviations.
Every time, standard deviations. So I came across this content creator. He was talking about distributions in content, like upping up your posts a day and how if you visually, I just had never seen someone create a market profile, like a visual distribution of whatever data you're collecting. He did that, but for content creation. And I was like, bro, What a piece of insight this guy has for him to start using standard deviations and distributions in content creation and the back end analytics.
I've never actually quantified it before, but I have used that analogy a lot. Like when people ask me about like posting on TikTok or anything, it's like, your viewership on a social platform is all going to fall into a largely normal distribution if you smooth the data to account for your steady growth in followers. It will be a pretty normal distribution, and so you're going to have some videos that get 10 views and totally flop, and that's tail risk to the downside. That's the 3 standard deviations to the left side of the distribution. But conversely, you're going to have some things that pop off and get millions of views, and that's the tail risk on the very right side of the distribution, that 3rd standard deviation out there. And by increasing your quantity, you simply increase the surface area that you have to have those tails come through. If you upload 10 videos in a week, you might expect one of them to hit a tail. Right. But if you upload 100, you should expect 10 of them to hit a tail.
100%.
So it's,
Yeah. And just to put that visual process into like other realms was like very interesting to see, and kind of just shows like the principles of a standard deviation and how distributions work. Like we brought up before, going into the gym, you can see on the weight rack, depending on which pin you put it in, you can kind of see the wear and tear is a distribution too.
Absolutely,
Distributions. I thought TikTok was going to be banned. Apparently, I mean, Oracle's getting absolutely slammed to the downside right now, so we'll see what happens.
We will. When are we invading Canada? I mean, we can kind of just do that anytime. I did want to touch on Robinhood here briefly. They just had earnings.
Go over there.
Sliding a little bit on earnings, but beyond the earnings, I wanted to talk a little more broadly about Robinhood. They always, since 2020, since the GME thing, there's always been this, sneaking suspicion that Robinhood, like, maybe doesn't actually want you to make money or, whatever these conspiracies may be. And to put our tinfoil hats on even a little bit further, I wanted to show this screenshot that I saw on Twitter this morning. This is somebody talking to Robinhood support. And this says, "Hey there, name. I'm Benjamin with Robinhood Support on the Options and Margin team. I understand you're reaching out for support with disabled options. In order to best serve you, please give me a moment to take a look at all of the relevant details." He says, "Okay, thanks." And the guy responds, Benjamin here, responds and says, "I saw we disabled options trading for you because your investor profile says that you're a professional trader. We don't support options trading for professional traders." What? What does that mean? What do you mean you don't support options trading for professional traders? If anything, isn't that the group that you should support options trading for? Right. You're only letting non-professionals, people who don't know what they're doing, trade options, but then as soon as someone can become classed as a professional, we don't support options trading for professional traders. And why? I've seen all kinds of conspiracy theories flying. Oh, they're working with Citadel. They just want retail. They don't want professional. Citadel doesn't want to go against sharp people. I don't necessarily know that it's that, but this is a very, very odd situation that I just wanted to touch on.
So whenever you do get into a brokerage account, I know it asks you if you qualify to be a professional trader or not. Just thinking if it has anything to do along those lines. Does TradingView use Tasty IV rank possibly or rank derivative like the first derivative, increasing IV rank or decreasing IV rank? I don't.
Retail as opposed to professional, I see that angle, but like, is that what they're getting at? And I will say, to be completely unbiased here, we don't know the full scope of this at all. This guy could be straight up working for the SEC, and Robinhood is saying, "Hey, dumbass, you work for the SEC, you can't trade options." I have no idea. Right. But I just thought that this was very crazy verbiage to type out and send to somebody in a screenshotable format when you know that we live in the age of social media, that they are just confidently using this verbiage with the reputation that they have, that they don't like retail.
And we're talking about it on this show.
Yeah. Exactly. So yes. It's bad optics at the very, very least. Yeah. Is all I'm really saying. I consider myself a professional at losing money. Me too, Steve. Me and you both. Does he have? I don't know his account type. To be fair, again, and like I said, I'm not trying to drag anybody through the mud here. I don't want anything to do with libel. We do not know the full details of this situation, and it's just bad optics. That much I can say for sure.
We wouldn't do something like that.
Exactly. Citadel always wins. That's still true, regardless of whether Citadel is colluding with Robinhood to destroy the little guy. They always win, pro or otherwise. Yes, true. They're beating whoever. Anyway, yeah, that's all I wanted to touch on there with that.
I gotcha.
Little news bite with Robinhood. Just thought that was interesting.
Yeah, no, we'll see what we get. We'll circle back around to this NASDAQ as well and kind of see how this plays out. But let's look at gold real quick.
Yeah, let's do it.
I know gold has been consolidating for the last couple weeks now, so let's see if it's creating any a little bit more, obvious levels to gain any insight from a volume perspective. I'm going to go ahead and take off the VWAP for now just because it's making the screen a little messy. We got the spaghetti charts going on right now. All right, let's clean that up. And with that being said, we're trading at around 3,000, just under 4,000 on gold right now. We're on the 30-minute chart. Let's see if we can zoom out a little bit more.
A professional is getting paid for what you do. Totally at a loss on what rap song that's from, though. I am not going to be of any help on the rap song. I can't exactly place that lyric, but that is true. If you get paid for what you do, you are a professional. I always say, and it is just true. My dad always says he's a professional golfer because he made like $50 in a golf tournament one time. But hey, the man got paid to play golf. You know, you can't take that away from him. Professional golfer.
He was doing it for a living for a little bit. You know.
Yeah, let me know if you ever need me to pay you $5 to do something so that you can tell Paris you're a professional at it for the rest of your life.
She told me the most random thing the other day. She goes, you know, I almost got my tractor license. I said, what? It's the most random thing. You ever just learn something new? It's like, bro, I'm with you every day. How do I not know that? Like, I can't imagine in 10 or 20, 30 years, it's like, honey, I had no idea. How come you never told me that? But anyways, most random. I don't know who else got their tractor.
We all live such interesting and different lives, man. It's like there's all these little things that are, it's like not ever relevant.
Cap. So cap, right? I remember at my high school though, we had to pass a swimming test. We had to pass. Yes, I can swim. We had to pass a swimming test at our high school because they had a gym, and this high school, right? We asked if you had military kids that go to the school. It's funded by the government, so had a big ass pool, and so it could be utilized. They made sure that kids had the swimming credit before they could graduate at the same time, probably just again to get a little bit more utility out of it. And to some people that was crazy. Like, you had to swim in high school.
I do think that's wild. We certainly never had any requirement to swim. The closest like full
you guys had
school
to pump gas over there. You guys had to get gas.
The biggest like full school function we ever had in the pool is that one of our physics teachers, like the AP physics teacher, I think every year she had the boat project where the whole class, there was like a very specific and strict list of like everyday materials, and you had to build a boat, and like, they would see who could get the furthest in the pool, like
that
in their
sounds
boat.
kind of fire,
and like the whole, it wasn't like the whole school, but like lots and lots of teachers were very lenient and would be like, oh yeah, we're gonna go watch the boat project.
Why does that sound
like,
so fun though?
It'd be like a few hundred people like in the auditorium, and they'd go like 2 at a time, and everybody's like cheering for people in the races and stuff.
Mad fun.
Yeah, it was awesome. And some of the boats were amazing, and some of them sucked. And you know, you'd always be guessing like before they get in the water, you're like, oh, there's no way that thing's gonna float. And then suddenly they go all the way down and back. Like it was crazy. But yeah, that was the most pool exposure we ever had. It kind of sanctioned pool exposure.
Yeah. That kind of reminded me of like back in the day at the bottom of the curb. Up front of your house by the sidewalks, like typically whenever water's running down the road, there would be like a little bit of a stream down the crevice. Like we used to make our little boats with our dads, like make little paper mache boats and then start racing them down the stream.
Yeah.
That's kind of what it reminded me of.
Yeah, just a very large version of that. Yeah, we'd always do leaf races when I was a kid.
Okay,
that was the thing. We
wouldn't
put in the work to actually make a boat. We just grab a leaf and toss it in there.
And good times.
Yeah, good times. Simpler times.
Good time.
You had that too, Jared? That's sick. You also had the boat project? Yeah, I have no idea how widespread or niche this may be, but yeah.
It seems pretty niche, but it seems that you guys both definitely connecting on the niche. Yeah. That's pretty niche.
Yeah. Shout out to Dr. Head, the teacher that organized that.
Dr. Head.
Yeah, Dr. Head. But yeah, anyway, the point is, if you want me to pay you $5 to like shoot a free throw sometime, you can say you're a professional basketball player.
I'll do it. Fun fact, when I was in middle school, I did go to a free throw shooting championship.
Oh, yeah?
I got this dope-ass basketball that says free throw shooting championship on it.
That's sick. When I was in middle school, I did a pitch, hit, and run, which is like a baseball.
So familiar.
Yeah, it's like they advertise the hell out of it. Like the MLB themselves advertise it too. It's like it's a little league competition where you it was like really pretty bare bones. You just you hit a ball off a tee and you have to hit it as far as possible, but also straightness matters. So you get a point for every foot, and then a point deducted for every foot that it's off center, and then like that's your score there. And then you throw, and velocity and accuracy both matter. And then you run like a 60, and they time you. But anyway, I advanced to like the state level of that and got third place in the pitch, hit, and run. And it was like it was a whole fun thing. I got to go on a minor league stadium field like during a game and get a medal and all this. It was
just through the first pitch, no big deal.
Thank you. I didn't throw the first pitch.
No,
it was like probably
through the first pitch of the World Seven.
I think it was
Game World Series.
I think it was 9 of us. I think it was like 3 age groups. Then it was all the top 3 finishers were like there to receive the medals or whatever. But yeah, that's a fun little childhood memory.
Oh yeah, that's nice. I can't say mine sounded that exciting, but I will say I remember I was leaving the gym one time and they were like, "Yo, they're actually having the contest in there." I was like, "Should I go?" I was like, "You got your basketball shoes on?" And I was like, "All right," walked over there. Like, you qualified. It's like one. I don't even know if I missed one on the first or second round, but I was like, all right, I think I might be Jordan, guys. I don't know.
I'm on the way.
I don't know. I'm on the way. I don't know if it's too late now, but No. With that being said, for IV rank on TradingView, try one Segro RKO. It's good and also has IV percentile option. Again, one thing that you might notice on some of the platforms, IV might just be slightly skewed, slightly different. So if you can, I would try to keep it consistent to one source. If you can, maybe keep an eye on the tastytrade platform for that IVR.
Yeah, and to that point, Gapper, that's an excellent point, is that TradingView also has lots of user-generated metrics, and so often what you're looking for might not be called exactly what you think that you're looking for. So like, yeah, in that, if you want good IV rank, try, I guess Sega RKO is probably the, unless that's a different charting platform I'm not familiar with at all, but I feel that that's, you said on TradingView? Yeah, you must mean like that's the creator of that metric. And that's always a good way to do it. And cheat code, just ask any AI chatbot for like describe in plain English the indicator that you're looking for on TradingView, and it'll do the legwork for you.
I think I made an indicator like 4 or 5 years ago. It's right here actually.
Oh, you got one?
Arrow C18 right here. I made this bad boy.
Passion to profit.
Yeah. That was the Discord we had originally blown up, but that was a fun one. It uses certain metrics like ATR, your average true range, and a couple different metrics, but we might have to just pull that up for fun because I think it'd be kind of funny, but you just brought it back to my attention.
Big Deal says, hey, Harold, if you ever need an extra host when Gus is out, we have the same initials. Call our show EC Squared.
EC Squared is kind of tough. I'm not going to lie. That's kind of tough. Big Deal. I don't know if you can keep up with the stash, though. That's a big stash to fill.
That's true. Otherwise, Errol has to grow it out and look like Eddie Murphy.
It's a big stash to fill. You don't want Donkey and Eddie Murphy over here. I'm telling you. I'm going to start acting out. No. We are coming close to a close. Just the market's not moving too much right here. We'll keep an eye on it. And we'll see if we want to sell off even more. Maybe we come back and test some of these lows before the market comes over. With that being said, more increased volatility. We're going to be looking at these levels into tomorrow. Anything else on top of your mind, brother, before we head out for the day?
No, that's all I got.
Cool. Well, guys, Big Deal, Gapper, E-Media, Rancher, Data Trader Loan, everybody else, thanks for taking the time to hang out with us for today. We'll see how the rest of these trades play out. Palantir, Rivian, Affirm, some of the trade ideas we got for you guys today. We'll keep an eye on NASDAQ. Be sure to keep up with us on Twitter as well. We're over there and active.
Gains by Gus, Errol_Coleman.
Yes, sir. You know the vibes. Gus, great to be back with you here today, brother. And that will be all today. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
tastytrade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the Thursday edition of what it is that we are trying to do, and we're going to shoot from strength today. And we're going to talk for a few minutes about the power of short premium. So, John, go ahead and get us going here on the title slide. In my opinion, derivatives, options in particular, selling premium, selling options, this allows you to unlock advantages that you simply cannot touch and you cannot access with other assets like stocks, even futures. It really gives you a whole new world to begin to strategically approach your portfolio in ways that you simply cannot do with other assets, index funds, individual stocks, what have you. And so at the end of the day, if you had to boil the Tasty Network down to one thing in particular, of course, it would be short premium and essentially the power behind that short premium. So today, I wanted to unlock 3 different aspects that kind of give short premium its power. So John, go ahead and kick us into the information today. So with short premium, selling options, that's essentially the same thing, synonymous. You're able to tap into 3 distinct advantages. And again, you can't really find these advantages with other assets, at least not to my knowledge. Maybe there's something out there hiding behind some rock, hiding in some nook or some cranny that I haven't examined before, but I haven't seen it today. So let me know if there's something out there that I'm missing. High probability. When you sell options, specifically out of the money options, you're going to be able to tap into immediate pops or probabilities of profit that are greater than 50%. And so what this does is it essentially unlocks an opportunity for you to make money when you're not even right directionally on the stock, which we're going to talk more specifically about here in just a couple of minutes. But you're able to, strategically approach your portfolio in a way that you simply cannot do with just stock. Because regardless of how you may feel about a stock, regardless of how you may feel about, Figma or Adobe or whatever the case may be, it's a 50-50 shot in the short term. Like in the short term, it's a 50-50 proposition. Okay, maybe 53-47 if you bake in the positive drift. But it's essentially a coin flip. Now, of course, over time, stocks go up, like all those kinds of things, like completely agree. But when you take it on a day-by-day basis, it's essentially going to be a 50-50 proposition. When you sell options, specifically out of the money options, you're able to tilt those probabilities in your favor. Now, of course, for every gimme, there's a gotcha. So it's not completely strawberries and sunshine. There are certainly some gotchas that you have to, attend to as well. But in terms of a foundational element, when it comes to, increasing the probability and the odds and putting them in your favor, selling options and selling out of the money options are going to allow you to do that in a way that you simply cannot do with other assets. You are less directional. Now, I kind of alluded to this a couple of minutes ago, but when I sell an out of the money option, I am essentially going to take a directional shot on the stock. If I sell a put spread, I'm bullish. If I sell a put, I'm bullish. If I sell a call spread, I'm bearish. If I sell a call, I'm bearish. If I sell a strangle, of course, I'm going to be neutral. If I sell an iron condor, of course, I'm going to be neutral. But for the purposes of what we're going to talk about right here, let's just assume that you're taking some directional shot in the stock. So I'm selling a put, one of the simplest and arguably most effective strategies that exist in the world of derivatives. So I'm selling a put. If I sell a put that's out of the money, I've got the stock at, let's say, 100, and I sell the 90 put, that essentially means if the stock rallies, then I'm going to make money. Everybody's happy, nobody gets hurt, I make whatever profit target I'm going for, and everybody walks away just fine. Okay, if the stock goes down, obviously I have risk underneath my strike price of 90. So if the stock goes down to 85, 80, 75, what have you, that's not going to be good for me. But here's the power of options. And this is also one of the key supporting points to why the probability is greater than 50-50. If I sell a 90 put on a stock that's selling at $100, I'm essentially now in a situation where I'm bullish. I want the stock to go higher. But if it doesn't do that, I'm going to be okay. If it just sits there at 100, I'm going to be totally fine. That is incredibly powerful. I don't need the stock to go higher to make money. It's going to be easier if it does, but I'm not nearly as directional as I would be if I just bought stock. Because when you buy stock, you need the stock to go higher to make money. Of course, there's dividends and things like that, but when it comes to the directional impact of the position, you need the stock to move higher in order to be profitable on that position. When I sell an out of the money put, I don't need the stock to move higher, and I'm still going to hit whatever profit targets that I might have set out for myself. Of course, it's going to take me a little bit longer. I'm going to have to be a wee little bit more patient when it comes to that, but I'm still going to be on track for whatever I'm going for. And even in the event that I'm wrong directionally, so let's say the stock goes down a little bit. Let's say the stock drops to 97. Let's say the stock drops to 95. If I have a 90 put, I have that buffer built into the strategy. The distance between the strike price and where the stock is when I put the strategy on, I can still make money in that region. Now, again, if the stock does go down and my strike is, beginning to get tested or finally does get tested, it is going to take me longer to earn profits. I'm going to have to be in the trade for much, much closer to expiration to get whatever I'm after. But again, you can't do that with long stock. You can't do that with long futures. Like when you are wrong directionally on these positions, you get hurt, right away, and you get hurt all the way to the end. There's no coming back unless the position cooperates. Well, when it comes to a short put and out of the money premium just in general, you don't need to be directionally right to make money on the position. You essentially just need time to go by, and you need to not be wrong. That's actually the better way to put it. When you sell an out of the money put, I just need to not be wrong. That's very different than needing to be right. And then lastly, with premium, short premium, and with options in general, there are far more adjustments that you can make to your position, especially when you compare it to something like long stock. If I buy stock, which is a great strategy, by the way, long term, market's going to go up 10%, 30%, 50% a year, whatever it's going to be, you're going to be just fine. Don't worry about it. But when it comes to the different adjustments that you can make, there's only so many things you can do. Like, sure, you can dollar cost average. Like, sure, you can just kind of reinvest your dividends and things of that nature. But there isn't too much you can do strategically to put yourself in a better, more favorable position. With options, that is never the case. You always have a number of things you can do. You can roll up, you can roll down, you can roll out. You can actually transform from one strategy to the next as the position moves and the stock moves around and you get closer and closer to expiration, and your return risk profile is actually shifting as the market moves around. You have the adaptability to change the strategy midstream if you need to or if you want to. And again, you simply don't have that with other assets. And so in my opinion, these are kind of the three layers, the three levers of the power to short premium. You have high probability. I have less reliance on being directionally correct. And then lastly, I have more adjustment opportunities. And in my opinion, this is the power of short premium. So, John, go ahead and bring us into the market now. Man, we did it. We made it through. Man, guys, look at this market. This is really, really something. Let me grab my... Sorry, so you guys kept it above zero while I was doing my little deal there. That's good. That's really, really good. EME S&P is down 52. Man, it kind of feels green. EME S&P's down 52. That sort of feels a little bit green. You got the risk-free instrument, not exactly doing what a risk-free instrument is supposed to do. The NASDAQ futures down 360 on the day. You got the boomers down 320. You've got the Russell 2000 futures index down 32 on the day. Lots of red on the screen. Man, that's some crazy, crazy stuff. And I see you guys in the chat, by the way. Man, I see Brad Fouts in the house. Man, I see Brian Johnson in the house. I see DTM Lau in the house. I appreciate you guys. Man, Wolf is here. Man, old Two-Face even showed up. Man, look at this stuff. This is some good stuff. I appreciate you guys so much. So, yeah, let's look at the market for a couple of minutes here because, man, was it ever a whole lot worse? Just just a few, 30 minutes ago, 20 minutes ago. It was really, really something. So if I go to ES, let's start with the S&P 500. So let me bring up a 1 hour chart is fine, just so we can kind of get a little broader swath of what's going on. But yeah, it was ugly, man. This morning was super ugly. Right on the open. It was pretty muted pre-market and overnight and what have you. Everything was pretty quiet on the home front. And then all of a sudden, man, they just took them out behind the woodshed. And that was all she wrote. And so if you look right around the market open here, you've got, the E-mini S&P is dropping 46 points in an hour, dropping, another 46 points in the next hour. And then the low on E-mini S&Ps today was all the way down to 67.33. So about 40 points lower than they are now. Right now they're at 67.71 or 72. So about 40 handles lower. So they've been able to recover about half of the drop today, and we still have about 2 hours left. And so it's going to be very interesting to see how we do close today. The NASDAQ did a similar type of deal where, again, punished on the open. The low on the day was all the way down to 197. And we are now up to 377, basically. So you've got a 180-point rally off the bottom. Is it going to stick? I have no idea. If you happen to know, then just message me privately and we can trade on that information together and split the profits, of course. Like 80 me, 20 you. But we'll make sure it's fair. But now if you look at where's the market going to go from here, I don't know. Unfortunately, I don't think anybody knows. But if you look at, where we've come from, this is a good little bit of relief here on the rally back in the NASDAQ. I'm trying to look at, I'm stumbling here because I'm trying to look at how high was it? It was all the way up to 411. I say all the way, another 20 points to the upside. And then the Russell is going to be very similar. If I look at the Russell here, the Russell had a low of 42.24 on the low, all the way back to 44.41. And so so it's going to be pretty crazy. It's been pretty wild today. Obviously, volatility is going to be up on a day like today. You've got the VIX up 68 cents, 70 cents. You've got volatility futures up 60 cents, but you've got the VIX itself actually up $1.10. This guy was all the way up to over 20, I think, a few hours ago. Yeah, it was up to 20.30 on the high for the VIX, and it's since sold off, now only up $1. And so we'll see what happens. I mean, the VIX at 1920, that's moving. Like the VIX at 1920, that's a market that's moving around. There's no question about that. And so it's going to be very, very interesting to see what happens, into the close today, tomorrow, going into the weekend. So many different things. Very exciting things. Markets move, things change, man. Markets move and things change without question. All right, so what I want to do, though, let's go into our portfolio. And who brought me so I'm glad I kept the receipts, because look at this Adobe trade, guys. So this guy is carrying us. So on a day like today, for some reason, it's been pretty muted in my portfolio. It just happened to be the way the ball bounced today. But the Adobe trade is 100% carrying us today. So smack loving. Yesterday, you gave me a very, very outside the box kind of innovative strategy, thinking about Figma reports, but I kind of want to play Adobe to play Figma. That's kind of how I want to think about this strategy. And so I went ahead and followed you and tailed you into this little trade. And we've got Adobe down $9 today. And we have a long put butterfly in here. If I open this guy up, you guys can see that, this is basically the perfect move for us. We couldn't have really asked for a better move if you simply look at the strikes that we have in the butterfly. You've got the stock at 326.50. Our short put strike, I should say, is 325. And so you've got a situation where we have the perfect move in Adobe. We could use it like another dollar lower, but just given where this was when we put this trade on, right? Smack loving, like yesterday, I think Adobe was over 332.5. And so this is essentially the perfect move for this strategy. Let this be another great example when it comes to butterflies and it comes to expected move butterflies. You have to be mindful of the fact that even if you get the perfect move, which we've essentially gotten here in this Adobe butterfly, it's very, very difficult to get very close to max profit until you get to the very end of expiration. Until you get to the very, very end of expiration, it can be really, really challenging to get anywhere near maximum profit on this strategy. And we can see it actually playing out in real time right here. You can see I bought the strategy for $1.54. It's marking at 318, which is not bad. This is obviously a good outcome for me. But we're only $1.50 away from the perfect possible price, and the maximum value on Adobe would be $7.50. So this guy has a maximum possible price of $7.50, it still has another $4 and some change that it could run up in terms of value, even though it's only $1.70 away from the perfect possible price. Again, guys, with these butterflies, you just have to be mindful that in order to really get close to max profit, you've got to ride that thing to the very end. You've got to hold that thing all the way down to the end. And so, I'm going to take the trade off now. This ended up being a really great trade for us. I don't want to try to go for any more. I think that would be maybe trying to, dip our grubby little paws into the cookie jar one too many times. And I don't really want to get caught with our grubby paws in the cookie jar. And so I'm not going to do that. But I did want to take this opportunity to point out that, man, to get near max profit, it's very difficult, very, very difficult to do that on a butterfly. And so let's go ahead and let's see here. If I go to butterfly, I go close position. Let's go to close this full guy out. And let's see. Yeah, let's go for hold on a second. Let me think. The mid price is 312. Wow, look at these markets, man. They're pretty wide. So these markets are pretty crazy. 241, 382. The mid price is 312. I mean, are these Vinny Batista markets? I thought he was really just doing kind of some MNQ. Some MNQ stuff. And so, but yeah, apparently he's doing the Adobe markets too. And so, that makes sense. I mean, the Batista family, they've got their grubby little paws in plenty of markets. There's no doubt about that. But 243, 314, 385 is the market. Let's try, I'll try the mid price at 314. Let's see if I get filled. Yeah, no takers at 314. So we're going to have to do a little bit of discovery here. Let's see if I do 311. No takers at 311. Okay. All right. Let's go ahead and let me see here. Let's try 308. No takers at 308. Man, these must be Vinny's markets. We're not getting anything done in here. And so let's see, 305. Wow, no takers at 305. Smack 11. What did you do to us, man? You gave us a super illiquid stock. What is the liquidity meter star ranking on Adobe? It's only 2 stars. Okay, so now it's starting to make a little bit of sense now. It's all kind of coming back to me, Celine Dion style with Adobe. Yeah, I mean, we're gonna have to. You got to pay the man. You got to do it. There's just no way around it. I don't really want to stay in the trade though, because it's been a good trade. We're gonna end up making $1.50 out of this guy or whatever, depending on how much they take from us here on this this little bit of discovery. Let's see here. If I do 299, man, this is brutal. Smack 11. We got filled at 299. All right, so there you go. Beautiful, beautiful, beautiful. We are out of Adobe. Ended up being a decent trade. Thank you there, Smack 11, for that trade. It ended up being pretty solid. And then Qualcomm is the other one that we did for earnings, and it's working out okay. This was a very boring trade. Again, this was just kind of your chocolate chip cookie recipe. Nothing super fancy. Not doing anything crazy. We're not doing tiramisu. I'm not doing pineapple upside down cake or anything crazy. This is just a very Betty Crocker play with the short strangle in Qualcomm. And right now it's looking good. We're up about 60 cents on the trade. And you can see right here that, this is very much a sit and do nothing scenario. You've got the stock at 173. We've got strikes at 160 and 210. That all looks good. And we're up about 60 cents. Now, you could maybe take it out. Or take it off, I should say. You could do that. And I don't necessarily have a big problem with that. I think that'd be totally fine. For me, though, when we did this trade, we chose the December cycle, right? So this wasn't a front week play. This wasn't intended to be an overnight play. This was intended to be a longer term play. We were just kind of using the earnings date as a bit of a catalyst into a normal style trade. And so for me, going into this, unless we got the perfect move, I wasn't really thinking I was going to take this guy off today. Now, another thing kind of on that note, when you sell a strangle and you do something that is intended to be neutral, there really is no perfect move for you. Yes, the stock staying still and the volatility crush would have been the perfect outcome, and we would have made a little bit more money. But the point that I want to make is this. If you do something bullish and you get the quote-unquote perfect move, that's the stock ripping higher. If the stock rips higher, then you're going to make money pretty quickly. You're going to make money overnight. It's going to be a great trade. You can take it off at pretty close to your profit target or maybe at your profit target the next day, right? Same thing on the bearish side. If I do something bearish and I get the quote-unquote perfect move, that's going to be the stock falling through the floor. That's going to be NASDAQ down 600 points or whatever. It's going to be Adobe down $10, whatever. And you're going to be able to take it off for pretty close to your profit target. when you do something neutral, strangle, iron condor, neutral butterfly, iron fly maybe, the perfect move for you is no move. The perfect move for you is stock sitting still and then letting time go by. You essentially need both of those components in place in order to make money on the trade. Otherwise, you're going to, not otherwise, but you're not going to be in a situation where in just one day, you're going to realize this massive, massive windfall of profits. That really doesn't happen with neutral strategies. So you have to understand on the front end what you're signing up for. There it is again, for the 117th consecutive day, right? What are you signing up for? A neutral strategy, you are signing up for something that's going to take a little bit of time. You are signing up for something that's going to take, more than just a day or two for you to hit whatever profit target that you might have. So for Qualcomm here, like I'm in a good spot. Like I'm in a good spot at all. So we're going to sit, or I'm in a good spot completely. There's no reason to do anything at all. And so we're going to sit tight and do nothing. And so for the rest of the portfolio, though, I mean, a big market move today. I mean, Starbucks is getting hit, Uber's getting hit, so Uber's probably not coming back. This was our butterfly from earnings. We've only got one day left. Sadly, this guy's probably going to go out to pasture, sometime next week, or well, it's going to go out to pasture tomorrow. I can't really stop it at this point. We only have one day to go, and so that would mean on Monday we would come into the office, come into the portfolio, and Uber would be gone. It would be like it never happened. And so unfortunately, unless we get a little Taco Thursday, can we get a little Taco Thursday? Is that on the menu? I'm not sure if that's allowed. I think the Supreme Court is going to strike that guy down too, but we're going to have to wait and see. It's possible. It's still possible. And so Uber is not looking too good. And, but the main thing I want to talk about today was obviously Qualcomm and Adobe. So decent little outcome for us. Pretty happy with how everything shook out. And so now what I want to do, man, let me see where you guys are at. So where are you guys at? I see you guys in the chat. Man, look at you guys. I see you guys. Steven Stenchever's in the house, man. Scramble Everything is here. Gapper X in the house. Man, let me try to get somebody. Can I surprise and delete somebody in the middle? Well, I see somebody near the end. I see my boy Orgdenu says, come on, Doc, tiramisu isn't that complicated. I mean, I don't even really know what I'm saying. I tried to make tiramisu one time. So back in the day, I actually went through a stretch. We actually lived in Charlotte at the time. So I went through like a 14-month stretch where I was deep into baking. And I'm not making this up. This is not a joke. I was deep into it. I was so deep into it, I was baking pies and I was selling them to our neighbors for the holidays. Like straight up, I'm not making this up. You can ask my wife. She can vouch for me. They weren't very good. I mean, they were well below B-. But I was making these pies. I was in the kitchen. Like I was churning out these pies. I was selling them to the neighbors. It was definitely a loss leader. We were not making any money on these pies. But I tried to make tiramisu one time, and Orgdenu, I completely botched the whole thing. So from my vantage point, the lady fingers, and you got to soak it in the espresso and whatever. I'm like, there's too many steps here, man. I need a Betty Crocker box for tiramisu and just kind of follow the deal. And so, but anyway, that's pretty funny, Orgdenu. Let's see here. You guys are making me laugh though. Talking about Indiana Jones. Interesting. Okay. Oh wait, Steve Aguilera. Here we go. Dr. Jim, are there times where you want to go at the money or close to at the money, or simply out of the money is always best regardless of the trade? This is a great question. This is obviously in reference to kind of how we led off the show today with the power of short premium. So I'm going to say that the default setting is always an out of the money spread. The default setting is always going to be an out of the money option. It's always going to be an out of the money position, simply because that does give you, kind of the best of both worlds, where you have, the higher probability, you still have a decent amount of premium, and you have that buffer where you don't have to be right directionally. If you choose an at the money strike as opposed to an out of the money strike, now you're kind of shifting the balance of power, if you will. So now your probability is going to go down. The premium you collect is going to go up, and your buffer for directional bias is obviously going to be essentially shrinking and potentially completely evaporated in the event that you are at the money. Now, because you have the premium, there is still a little bit of buffer that's kind of baked in there, which is always kind of interesting. But how do I decide whether or not I want to go out of the money versus at the money? Generally speaking, I'm almost always going out of the money. I need a really, really, really good reason to go at the money, as opposed to even something just 40, 45 delta. In my opinion, 40, 45 delta is far superior to a 50 delta, which would be at the money, of course, because you do have that directional bias baked in. like you do have that kind of little bit of wiggle room and buffer baked into the strategy, which can be really, really nice and helpful when it comes to, kind of shielding against directional moves in the stock. So when do I decide to go at the money? Well, generally speaking, if I'm in dire need of more delta, if I'm in dire need of kind of, adding more delta to my portfolio, so I need to add bullish delta, I'm selling at the money puts. I need to add bearish delta, I'm selling at the money calls. If I'm in dire need of a big delta adjustment, that might be where I would choose an at the money strike as opposed to an out of the money strike. But again, that's not going to happen that often. And a lot of times you can make your delta adjustments with your current positions as opposed to new positions. And so I'm going to say finding myself in that type of situation is going to happen less than 5% of the time. And so that's why I'm 90+% of the time easy going to the out of the money strike and, kind of playing the probabilities that way and kind of tapping into those three different levers of, advantages with short premium. And so that's kind of how I think about it there, Steve Aguilera. Hopefully that helps a little bit. But let me see here. Where are you guys at? Let me go back to the beginning. Let's see here. If I go back to the beginning, where are we at? Okay, so Brad Fout's in the house. There we go. He's talking about talking to Ordenu. That's good stuff. Yeah, Ordenu is from Italy. And so I see you talking about Italian Discords. That's good stuff. We have a Tasty Discord now. I don't know if you guys know about this yet. I'm not sure what the link is to it, but an actual Tasty Discord. And I'm going to be in that Discord from time to time. I'm still trying to figure out how that even works. I mean, I'm not a boomer, but sometimes I kind of act like a boomer. And so I have to let the Gen Zers kind of teach me on this. They have to train me on how to even use this technology. But once they do, I'll be in there from time to time and dropping into the old Tasty Discord. But let's see. Ordenu is in the house. Again, he says, greetings from Italy, Dr. Jim. Yesterday, I opened 3 short calls, GLD, Google, and DIA. Very, very nice, my friend. This is a good day to do all of that. I mean, gold is up a little bit, but Google and DIA, those short calls are obviously doing quite well on a day like today. Google is probably down, I would imagine, right? Google's up. Wow, look at Google bucking the trend. Wow, look at Google flight to quality. Look at IBM flight to quality. I mean, here it is, guys. Like when the sky is falling, little Google, little IBM. There you go, little Neo. A little bit surprising because I thought he was kind of, gone from the scene there back in 2006, 2005. But he's back up 14 cents today. And so that's pretty impressive. But yeah, so hopefully there, Ordenu, you had some opportunities even just this morning to manage these guys for profits with the big drop. I mean, we're seeing a bit of a rally back now. And so maybe you'll get another chance this afternoon if you missed it the first go around. Let's see, Ordenu. Brian Dowdy in the house. Man, Brian Dowdy is in the house, but it's actually Brian Dowdy. He says, hello, Dr. Jim, or hello, Dr. J. I changed my name back. I appreciate you, my friend. I was very thrown off by the half a Z17 thing. Like if it was like half a Z15 or half a Z13, that would have been okay. But the half a Z17 thing really kind of threw me off. And so now that, you're back as Brian Dowdy, all is right in the world. All is well. Man, welcome to the show, my friend. You are certainly part of the core position. And so I appreciate you, my friend. Scramble everything. Dr. Jim, the down open, P&L open bros, GLP-1s definitely double hammer with the vol expansion. That's correct. Time to eat some more blueberries and open new positions in ANET. ANET? What is up with ANET? Hold on. ANET. 137 are Arista Networks. Okay, I've never heard of them. That doesn't necessarily mean anything. But okay, liquidity, 2 stars. You're going to take me down like Smack Lovin'? Try to take me down? I don't know about all this, man. This ANET stuff. Let me look at the markets here. Let me go to a trade page. Let's go to December with 43 days to go. Let's see. If I do, I've got ANET at 137. You've got, the at the money strikes. Wow, it's really not too bad. I mean, the markets aren't too bad. Now, the liquidity meter is that's a little unsettling, I would say. That's a little bit like, okay, we could find ourselves in an Adobe situation, which you guys just saw, right? There's nothing worse. I mean, Adobe was pretty bad, but it could be worse than that even. But there's really nothing worse than being in a trade, you get the exact move that you want, and then all of a sudden you can't get out for a decent price. And that kind of just happened to us in Adobe. And so I'm like, man, and liquidity is going to be the driver that's determining all of that. Like liquidity is number one, the driver that determines, the ease or lack thereof when it comes to getting into and getting out of positions. And so you want to be mindful of this. I think I'm going to pass on ANET just because, I want to maybe focus on some more liquid names for now. Just give me like a day or even check back with me in like 10 minutes. Maybe we could do something in ANET. And so let's see, Rats Media. Let's see, in my personal app with the Tasty API, I do have access to the increasing or decreasing IV rank or increasing and decreasing IV through the Tasty API. That sounds like some good stuff. So that's good there, Reds Media, I think. I'm not exactly sure, but that sounds like it might be good. Let's see, Brian Dowdy, my covered call with eBay just went red, which I guess is a good thing. So you're referring to the call itself, not the whole position. Or maybe you are referring to the whole position. But I think the way you wrote that, you mean the call itself. Yeah, I mean, that's, one of the things about a covered call, so for Brian and for everybody else, I know covered calls are really popular strategies with a lot of investors, especially you long-term guys out there and gals out there that are like, I've got all this stock, I want to do something with it. What can I do to be more strategic, be more active, whatever? Hey, you are in the right spot. Whether it's my show, whether it's Gus and E right before me, whether it's Jamal right behind me, like there's so many amazing hosts here on the network and so many resources for you. This is our lifeblood. Like our lifeblood is giving you guys the tools and the resources you need to do things, on an active basis in your portfolio. When it comes to a covered call, though, one thing you want to keep in mind, once you have a covered call on, so you've had the stock on for a while and then you sell the call or you do it all together at the same time, it doesn't matter. You always want to remember that from this point forward, you're always looking at the whole package together. You really want to not normally look at the stock and then look at the option. At least when you first try to discern, hey, what's going on with my position in eBay or my position in Adobe or ANET or whatever. You want to look at the whole package first. Now, of course, look at the stock and look at the short call to see if there's anything to do individually, especially with the short call. Because if eBay keeps going down, as you know, Brian, what's going to happen to that short call? It's going to dry up. Like the price on that short call is going to drop. And as the price on that short call does indeed drop, there's going to come a certain point where you're going to want to just take it off because it doesn't make sense to keep it on. And so when it gets to that point, certainly you want to look at the short call individually. But I've seen it happen so many times where investors, especially when the stock starts rallying, investors are like, oh man, I'm losing money on this covered call. And it's like, no, you're actually not losing money on the covered call. You're making money on the covered call. You're losing on the short call portion of the position. But again, this is what you're signing up for. Right, this is why it's so important. This is what you've signed up for. You've signed up for, if the stock rallies, I'm not going to make as much money as I would have had I just held the stock itself. But the trade-off, the gimme that comes alongside that gotcha is now if the stock doesn't go anywhere or the stock goes down, now I've got a short call that's going to help to kind of soften the blow. And so, Brian, I would just encourage you to continue to look at it all together as a package. I think you're probably doing this anyway, but just in case maybe it slipped your mind or even for the other people that are watching the show. And so let's see, if I go to, let's see, Sam L's in the house, Doc, you're basically a ghost drink in human form. What's the play on MNST earnings tonight? Oh, this is Monster, right? This is Monster. Yeah, look at that. Wow. So isn't Monster like, excuse me, I've seen these charts from like the last however many years or whatever. I think, isn't Monster like one of the best performing stocks of the last 20 years? Like it's even outperforming Apple. It's outperforming NVIDIA. Like it's outperforming Tesla. Like I think it's actually above like all these stocks. Like if you actually look at a chart going back to maybe all the way back to the Monster IPO, whenever that was, it's up like tens of thousands of percent when it comes to the overall return on the position. And so now we've got Monster earnings tonight. I didn't even know. Yeah, I mean, man, you guys are going to rope me in. I didn't want to do A now. What's the liquidity like in Monster? Okay, 3 stars. It's a little bit better, of course. That kind of matters. I mean, every little star, man, it's a game of inches. It's absolutely a game of inches. Let's go into Monster. And we've got, they don't have weekly options? What is this? Is this Vinny's pits too? No weekly options in Monster Beverage. I mean, really, what are we doing here, guys? Like, what are we trying to accomplish? No weekly options in Monster Beverage. That's brutal, man. I can't even do the strategy that I want to do. So I'm going to pass on Monster just out of spite now because I can't even do what I want to do. I want to do a butterfly. I want to do maybe a vertical spread for tomorrow, but I can't even do it And so, Sam, I'm going to let you just have at it there with Monster Beverage. And in protest, I'm going to get a few extra Ghost. And I'm going to stay away from Monster. Although I will partake in a Monster from time to time. But that might be changing now. And so, let's see. Scramble, everything says winning by losing it is great. Yes, talking about the cover call, that's a good way to put it. It's a very good way to put it. Big Deal Donut says, I'm guessing purple shirt today for Dr. Jim. No, man, we had to go Fire Engine Red. Had to go Fire Engine Red. Now, of course, as soon as I put on the Fire Engine Red shirt, what did it do? It rallied back another 150 points. Like, I think the NASDAQ is plus about 135 since I put this shirt on, which was about 90 seconds before we went live. And so, and once I take it off when the show's over and put my t-shirt back on, then we're going to dump. We're going to be all the way right back to the lows. It's so funny. And so, let's see, Sam L. And by the way, as a living legend yourself, have you tried the Breakfast of Legends Ghost Protein Cereal? 18 grams of protein per serving. That's pure B- fuel right there. I actually haven't tried the Ghost cereal. I've seen it on the shelves, though. And this is going to sound kind of like, wow, how could you possibly not know that? Because I was so surprised to like see it in the cereal aisle. I didn't really put two and two together that was the same Ghost that is selling pre-workout. Like, I don't necessarily, like, when I'm going down the cereal aisle, right? Like, I'm expecting to see, like, Honey Nut Cheerios. I'm expecting to see, like, Kix and Life. I'm not expecting to see, like, C4, right? I'm not expecting to see, like, Extreme Speed Stack, right? Cereal. And so when I saw Ghost, I just thought it was a completely different company that had no affiliation with the actual pre-workout company, but it's actually all under the same umbrella. And so I'm assuming that they're putting a little beta-alanine in there. Like, I'm assuming they've sprinkled just a wee little bit of taurine in that cereal. So maybe I'll have to give it a shot just to kind of augment, the true pre-workout. And then you kind of hit it from both sides. With the drinks and the food, man, that'd be some good stuff. And so let's see. The Preston in the house. What's going on there, Preston? Dr. Jim. Oh, Daddy's Home 2 is even funnier than the first. Yeah, I was talking about this yesterday. We didn't watch any last night, so we're still stuck on like the first 20 minutes. But the Preston says, so I'm looking forward to that. Thank you for sharing that with me. I never see you play the indexes like SPY. What gives? I appreciate all that you do to entertain and educate us. I appreciate you, my friend. I play them all the time, actually. I happen to not have any on right now, which is actually, that's just a bit of this is kind of an outlier move here in my portfolio. If you noticed, I had an MES strangle on just yesterday. I think we took it off. And so sometimes, I'll play the indexes with SPY, QQQ, DIA, what have you, IWM. Sometimes I'll go to the futures options. So like, MES or MNQ or whatever the case may be. And so I'll certainly do that, or I will use the equity options. It kind of depends on what I'm trying to accomplish. And what I mean by that is, take SPY, for example. In fact, I'll even show you just so that you don't have to just verbally follow me through the forest. You can actually see it for yourself. If I go to SPY, then I'm in a situation where if I wanted to do something naked in SPY, right, I go to December with 43 days to go. Let's say I go to sell a 30 put, right? So I'm going to sell this 654 put. There you go. My buying power is $11,000. Right, that's a very, very significant buying power. I can't do that in my account. $30,000, I can't do that. In fact, you need well over $100,000 in my opinion to do a trade like that. You probably need more like a 125 or 150 to be able to do that trade correctly, where it's small enough to where you can treat it objectively, do the things you're supposed to do, not panic and freak out when things go awry or what have you. But if I go into MES here, so I go to MES and let's see here. If I go to MES, you're going to see it's a very, very different scenario. If I go to 43 days to go, same thing. Go to 43 days to go. I go to the 30 delta. That's going to be about 66.50. Look at the buying power on this trade. Now, pay no mind to the fact that the markets are incredibly wide right now. So maybe this may not be the best example of a trade. You may want to choose a different strike or maybe even a different expiration. But I want to choose the same one that I would choose for SPY. What you can see is the buying power is like 1/10 of what I would have to put up in SPY. And so when I say what I'm trying to accomplish with that strategy, if I'm going to do something defined risk, I'm almost always going to choose the equity options because the markets are better. The markets are better. There's more liquidity. I can size it however I want to because it's defined risk. I'm not worried about, the overwhelming buying power impact on something undefined risk. But if I'm going to do something that's naked and undefined risk, I can't do it in SPY. I can't do it in QQQ, of course. I can maybe do an IWM depending on the strikes that I choose, but I'm instead going to go to the futures options. I'm going to go to MES. I'm going to go to MNQ. I'm going to potentially go to RTY, which is the Russell 2000 futures. And so that's going to give me a much better buying power situation for my account size. And so for those of you guys out there that maybe have, a smaller account, you've got 20, 25, 30,000, and you're looking for ways to do undefined risk positions in the indexes, in my opinion, you simply cannot beat the futures options. You really can't beat them. And so I would strongly encourage everybody out there to take a look at these if you've never used them before, because they can be a really, really nice addition to what it is that you're trying to accomplish. So hopefully that helps a little bit there, the Preston. Greg Lutton in the house. What's going on there, Greg Lutton? Appreciate you, my friend. Brian Dowdy, the Dr. J, the Dr. J way P&L Open Bros are after me. They come for us all, my friend. They come for us all at one time or another. And so Jared Kramer, Dr. Jim Time, P&L Open Bros coming out in force today. Yeah, they are, but not really for me though. Like again, like somehow, some way, I mean, this is pretty normal for me. Like that's not really anything. I mean, obviously you got Starbucks, but I mean, Starbucks just recently was over like $1,200 or $1,300. So we're on the upswing right now with the P&L Open on Starbucks. And it's going to be hilarious when this thing turns green. Like when Starbucks keeps rallying and people just keep buying that C plus coffee, it's going to be so funny when this guy turns green and we're able to really stick it to the P&L Open Bros. I'm really, really looking forward to that. And so let's see. Where are we at? Sam L. Doc Dual, Duol. It's hard to say live. I still don't even think I'm saying it right. Dual? No, I don't know. That stock is is getting crushed. Who's even using that app anyway? Besides speaking fluent French and Jimbro, what other languages do you master? I definitely don't speak fluent French. I mean, I studied abroad in France, but I had no idea how to speak French. I thought I knew, but then I got there. I'm like, I don't know what they're saying. I have no idea. So they could all speak English. So I was like, yeah, this is way easier. So we're just going to do it this way. But yeah, what's going on with Duolingo? Okay, yeah, there you go. Wow, look at that. Whoa. Now that's a move. Man, you think the Nasdaq's getting crushed. Man, look at Duolingo. Man, you think EMS&Ps are getting hammered. Man, look at good old DUOL. This thing is getting absolutely just bamboozled here on the day. Wow, that's pretty wild. Dual getting hammered. That's some crazy stuff. And so I haven't traded them before. I'm not going to trade them today. I would probably be bullish, of course, taking the short-term contrarian stance. Although, again, I don't know if we're allowed to do that anymore because we're all momentum traders now. So I'm not sure. I got to check with HR, I think. So I'll get back to you guys on that, and I'll probably have more to say about that maybe tomorrow, maybe next week. But anyway. Let's see. Weiss in the house. Dr. Jim bringing the slides. Power on point, man. I appreciate you, my friend. Joel James in the house. What's up, my friend? Emmett Morrison. Hey there, Dr. J. Dr. Jim, show us the way, oh, wise one. Man, I don't know if I can do that, but we'll try to do something. Brad Faust in the house. What's going on there, Brad? Scramble everything. Let's see. Dr. J speaks the language of love, banana daiquiris. I mean, that's what I thought I was doing on our honeymoon. It was so funny. Like on our honeymoon, this was back in 2009. We went to Jamaica and it was great for a week, and we had so much fun, right? Well, I mean, we were drinking and stuff and having a good time, and we would go up to like the little like poolside bar, and like we would order a gin and tonic and a banana daiquiri, and the guy would hand the banana daiquiri to Autumn and the gin and tonic to me, and I'm like, you gotta flip those over, bro. And he's like, what? I'm like, I'm like, you know, man, you absolutely know. And so by the end of the stay, like he finally came around, but it was very funny that she was drinking like shots of tequila, and I was like, do you guys have any strawberry daiquiris? That would be really, really nice. But Big Deal Donuts in the house. What's going on, my friend? Ryan Johnson, what's going on? Hey, Dr. Jim. What do you think about going long on PLTR now that it's been a few days since their earnings report dropped? Well, I'm already long Palantir. You can see right here. I mean, it's not really worth anything anymore because our spread is it's basically over and done with. But you can see right here, this guy, it's not coming back. I mean, we need Palantir over 200 tomorrow. I mean, if you were going to get long, I mean, now's the time to get long in my opinion. Like this is the time to get long, of course. And so, if you were looking for a spot to get long, like this would be that spot. Unfortunately, I'm already kind of long. Again, it's not worth very much. I'll probably wait till this position goes away. So that would be Monday, I guess. Once this position goes away, maybe we can reevaluate and kind of take a look at, what might be available in Palantir. But we also might just say I'm done with the scrap stock. I'm not sure. We'll have to wait and see. And you got to tune in. You got to tune in to find out. But it looks like I'm done. We got to get done a couple minutes early now. Everybody's been doing a good job, and I want to make sure that I follow suit, but I appreciate you guys. Man, I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
What's going on, everybody? Welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade, and I'm your host, Jamal Chandler. It seems like we have fought off some weakness from the day. Things were pretty volatile early on, I got to tell you. And what was really fascinating was earlier today, if you saw, was on Options Trading Concepts Live with Mikey. We did it from the floor. That's right. We did the show from the Cboe floor earlier, and it was something. It was pretty awesome. I mean, in a multitude of ways, I got to tell you. It was kind of like a full circle moment for me. I used to do a lot of stuff on the Cboe floor. Not that particular floor. They moved that floor. They took the opportunity during COVID to create a new floor. But nevertheless, it was cool to be down there. And, I tell you, the best times to be down there, and you guys will see this as we do the show from there more often, is a day like this because it's really active. There's a lot going on. There's a lot of option orders coming in, a lot of trading happening. And so you could tell that today that we were down there, once we were down about 80 handles or so in S&P 500, you could tell things get more active, obviously, right? I mean, it's no different than you guys, right? I mean, when you guys see the market down over 1% and change or, close to 100 handles or something like that, you typically, I bet, get more active. That's exactly what they feel. And then you got to realize how much retail is playing a part of the trading in SPX, particularly in 0DTE. I could tell. I heard one order come in for 197, whatever it was. First of all, if you know anything about trading and retail, any order that is what's called an odd lot, in that case, it's not a 100 lot, it's not a 50 lot, it's not a 200 lot or a 1,000 lot. 197
right, is an odd lot, and that tells you that there are retail trades because only retailers trade in one lots, right? And so you could hear that quite a few times on the floor. That lets you know how much retail is participating in a lot of the SPX trades. It was great to hear, man. It was awesome. Thanks, Andres. Yeah, it was pretty awesome, man. We're going to be doing that every Thursday. You're going to see us down there. So I'm bringing that up because I feel like I didn't get a chance to look at the market the way that I normally do. We were moving around so much early in the morning and doing a lot of different things. The first time I really got to pay attention to the market was maybe about 30 minutes before the show. And then obviously engaged in the market while we were doing the show. And then after the show, I really haven't barely looked at the market again. So we'll look at the market together for the most part. We can pull up the platform here. S&P 500 right now is only down 50. Let's look at the intraday move here. We've seen a little bounce, it would seem, off of the lows at one point in time. Let me see. This is my one-day chart. Is this today? Let's do a 5-minute chart. Yeah, this is from this morning. This is essentially the open here. We were down some. I actually have been playing this day I've been playing this day like we're gonna finish on the lows. At least I do that in my head. That way I don't get too bullish and put on too many bullish trades. So if we look here at my end of the day situation, let me see. Since I last saw you guys yesterday, today's the 6th, right? I think I did one trade right before the show. I did the Robinhood calendar call. Obviously, that didn't go so well. Robinhood took a dive here. From what I understand, I mean, they had good earnings, but I think they changed CFOs from what I saw on the news. I know yesterday, I'll get to that in a little bit, but yeah, it seems like is that one lot is a 100 options contract. No, so when I say one lot, of course, one lot meaning one contract of options that obviously correlates to 100 shares, right? So one lot is just literally a one lot. I mean, like, what I mean by this, like this, these are, this is a one lot, right? We sold one lot earlier today in the 165 strike for 315. We did this for our show, for our Thursday show trade. We did that today. And that was just something I decided to do since IV rank was still up here. I'm selling a one lot call against the recent highs. Actually, it's below recent highs, selling the 165. The recent highs were like 155 in Robinhood, and we sold 165. So, and again, it's in that 45-day window. I feel pretty decent about that. 20 delta, you can't beat that. And now that this thing is in the S&P 500, you figure it's going to move along with the S&P 500, right? And certainly I have a lot of long S&P 500 plays. One thing I did earlier too, I got to give my brother Mike the Polish Hammer props for this. If you remember, or maybe you don't remember. I don't remember if I talked about it on Engineering the Trade, but I put this trade on OTCL yesterday, which was called the Open Heart Butterfly, right? So I was long this, short that. I was short this, and I was initially long, so $20 wide to the upside on the 700, right? Collected a credit for it. As you can see now, you could still collect a credit for it. I collected a credit of $1.40 yesterday, right? And so the nice thing about it, because I hadn't been able to look at the portfolio really, I haven't been able to do a whole lot. We listen to you guys. We listen to we always appreciate all of you guys, whether it's in the chat or whether it's in the and via X, Twitter. I still call it Twitter for the most part. So I say that because Mike was able to tell me about the idea that I could roll this call down and gain some buying power back. At the time, I was basically using up about an additional $900 in buying power because this is a $20 upside credit, right? A $20 upside spread that I was taking in for credit. And so I was able to roll clear. I was long this call, right, part of the spread. I was able to roll that down to here, get some buying power back, and now check it out. I got the whole thing on for credit. It's like Parker Lewis, I can't lose. You know what I'm saying? Like, this thing is on for a 50-cent credit, so no matter what happens, I mean, if it were to end up here at expiration, cool. But I don't even have to take it off, right? I don't even have to take it off. There's nothing I have to do. So it's pretty sweet to to have that kind of spread on and then have it for credit. It worked. I would keep all of the credit if it had closed down and I had just left those strikes. If it had moved away from strike, but the fact that it moved away a decent amount from strike earlier today, being down 70, 80, I was able to follow, to be able to do that. So it worked out well. James Bond IV, good question. Jamal, who do you like in tonight's NFL game, Las Vegas or Denver? I mean, Denver. Is it in Las Vegas? I'm just curious. I don't know if it matters. I don't really know if it matters. It is in Denver. Denver should smack them, man. I don't even know what the spread is on that game, but come on. Denver has a really good D. Raiders just traded away their best receiver, who's not really like an elite receiver, but they traded away their best receiver. What we are looking for tonight, though, James Bond IV, is a lot of catches from Brock Bowers. That's right. One of my fantasy leagues, I traded for him. We need some catches from Brock Bowers. I will take that. So, yeah, I mean, Denver is like, come on. Denver doesn't win that game. It totally is rigged. Jared, no problem, man. Palantir, you're looking to do the same thing with Jared. So what Jared is talking about in the chat, he said, thanks for the feedback on Palantir. We discussed, excuse me, different ways to do different calendar call spreads. Again, a lot of you guys know that I talk about calendar call spreads, and it's essentially a cheap way to get long upside, right, by using to offsetting your basis. One of the things I will say is that I typically don't do as many after earnings. I usually do them for earnings, be able to take advantage of the upside that's bid for earnings. But I think in certain names, and I think recently, as you've seen some of these big names fall, the Palantirs, the Microsofts, the Metas of the world, arguably I think it's pretty interesting to do them now in case they bounce back. The question is, how much ground do you think they can cover in a short amount of time? And by that, what I mean is that, let's look at Palantir. Most recent highs were upwards of, the high was 207, right? Got up to 207, so let's just even call it 210. I got one in for 230. That's pretty far up. Doing 100 to 200 now that it's at 177, I think makes sense. And so we were trying to figure out, okay, well, do you want to do the Jan Dees or do you want the Dees Nove? I think it just really depends on how fast you expect it to recover. I mean, look, this was all undone. Basically, it's dropped $30 in, 4 days, right? So if it's done that in 4 days, maybe it takes 2 weeks to come back, I think. And so you could easily do, there's really not that much of a wrong answer. You could easily do the Dees Nove in this case, right? And this is the real thing that Jared was talking about, because I, like him, I didn't really know how much the Nove 200 call would cost with 15 days to go. This is actually surprisingly more than I thought it would cost. Sometimes this thing would be under $1. It's $30 almost. Let's call it $23 out of the money. You usually wouldn't expect this to have somewhat of a bid. Earlier when we looked at this trade today, it was almost $2 bid. And so that actually made it prudent enough that you could do a Nove Dees. I decided to do a Jan Dees. I think Mikey did a Nove Dees. So we'll see what ends up working. You know what I mean? Donald, what's up, man? Bowers killed you last week? Yeah, I know he did because he bowled out. Dash. And so, yeah, I see you're looking to do them with Dash. Now, did this thing have earnings today? I'm not even sure. Did DoorDash have earnings? Is that what happened here? I didn't really know. Is that what happened? Let's see. News. Again, I've been really caught with news today, guys. Weird. Let's see. Restaurant delivery for. Oh, yeah. So they had earnings yesterday, right? Yeah, wow. So this is another one. Revenue beats estimates driven by higher order frequency, right? It's another one. It's so wild that, it said the revenue beat, it said it beat estimates. Quarterly profit miss? I don't know what happened. Shares dive as new investment plan unnerves investment. They had a new investment plan? Huh. So there's clearly a lot going on there. Again, I just find, so a lot of times I could care less about news, but certain things I find interested in news-wise. Dash is definitely one of them, because I don't know about you, but most of us are out here ordering food like crazy, right? Whether it's DoorDash, whether it's Uber Eats, etc. And the fact that you see a big drop down in shares on an earnings move means something's not going right with the strategy right now. Right now we're back at May prices. This is kind of weird. What was the recent high? Recent high was 285. Yeah, basically 285, huh? So this is one where you could play for those recent highs. I'd probably just play for 250 though. God, these options are wide though. See, I don't love that. 70 cents wide options. It's not a lot. That doesn't sit well with me. And then even here, I mean, there's no real $1 bid to this. So just be careful about doing that one. I mean, I don't love those. I really don't. Just be careful about that. Airbnb, you know what? I'm really not playing many earnings going forward. I think I'm done with the earnings game. It just hasn't worked for me. Most of the positions that I have left over are probably from earnings. Meta was one of them. Hood was calendar calls. Palantir calendar calls. I did calendar calls on Netflix on earnings. Didn't work. Same thing with Microsoft. I think after a while, you just got to stop beating your head with the drum and just wait until after earnings, see if they drop, and then put the calendar calls on. That's almost seemingly the better play right about now. It seems like those are the better plays for the time being. So I will just wait on Airbnb. It's another basically company that's run as a technology company, even though they're using houses. The app is the thing, right? And so for whatever reason, if this falls on earnings, maybe it's more interesting to play it after earnings than to try and play it ahead of time. That has just not won. I could have saved myself a few do-re-mis here and there if I would have just waited until after earnings on some of these names, the Metas, the Microsofts of the world. So that's how I'm noticing it play out so far. So we got the 200 in there. So yeah, I mean, that has become the new strategy. Wait until after earnings and just play the upside from there. This is another one I need to roll. I forgot in this Meta. I thought I rolled this the other day, but I need to close this out. I'm going to roll this. Meta is another one back to 700. That's about a 10% move. We're going to roll this out to D. We're going to be short D. Right now I'm long. I am long D's and short Nove. We're going to close this. 35. We're going to close that, and we are going to sell D's and buy Nove. We're going to go with the 675s for now. Let's see how much that costs. 675. Well, it's not exactly cheap, but we'll do it. 675 there. We'll do that. Yeah. Yeah. Any thoughts about selling puts in DraftKings? I'm way ahead of you. Matter of fact, too far ahead of you. I already got puts in DraftKings. I've had them on for a little bit. So I have the 32 and I have the 35. Been underwater on this thing as this stock has gotten absolutely served. But that was good news today. So it seemed like something's changing there, right? ESPN had that deal with Penn Gaming, and they closed that deal really early, actually. I think they had another 5 years on that deal. So it ended up being good news for the stock today. Got a little bit of lift. Not as much as you would expect. But, yeah, I already got puts in DraftKings. I'm with you. Obviously, I'm into the idea. I'm already doing it. What else does have earnings today? I'm just curious, though. Not that I need to play any, but I know somebody asked about Celsius earlier today, CELH. Somebody was asking about this. We discussed this early on the show. This is something that really got hammered on earnings. Yeah, man, if it were me, this is a decent short put play, I would say. I would, there's the D's put, 42.5. I mean, this is probably a decent put sale. I don't know. I don't know what they said on earnings, too. And again, it doesn't always matter what they say on earnings. Volatility is more important. But, I mean, if they're saying, like, there's something wrong with the drink market, well, that's a problem. That you don't want to be selling puts into. So just be aware of that. TTD is a name that has always been it used to be a decent mover on earnings. But the way this chart looks, I would play this. I'm not playing it, but I'd probably play it to the downside more than anything. 45. It's always interesting to see if there's something worth doing. 45 strike. I mean, this is an easy play. It's a $5 play. I actually might try this since the stock has sucked so much. 45 strike, doing the 45-40 put diagonal. I can literally get it for, if I can get it for $250, I would play that. That's fair value, right? It's a $5 spread. Halfway in between is $250, so that's fair value. I'll try and get that one. We'll see. That's what I'm doing on that one, TTD. I'm doing downside. IRIN, totally staying away from this name on earnings, but this name is a super volatile one. I would love to see it do something crazy, that's for sure. Why? Well, because I'm not in it, and I feel like it's a crazy name. But a lot of times crazy names like this don't trade crazy on earnings. They trade crazy otherwise. You know what I'm saying? So, other earnings plays. Sound? Yeah, Sound I know about for sure. This is an AI play, right? I don't blame you for playing it to the downside, for sure. I mean, I don't blame you. Mostly I say that because, it's just been open season somewhat on some of the AI plays more recently. There's almost, you can't even almost do a put calendar in here, though. I mean, there's really you're not getting much for selling anything. You might as well just be outright long a put. I mean, the volatility is expensive in here, but doesn't really matter. It's either going to move big or not. So I would just play a whole put when it's only $1.60. It's pretty cheap. You can get the 15 on for $1.60, and that's a Nove. So that's a cheap one to do if you really feel like it's going down. Open has been one of those funny names. Again, when names are under $10, I'll typically just play options outright, like in probably buy. I don't really do much else, really. Airbnb. It is kind of, I do like the big names on earnings. It's not going to lie here. 120. How jacked are the options here? 120. Oh, we're filled on the TTD put calendar. $4 and change. This was the lows of 110. Okay, I'm in. And wait, the spread is $10. Yeah, I'm in. 430. We'll do this. And we're filled. So we just did the 120, 110 put calendar. I mean, can you believe it, folks? We're doing put calendars now. We've always been call calendar people. Now we're doing put calendars. That's all I need to do for earnings, a few names. I haven't really had much been able to fix or clean up today, honestly. Still waiting to get paid on a bunch of different positions. This GDX has been one that I've just been waiting to do something. And I closed a GDXJ strangle earlier today, didn't I? I think I did. Maybe it was just GDX. Oh, never mind. It was GDX. I'm on GDXJ. GDX, I closed the strangle earlier today. The 65.80 strangle in here. It was just time to go. I just feel like these options it was in D's, and these options are kind of wide. They really are. And so this is probably not the best trade to have on. Again, I put this trade on in November initially during the crazy times of gold. Gold has calmed down some. This vol is probably going to come in more, but I just feel like I could do better trades. So I haven't touched it, haven't done anything since then. MP, does MP have earnings? Oh, it does have earnings tonight. Oh, gosh. Well, we're already underwater on a put here by a sizable amount. Boy, this thing has just absolutely gotten rocked. I guess there's really not much else I can do at this point. I mean, there really isn't. And it doesn't really make sense to even sell any upside. I guess we're just going to see it through. At this point, I mean, I'm a shareholder of MP. I mean, at this point, just about. And any lower, it's just going to eventually assign me on the stock, which again I'll be buying stock at the strike minus whatever premium I got in the option. So it is what it is. I'm an owner. I'll be a shareholder at this point. I think I originally sold this for MP. What did I sell this put for? Originally I sold it for $11. So it's essentially $61 that I'm really a shareholder, and now I'm basically $9 lower. That's how you effectively figure that out, right? If I sold it for $11 on the 70 strike, let's just call it $12 for now. That means I'm a shareholder at essentially 58, right? And now it's an additional $6 lower, so I'm basically losing $6. That's kind of how you do it. What do you think about a ZB put ratio spread, 117, 116? ZB, well, ZB has been, it's bounced back today. It's been trending lower. I don't know. I assume you're talking about 117, 116 at the end of Nove. So this one, 117. You said, 117, 116. You mean one of, what kind of ratio spread do you mean? One of these, I assume? Talking about that? I don't know. I really don't. I feel like the trend has been lower in ZB, so I'd be a little scared about selling extra downside in here. The trend has definitely been lower recently, so I'd be a little weary about that. If we really felt the need to do a put spread in here, and you really felt the need to do downside, I know you're trying to take advantage of time, but I would almost go to the 115, 113 put spread. No, that's a debit though. Let's see. Get a credit here. These are all credits. I mean, these are all debits. Weird. Can you get a decent credit in here? Maybe. I'm just trying to find one where you could. I'd be worried about this area right here. Right here is a huge gap area between 116. Essentially, let's say the high here is 115. Between 115 and 117 is a huge gap area. So I'd be a little bit worried about us falling back and erasing this gap that happened at the beginning of September. Just be wary of that. That's what I'm trying to avoid when I'm talking about a trade there. You know what I mean? Let's see. What else do I have? Like I said, I don't have many things that I can close as of now. It's been like that throughout the week. Again, I know I have a decent amount of long delta trades related, and then even some of my directional trades have been, non-directional trades have been hit a little bit too. This natural gas is one that I've had my eye on ever since I put the strangle on. Natural gas has been hanging around the upper end of its range, which doesn't sit well with me. I'm hoping that it starts to calm down a little bit. We'll see. What else? This BE is so annoying. I mean, this thing, it goes down every now and again, but when it goes up bigger. It's a trip. And so I feel like it's getting closer and closer to my upside strike. I'm still trying to determine how I want to handle this thing. What I don't want to do is come in and it's up to 200 somehow. But we're going to hold on. We're going to hold on a little bit. It's funny because there's all these energy names in this space that have really kind of gotten beat up or gone down. I mean, you see some of the other ones, the Oklos of the world and things like that. But BE does not look like that chart. It is hanging in there. And that does not make me feel confident about what's going on in there. I don't like that at all. But there's not really much I can do about it at the moment in time. I'm gonna leave it on. I always seem to keep getting to a point where it gets to be a scratch on the trade. Right now I'm only up $20 on it. And then the next day I come in and then I'm up I'm down like $300-400 on it. So yeah, no, we'll see. I feel like I do have a couple of earnings plays tonight unintentionally. MP earnings, SMR, DraftKings. So I got to keep an eye out for those. Obviously, I just put on Airbnb and TTD. We'll see how those play out. Hopefully they work. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. See ya.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Hey, Tim Knight, and it is chart time. We're having a good day. Ever since last Friday, I've been all hung up on the RTY trend line. And as I made mention last week, we broke it a little bit, finally. And this week, we broke it some more. And then the transformation took place, a state change, if you will, from support to resistance. And yesterday was a strong day. Bulls came rushing back, gobble, 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 all the stocks up. And I did a post on Sloop last night, which basically said, more or less, we better fall tomorrow, because that's what should happen from a charting perspective. Well, we're falling. And that's right on. Everything's red, which is the way I like it. So what would really help is if we fell again tomorrow, because this on-off shtick gets old. And it's funny because we're just a little bit below lifetime highs. And you see all these articles about, how much pain can we take? And when will the president do something? Like, good heavens, bulls are so weak. The ultimate government welfare queen is the equity bull. So it goes down 5% from lifetime highs, and they're shrieking. It's pathetic. But what do you expect? Let's jump into the charts here. So here are the spiders. We have breached support. Now, we happen to be trading exactly at support right now, but the lows of the day have sunk below this breakout level. So everything's working as God intended, because the trend line did a yeoman's job of behaving as resistance here. This was the peak. This was the highest point in the history of the Milky Way galaxy, and then it's edged away from that just a skosh. Hence the aforementioned freaking out bulls. And so, as I say, it would be nice tomorrow to get a little more weakness and really start to get things saucy. One important element of this is semiconductors. The magic of moving trend lines. Okay, older viewers know the drill. Well, you're not old. Just a long time. You're veterans of this program. So I gotta make sure those are more or less correct. Anywho, I did this before the show, but there we have it. Okay, roughly speaking. So the semiconductor index, the ETF, has done a couple of interesting things. It was so strong here, which was its lifetime high, that it sneaked a little bit above resistance. And it's so weak today that it sneaked a little bit below support. So nothing definitive. Over the past 7 trading days, we've basically banged from one extreme to another, although it's not much of a bang, but it is from trend line to trend line with an excess in each direction. There's no clear reason that's been stated as to why the market's weak today. I have a hunch that Jensen Huang's brilliant statement that China's going to beat the US in AI has something to do with it, which would be the rough equivalent of Tim Cook standing on top of the Empire State Building and saying, who needs any more iPhones? Which is true. But yeah, it's odd statement to make. We'll get back to him in just a moment, like literally a moment. Bang, let's talk about NVIDIA. So there's NVIDIA right there. This was the lifetime high. So we had this darling little basing pattern here, and it went swoop on this day. It went zipping above its former lifetime high. So swoop, and then one more day of swoopiness, and it peaked here. Since then, let's review. Red, 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 red. What was that? 7 red days in a row. And so every single day, it opens relatively strong and closes relatively weak. And so we've undone the aforementioned swoop. And so the absolute foundation for this risible bull market we've been living through has been Jensen Huang and NVIDIA, and the ceaseless deals between the handful of your OpenAIs and your XAIs and your NVIDIAs and your Oracles, all just sort of self-dealing among each other and generating excitement, but the excitement's starting to kind of get lost in the noise. So ain't working anymore. And so NVIDIA is still very valuable, still had an amazing year, but in just a few days we've sunk from way over 200 down back to the 190 zone. And broadly speaking, semiconductor weakness and video weakness, it's flowing through to the cubes. The cubes, like the spider, have pierced just a little bit its own breakout. This is the gap right here. This is the gap that took place before this push higher, and we pierced it a little bit. So we're just getting these modest amounts, another moving trend line, these modest amounts of weakness. What I will say, though, is that almost all the uptrends are broken. One by one, they've been breaking. Ironically, the cubes was the first to break. But one by one, like the spider broke either yesterday or today, probably today, I guess, because yesterday was strong. Almost every one. I think the diamonds are holding on for dear life at this point. I think they haven't quite broken the uptrend yet. And of course, all the trend lines are different. The angles are different, but the anchor points tend to be the same. And so bit by bit, sector by sector, index by index, we have been seeing damage taking place because, if you've been watching me for a while, I guess I would characterize my own style of charting. It's not indicators and not stochastics and RSI and MACD and SMAs and all of this. It's boring. God, dull. I've been doing this for decades. I never touch that stuff. Yawn. I'm not going to bore you with that. It's just a bunch of razzle dazzle. I don't do jazz hands here. This is sort of a physical style of charting. It's not anthropomorphizing, doesn't quite cut it. It's more a way of taking these images and visualizing them as literally concrete objects that are subject to physics. And that's why I'm hung up on patterns and cycles and horizontals and trend lines, things of that nature. See, when do things break? And before they break, when do they start to take on some damage? And so that's what we're seeing here by way of the little chip, chip, chip at those levels of support. But as I say, the diamonds perfectly tagged their support today, right there, bang. You can see all the way back. Here is the April 7 bottom. And we zoom in, zoom in, zoom in, and there is very little sunshine between today's low and that trend line. One more decent down day would do the trick, but the diamond is one of the few survivors out there. The emerging markets, like so, also haven't broke their trend line. That's still maintained. I'm being kind of generous anchoring it to this big plunge. I think that's fair. That was the tariffs on China plunge. We're getting quite close to a break, but it hasn't quite happened yet. Now, over in some individual stocks, some interesting things going on. CarMax, big wipeout there, about a 25% drop today alone. I guess the kind of the subprime for cars, as it were, showing some strain. If you've seen the same charts I have, delinquencies are exploding everywhere. Whether you're talking about car loans, home loans, credit cards, certainly student loans, because student loans were in forbearance for years. And so everybody was on time because there was no time. You just could ignore it. Now that that's stopped, it's gone from nothing to the biggest delinquency percentage of any class of debt. But over in Carland, those who elect to borrow money to purchase a rapidly depreciating asset aren't doing so well. And so here we have CarMax just plunge-a-rooney. Really, really something to behold. I wish I was shorted. I'm not. I am cheerfully short Carvana, though, which is in the same zip code as that. And it's doing okay. It's down another 4.5%. And I'm hanging on to this one for the long run. I'd love to see this just for months, go lower. So hopefully that's a keeper. Palantir has had an interesting week. Here on Monday, lifetime high, Monday after hours, got up to 222. It's down to 177 now. So that's what, $50 or so drop in the past 4 days. Not even 4 days. It's Monday afternoon after the close. Big drop today, down 5.5%. You may have read that Dr. Michael Burry, who's right here in the Bay Area and famous because of The Big Short, took on a huge position against a handful of firms, most notably Palantir. The majority of his bearish position, God bless him, is against Alex Karp with the crazy hair. I guess that means he's really smart, and Palantir. So Dr. Burry's doing just fine, and I hope he does a lot finer. This is a failed bullish breakout. Palantir has been cited many times as the most overvalued company in history by any measure, and it's starting to show some signs of strain here. These poor things. My hand to God. Okay, we'll just get bye-bye to these. But yeah, that is Palantir for you, PLTR. ELF, I haven't talked about ELF in a long time. ELF on the shelf, ELF Beauty, ELF Beauty, just a wipeout on this one. This is a bit of a mess. I had traded this one earlier this year. Even at this great distance, you can see the makings of a pretty decent top, but it got messy here. You can see it blew higher, got deep into the pattern, just a big fat mess. But ultimately, this thing did sour quite badly, so that's ELF. Axon had a huge day yesterday, and I got back in again this morning. So I shorted it last week. It collapsed Tuesday night, and I covered lickety-split yesterday morning. And it went up and up and up and up. It still fell, but it really trimmed its drop. This morning, I got back in. Shame on me. I should have gotten in yesterday afternoon late, but didn't bother. So I got in at a worse price, but it's still profitable again because, as you can see, it's just this big red bar. So back into Axon, as I mentioned in the Liz and Jenny show yesterday, and as with CarMax, hoping that's a nice long hold. Another beneficiary of the new White House from a year ago, the new election, was Geo. So if you'll recall, right after the election results, people started talking about what sectors will benefit the most from this new administration. Well, prisons, private prisons, and tasers, and basically, let's tase and incarcerate everybody. And so the private prisons did great. They exploded higher. Axon did great. Basically anything painful did really well. Not so anymore. So here a year later, here's Geo Group. It's kind of fascinating. Look at this. This, I believe, was election day, Tuesday. This was after the results. So you can see that once the results were in, it's like, yay, imprison everybody. And it just did a great job. And it peaked on Inauguration Day. just after. Inauguration Day was not open to the market, but January 21, it peaked. So it's kind of fascinating. So Election Day here, Inauguration Day here, fantastic return, huge move higher. Even Stephen Miller was rumored to have smiled. But since then, blah, 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 and down it goes. So it has come geometrically, not accurately, but full circle. We have completely undone the entirety of the post-election rally on Geo. So I don't know. Prisoners not as lucrative as they thought, I suppose. We're quickly running out of time. Just real quick. So I've got 27 short, actually no, I've got 30. I'm up to 30 short positions now. A few of them, I have just moments, so I'll just bang through just a handful real quick. AMD looking good, down 6.5% today. ASTS down almost another 6%. Dollar Tree reversing away, about a 2.75% drop on that one. Intel down over 2% with a very pretty gap. A lot of good gaps out there. Kohl's KSS down about 3.25%. And yesterday I made mention of shorting Oklo, OKLO, a scrumptious little head and shoulders pattern on this one, and we are breaking the neckline there. Sounds quite violent, but this is the nuclear power company that I believe Sam Altman is the chair of. So yeah, OKLO, new short for me. On semiconductor, ON, also down about 2%. And you know what? I'm not short this, but I just wanted a tip of the hat to Michael Saylor here. Strategy down again, pretty hard, 6.5%. Its price now is the same as it was in March 2000, over 25 years ago. So if you had bought all this March 2000, held on to this day, you would have nothing except lots of inflation since then. So yeah, 25 plus years of zilch. Bottom of the hour coming up fast. I guess we'll just close with the RTY. And here's the thing. We've broken below the wedge. We've broken below the former lifetime high, like so, back in December. Here's the key. Can we drop tomorrow? That's the key right there. Down, up, down, range bound. We got to break that nonsense to get some action, Jackson. So we got to break below that. Then things can really start cooking. I have no idea if it's going to happen or not, but hope springs eternal in the bearish breast. So, anywho, I will see you tomorrow and we'll wrap up this week. Bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas.
Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend, and it's a little bit of a bloodbath here. We've got E-mini S&P 500 futures down 56. They got as low as 67.33, so about 30 points lower from here. NASDAQ down about 400, a little over 1.5%. It's the weakest of the group, along with the Russell down 37. You got the Dow down 300 or 290. Oil catching a little bit of a bid. It was weaker this morning. It's now hovering right about 60. We're at 59.64, got as low as 58.83, basically unchanged on the session. Volatility has picked up a little bit, /VX 1980. You've got the VIX itself at 1914. Vol futures did get into the 20 handle for a short second. Bonds up almost a full point here. They're up 26 ticks off the lows that we set yesterday. You've got gold basically unchanged. It was above 4,000 earlier this morning. Kind of sold off with the rest of the basically assets in general. Silver down 9 cents. Bitcoin as well, taking it on the chin back to the lows from yesterday. Down 2,800 on the futures. Spot down 1,700. Back to the 100K battlegrounds for the cryptocurrency. Ethereum down 76 as well. 3,300 and change, down 2%.
Yeah, kind of a crazy market here, but bouncing off the lows, the 50-point sell-off doesn't tell the whole story because we were down 80, 90 earlier today. But yeah, placed a bunch of new trades from today.
Cool.
We did the first show from the SIBO floor.
Awesome.
That was epic.
That was really cool.
And it was during the heat of the market sell-off too, so there was a lot of yelling,
hooting and hollering.
Yeah, it was good. It was fun.
Hand signals getting thrown around.
Yeah. Oh, yeah.
Cool.
I need to figure out how it all works. Like the system that's in place there.
The matrix.
The matrix.
That's fair.
Because it's like, it'll be quiet, and then some order comes through, and you just hear just everyone trying to get that order.
Well, because that's how it goes now, because the pit itself only takes orders of a certain size. So I think it has to be, I don't know what that parameter is. But in the SPX pit, it's not like they're taking, our one lot Johnny little 0-day order. That's nobody's competing for that. But when these big orders come in, that's where they kind of get their hands in it.
Makes sense.
So,
but yeah, from the follow page, got a handful of new trades today. So I put on 2 SPX trades in honor of the SIBO. So I did a 1-day going into tomorrow Iron Condor. I did the 66.90, 66.85 short put spread, and then the 6800, 6805 call spread.
Okay.
That I did for $2, risking 3. Cookie cutter setup with a little bullish bias, which is working out now. And then I did a longer term short put spread to finance a call spread. So I sold the 6600, 6590, 10-point wide put spread in December.
to finance the 6,800, 6,805 long call spread in the same cycle. I bought that for 30 cents.
AKA the stupid.
The stupid. But right now it's the smart. As we are up like 35 points from when I placed that. But
sure.
30-cent debit is essentially a credit. Like, I don't see it as a debit because those options themselves are $13,000 options.
Yeah, they're gonna hold value.
Yeah. So we'll see if it works out. If we get a 50-point rally in the next couple days from here, it'll be a $150 winner, something like that. And then we had some trades from the YouTube chat.
Nice.
So I put on a Palantir 200 strike calendar spread. So I bought the December, sold the November.
Gad was looking at that for trades from the research team this morning as well.
Yeah.
I think he did the 230 he was looking at.
Yeah. Bought a micro crude contract.
There you go.
At 59.05. And then I bought a Celsius.
Wow.
Call diagonal spread. Long January, short December, 45.50.
I haven't looked at that in some time. $16. Ooh.
Yeah. So just stepping in front of that train with a defined risk trade.
Yeah, that's a tough one. Do I do like a little put or something here? Short put? What'd you do?
The 45.50 call diagonal spread, long January, short December.
I think that's probably the way to do this, to take off some of that tail risk.
Yeah.
What'd you do that at?
250. All right. 259. But yeah.
It's marked a little lower here, but.
Yeah, someone was looking at a short put spread or a short put in December, and it's just, I don't see a reason to do that.
When you can risk $200 for the same upside.
Yeah, exactly. And you're seeing a 16-point meltdown today, and implied volatility, although it's a little bit elevated from the crush that you might expect, it's still not representative of what you're seeing today. This is 3 times the implied move of December that we're seeing today. So
in Celsius, you're talking.
Exactly. So I think just sticking with defined risk, diagonal spread, I think makes a lot of sense.
For sure. I was also very active today, closed a couple earnings trades, mostly a scratch on the Qualcomm position, but I also had the one that I took off earlier in the day yesterday. Hood, I closed the crab portion and rolled into like a diagonal spread. That one's like $100 loser or something like that. I got long like some NVIDIA today into this move. NVIDIA at like 190-ish here. Has given up a pretty decent sized move here. A lot of these stocks, if you've been kind of itching to get some long delta here, Amazon down a handful. Really, Google and Apple are the ones kind of bucking the trends today. Google up small, Apple up small as well. I actually put on some short delta in Apple as kind of a mean reversion type thought of like, you got your NVIDIAs of the world and your Tesla's off $14, $15.
Microsoft's crazy.
Microsoft is well below 500. Like those have kind of had a nice little move lower. Apple has been pretty strong, and so figure maybe you take a little bit of a short delta play there. If you've been looking for short delta, it's hard to be short Microsoft into the hole today. I'd rather do something in Apple to kind of get that short delta, and I do that via the diagonal spreads, which have been working out nicely. I had some leftover long puts from put diagonals and like the Qs and SPY that have helped hedge some of this downside move, but it's a tough move overall. Like, if you lean mostly long, today's a tough day, obviously.
Yeah.
You should expect to have many a day like this.
Yeah. But if you are looking for new positions, there are plenty.
Yeah.
With a lot of stocks down over 10 points today.
And today's a good day if you have been holding some short delta in, let's say AMD, for example, after earnings, and you've been holding short delta into November, in the November monthly expiration. You got a pop in volatility today. You got a nice down move in a lot of the big name, most liquid, most traded stocks that we focus on. That combination lends itself towards rolling. So if you've been holding short delta and now you're neutral, or maybe you have less short delta now, into this pop in volatility and the directional move, it's probably an interesting point to, close and roll to something in December. You can adjust the strikes, massage whatever delta you want to have in those positions. But at this point, it's probably a perfect spot to start considering that.
Yeah. Speaking of considering trades, fast market tomorrow morning
with us.
Yes, indeed.
Reunited at last.
Yeah, it'll be a good time. Bright and early.
Yes.
Hopefully we get some crazy markets. Two-sided action again tomorrow. But yeah, tastylive.com/fast market. I just put a link in the YouTube chat. If you want to just click on that, you can throw in your trade ideas, and we will cover them tomorrow.
Yes, for sure. Also, Tom and Tony will be doing their last hurrah together at Antone's nightclub in Austin, Texas tomorrow. So if you're around there, I think a couple spots have opened up. Go and sign up for that, tastylive.com/events.
Austin's a fine spot to be right now.
It is a fine
nice warm weather.
Yes.
Great barbecue.
Yes. Yes.
But yeah, that will be a good one. And again, hopefully we get some crazy moves because they'll be trading them live.
Yes. There are a couple names that have earnings tomorrow. TTD is one of them. You have IREN, which I know a lot of people have been trading. It's one of the more meme type stocks there. You have SoundHound, which I have some long delta in. I have a synthetic stock position that was from a What's Your Assumption trade the other day. You got an Open Door in there. Our very own DraftKings is after the close. MP, which is MP Materials. That's one of the Trump kind of basket stocks. That one's gotten killed recently. Airbnb is reporting as well. You got SMR, which is a trade that stock that you've been trading a lot of. Affirm is in there. XYZ, which is Square, aka Block, that is reporting earnings as well. So definitely have some names on the board here to look at.
I actually have a stupid in DraftKings right now. So I have the 30 put in December to finance the 40-42 call spread. And I routed that for a $200 credit.
Okay.
So we're sitting right at the break even. But if we get any kind of upside move tomorrow, that will be, or after the close today, that will be welcome. I can only assume that the ESPN deal with DraftKings is going to be a good thing for them.
You would think so.
But who knows?
E-mini's down 63, selling off a bit here as we get into the last 15 minutes of the session. NASDAQ down 430. How do you feel about this dip? What does this dip give you?
It doesn't make me feel much. I mean, I think that's a product of trading for 10 years, and also
I think that's a good point.
But really, like just looking at implied volatility, I always just pull up implied volatility, specifically the VIX futures. And this morning it was a little cloudier. We actually went flat between the X and the Z contract, but that has come in a little bit. I mean, we're still getting a bid. Don't get me wrong, but we're still in contango in the Z and the F to the G to the H to the J of next year. So it's like there's the curve is still contango, which tells me we're going to need another like 200 point sell off in the E-minis to see that flatten out and go into backwardation, and that's when all bets are off. But as of now, I'm just buying the dip in small ways still.
Yes, I hear you. I think it feels kind of the same as this is kind of just like a little bit of a washout, deleveraging, as the peeps would say. You got volatility futures sitting at 20 now. I just put on a short IBM position, a put diagonal spread in IBM. It's up $6 today. That's in the craziness of that chart is one for the I mean, consider like you had a down move earlier this week. It got down to the mid 290s. We're back to 315. So I took a little short delta there as a play. I find it hard to get short the stuff that's getting killed today.
Yeah.
Like I feel like I have a better shot at something that's kind of has relative strength today. Maybe if the market continues lower, I would think that there's something to squeeze out of those, but who knows here.
It's the same story as Microsoft. Yesterday on Overtime, we were talking about Microsoft specifically because Microsoft was down 6 or 7 points yesterday while the NASDAQ was up 250.
Yeah.
And the E-minis were up 30. And I'm like, if Microsoft can't catch a bid in a green market, what's going to happen in a red market? And sure enough, it's down 10 points into this pretty sizable sell-off here in the E-minis and NASDAQ. So to your point, I think if you look at Apple and Google and IBM, those are three that are up today in this sell-off.
Yeah.
So I think, to your point, I think these are the ones that I would target as a short. Still defined risk, but if you're trying to play it for a bearish trade, I think these are the ones that make sense.
Yes. A lot of the stocks that are kind of holding strong today, I know we mentioned IBM and Apple and Google, but a lot of the like healthcare related names, some of the bank names, you've got Eli Lilly in here, you've got Biogen, Gilead, you have XOM for kind of oil names. A lot of these have been kind of dogs recently, but that's kind of been the bid today. You got like John Deere in there. It really is a broad-based tech bludgeoning today.
Yeah.
In the
Meta down 17 points.
Meta is a freaking pig. That is.
I should have stuck to the short the Zuck strategy.
Yeah, we got Zuck sucked us back in. Unfortunate.
Some people in the YouTube chat looking at Chipotle.
Oh God,
Anything to do there?
That's another stock that I'm long shares via short put after earnings.
Yeah.
This stock stinks.
You want to hear something funny?
What?
On my positions tab, I've had stocks unchecked for the last 6 months.
And you just checked in and you own shares of Chipotle?
Not Chipotle, but I actually closed out of shares. I was like, why is my P&L higher than what I'm seeing?
Yeah.
And it was because yesterday I closed out of Rivian shares. Because Rivian, I had 100 shares of Rivian.
Nice.
And I didn't even have them showing on my positions tab. But I sold a 15 strike. I sold a 15 strike put in Rivian back in September.
Yeah.
And that was for $1.40. And then sure enough, you got the pop from earnings.
Do you feel bad about that? Do you want to give me half?
Not really.
That's fair.
Not really. But no, I sold the put and then I closed the shares for a 60-cent winner. So the net package was a $200 winner.
Yeah. And you just forgot about it.
I forgot about it.
Literally just let it sit and
literally forgot about it.
Those still factor into your P&L day to day.
Oh,
so you've been seeing that.
Yeah.
For
just in the background. But I have 100 shares of Snapchat too.
Uh-huh.
So I have 100 shares of Snapchat from a short put as well. This was actually a call ratio spread, and I was assigned on the 10 strike call.
Okay.
So I own 100 shares at 10. So yesterday when it popped, I was like, ooh, I can probably get out of these. But it's pretty close. It's pretty close here.
I also just took a downside shot in Affirm, the buy now, pay never.
Yeah.
I figure that this is probably
buy now, pay never.
Yeah, this is probably a good spot to do. I did the 65.60 December, and then in the weekly for the short, that one will pop up on the follow page shortly here. E-mini's down 72 here going into the last 10 minutes. Remember the 10-minute ramp?
Yeah.
We haven't really had the 10-minute ramp in a couple years, I feel like.
I feel like it's been there.
Has it? It hasn't been as consistent.
Pull up the E-mini's 1 minute chart.
The 2016 to 2018 time frame where we sat
every day,
a 2-point range all day, and then in the last 10 minutes they rallied about 8 handles.
Yeah,
and that was the day, was 10 points.
Yeah,
10-point range. That was incredible. Now we're getting 70-point face rippers in both directions. It's amazing.
Yeah. But yeah, I mean, I think it makes sense from a end of the day risk taking, risk off. So I think if people are shorting this market, I wouldn't be surprised to see a little bit of a bid into the close. We're seeing it right now.
There you go.
Catching a bid. Here we go.
I wouldn't call it. We got 5 points.
But yeah, I mean, the last half hour of trading, I think it would lean bullish anyways.
How do you feel about Bitcoin here?
I love it. I mean, I don't love it for people that were holding it, but I love it as a way to get in.
Yeah.
At 100K or sub 100K. I mean, if you look at a chart of IBIT or a continuous Bitcoin chart, you can see it's gone below 100K 1, 2, 3, 4, 5 times since May. And all of those are big green bars to the upside. So I think there is some kind of psychological like
100K.
FOMO. Like if you get under 100K, now it's a discount because it's been trading between 110 and 125 for the last couple months. So I think there's a natural bid at 100K or sub 100K, and we're right there.
Okay.
Yeah.
I feel that too.
And I mean, at the end of the day, this is a 4-month price discount from the highs.
Yes.
Like we haven't gotten to this level except for the last 2 trading days. We haven't been here since June 23rd.
Yeah. That's how I look at it, but it gets painful.
Yeah, but that's where you got to
each
keep
and
the
every
size
day.
small. Yeah. But IBIT, the year-long trade in IBIT, we now basically have a in the money short put.
What's your strike?
There's 65.75.
Okay. So you peel off the 75?
Yeah, or just roll it down to the 65, pick up $1 and call it a day.
But you got a lot of premium in that. You're like $6-7 in the money, and you got what? $20?
$3,000. $2,800. $2,890.
That's great.
Yeah.
So you lean long here.
You know what I'm going to do? I should do.
Just take the call off.
I want to like make it so that I have an even $3,000.
So you want to roll the call down a little bit.
Yeah, a little bit.
Okay. All right.
I mean, the beauty of it is even if you get tested on the upside, you can just buy it back, roll it to January, and turn it back into a string.
All right.
But I'm not going to do that into a sell-off like this. I'll do it into a slight rally. Because right now the call is basically worthless.
So I buy a little NASDAQ here into tomorrow. I didn't even let you talk. I did a little bit right here.
I'm long. I'm synthetically
at 25 to 46. So we're going to start one. I've been scalping it all day, basically for a scratch. And then when they were, up about 200 handles from here, I was like, shoot, why didn't I just hold on to that? I paper handed. Got a little big.
What are you trading? Micro NASDAQ?
Micro NASDAQ, yeah. I'm still a Johnny at heart. But I think really the reason is because it's just not a core part of my trading.
No.
Like being statically long or short futures is just not my game. Like I don't try to guess which way the market is going to go in the next 10, 20, 30 minutes or day. I trade volatility and time at like the diagonal spreads, calendar spreads, crab trades, even doing like the standard short premium. Like that's how I go about trading. I know, these are so small I could leave them on. If the NASDAQ went to zero and we had to start, hunting our food, it wouldn't be a problem.
No, but that's the whole point. I think when you trade in a size to where it doesn't matter to you, that's where you set yourself up for a much easier path to success.
Yes.
Like that's our strategy with Tasty FX positions.
Speaking of, I've had some great ones.
I literally haven't had a losing trade. So I
don't know why we do this option game.
No.
This stuff, you just get massive leverage. You just keep it small.
This account's up 30%, and I've had a position no larger than a 5
I'm
micro
like
lot.
50, 60.
It's ridiculous.
And all I do is listen to G Money, whatever the hell he's talking about. This rate cut, this rate cut.
Speaking of G Money, on his way to Austin, he'll be at the Austin.
Yes. Yeah. It's going to be an all-star.
But no, I think we've had a great successful run with Tasty FX positions, but what have we been doing? We've been trading price extremes, but just buying or shorting them in such a small way to where it literally doesn't matter what happens until the position is profitable.
Yes.
Like that's it. And if it's not profitable, we can hold it because the positions are so small. So going back to your NASDAQ point, like you can buy the dip here, but if we have another 500 point sell off tomorrow and another 500 point sell off the next day, like it doesn't matter.
3, 4, 5 more on.
Yeah, exactly.
Yeah,
Right.
1,000 points, it stinks and it would sting.
Yeah.
But I got one contract on a little Johnny, a little nibble.
And that's what I was talking about that with our show in San Diego with some people that are asking about like the SPX, like selling put in SPX. I'm like, yeah, the whole point of that is to do it so where you're basically cash secured. Like if you have a big enough account to where you can just have it on perpetually, then this doesn't matter. This 2% chop or a 10% sell off or a 20% sell off, it doesn't matter. You're just getting more long on the way down. And all NASDAQ and S&P sell-offs have recovered. It's not like an equity where something can just go out of business. But if you're sized correctly and you believe that over time the markets will recover, then it's a nice strategy to where you can get a more neutral short premium exposure to the markets that tend to have an upward drift over time.
Yeah, we had our third and final series on the 0-day short put spreads in SPX. They've obviously been performing amazingly over the last 2 years. That's really the data set here. E-minis down at the low of the session here, just off the lows, down 78. We're about 10, 15 handles from the low. NASDAQ down 500. You got the Dow down 400 and change. And the Russell down 46. A little bit of a puke here into the close. NASDAQ or oil down 13 cents. 49.47 here. You got volatility futures upticking. They're staying above 20 here. At least it looks like they're going to stay above 20 here into the close. Bonds up 28. You got gold down 4, silver down 19 cents. Bitcoin at the low of the session around 100K. I hope we hold there because look out below. Indeed. I'm just kidding. I don't know if that's fact, but I feel psychologically it is. But I think I'm on your side and on the Ryan Gray side of like 100K is kind of a spot where people are like, oh yeah, I got to get some.
Yeah.
The round number.
Yeah.
E-minis down 81.
If you can get Bitcoin at a 5-figure price, you haven't had that opportunity for 4 months.
Yeah.
It is what it is. But yeah, volatility picking up a little bit here and the market's selling off.
Yes. We did have vol get like, it was only up like 50 or 60 at one point. It seemed like it was going to be like a finishing of the dip buy, but no. Got a little Dikembe.
There's the bell.
There's our bell. A couple of the earnings coming out after the close. I think they're after really. I guess we have we have TTD right now. Let's see if that is moving here. TTD doesn't look like it's out just yet. IREN is another one.
DraftKings.
Yeah, I think DraftKings is a little late. DraftKings is 15 minutes. Yeah, open door 5 minutes after. Airbnb is supposed to be right now. Let's see what that is. Yeah, it doesn't look like any of these are out, but they've been mostly inside, so we'll see if that plays out tomorrow. 67.50 is our mark on the E-minis here on a bloody day today. But we're going to take a quick little 90-second break and come back and do all this over again tomorrow in the morning. Mike and I will be hosting the show as the boys are in Tejas. We're going to take a quick little 90-second break, come back. Ilya and the much-awaited Mr. Chris Vecchio back on the show. So tune in for that. We got overtime next. You're listening to Tasty Live. We'll see you tomorrow.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Oh, I guess I'll start it. You start it. Somebody started.
I didn't see you there. It's Thursday. It's November 6th, 2025. This is Overtime. I'm your host, Chris Vecchio. He's Ilya Spivak. We're here to take you through the rest of this hour. Futures market closes at 5 Eastern, 4 Central. If you're watching on the platform, Tasty Trade, come over to Tasty Live's YouTube channel to join the chat during the conversation. Tell us how today went. Were you short tech stocks? Are you riding down the popping of the AI bubble as many people are saying this is? What about tariffs? Will Trump's tariffs be turned away at the Supreme Court? What does that mean for Treasury yields? Is the Fed going too far? Fed speakers today suggesting that inflation may not be so transitory. All that and more, Ilya. We have to talk about gold and silver. What a ride over the past few weeks as I've been watching from the sidelines. Here are stocks as well. Of course, crypto collapsing. Maybe that's a sign of some more dominoes to fall in the risk space. But Ilya, how have you been? It's been a few weeks since we've last chatted in this format.
Oh, you come at just the right time because all of my Cassandra-like tendencies are being fed here. I'm short crypto, it's falling. I'm short stocks, they're falling. I'm almost concerned now that maybe I need to close some of these positions before it's too good out here.
Too good. Well, you know, there's just so much going on in the market from a bird's eye view of having not actively traded over the past few weeks. Not surprised that the government shutdown isn't necessarily moving the needle for stocks, at least yet. Tomorrow, it looks like the FAA is going to start to ground some flights in regions of the country. United this afternoon announced a 4% reduction in its flights moving forward. That could be problematic, certainly weigh on aggregate demand moving forward, and that could be a reason why the Fed has to cut, but causes stocks to reassess their short-term view. But I also saw the earnings over recent weeks, Ilya. I mean, that's still
They're pretty good.
Surprisingly strong. We're looking at potentially the fourth consecutive quarter with double-digit earnings growth year over year. The last time we saw that was going back to the fourth quarter of 2001.
Mm-hmm.
So as someone who's been
and tech is outperforming by a good mile too.
By a great mile at this point.
Yeah.
So I guess the question is, thinking about the earnings backdrop, if we don't have the tariffs in place, it means that we're going to be running even larger deficits moving forward. Expansionary fiscal policy, expansionary monetary policy. Why is this not a first blush for someone like me who has been playing this game on the long side all year, seeing a return back into that 21-day, 50-day moving average, and not thinking immediately, this is a great time to buy the dip?
I think the fact that you're seeing the price action that you're seeing despite everything you just described is exactly why. Because in bull markets, what happens is the market shrugs off bad news and goes, this is fine, whatever. But in markets that are biased the other way, you shrug off good news. And a couple things there. I mean, first of all, I think, and I sent you this this chart. I think you started the show with the right disclaimer. This is the first time we've spoken in this format in a while. But I was texting with you the other day, and I sent you the weekly chart of ES futures. And it was right at the close of last week, and it was that weekly bar. That was Fed week right there. The gap and the capitulation. And if ever there was a shooting star, I said, this is it. Now, we haven't seen anything like this in the S&P for, years. Now, obviously, this is not the end-all, be-all indicator without confirmation. But this week, we see some confirmation. And it seems to suggest that the markets went into last week with basically three things in mind. There were three pillars upon which everything stood. The earnings were going to be fine. That much worked out. The Trump, Xi, China escalation, de-escalation thing was going to be fine. That much worked out. And the Fed was going to be on autopilot for 2 more cuts. That part did not work out. And so last week, there was a clear dividing line where we went into the week going, hey, everything's fine, gap higher. The Trump Xi thing is a rubber stamping exercise. Besson's already hashed everything out in Malaysia. It's going to be cool, man. Fine. And then the Fed comes out, and even the statement's fine. The Fed's kind of annoyed that there's no data, but fine, whatever. They did the cut. They're a little annoyed. Then Powell comes out and throws a grenade into the whole thing. And the rest of the week is different from the first half. Now, what changes this week? Anything worse on the China thing? No. Anything worse on even the Fed policy expectations? No. Since that Fed change, we've really kind of hung out at the same thing. Before it was about 90-10, maybe 95-5 in favor of a December cut. Now it's like 60-40, 70-30, something in between there. But generally that happened on Fed Day and hasn't really moved since. But if the markets were priced for perfection going into last week and perfection they didn't get, now they're just liquidating. Because I saw what the Fed did was basically tell everybody, you don't live in the world you thought.
Well, I saw some of the comments here, and I'm appreciative of people welcoming me back. They say that Qs are only up about 6% since Chris went on paternity leave. That's the NASDAQ. Not everything is up in that same form and fashion. In fact, I'm looking at the Russell here. The Russell's trading at 24.27, September 15th, when I took leave. It closed at 24.25. So it's up 0.1% in between the sessions when I, would have been on the show on September 15th. The NASDAQ's stronger, but there's something about the underlying state of the economy right now that if it's not for tech, you're looking at the equal weighted stuff start to underperform the market cap weighted stuff, which seems a little unhealthy.
Bitcoin has looked a lot like this. It's looked a lot like RSP. It's looked a lot like QQQE.
Bitcoin is the most concerning chart.
I dusted off those things in your honor as we were digging around to see what Bitcoin was doing. And indeed, those equal weighted ETFs are telling you something is wrong with underlying risk sentiment, which is what Bitcoin would have you think.
There's a great program we did a few years ago with Andy Constant, who goes by Damp Spring on Twitter, and Victor Jones, where we talked about how you move along the risk spectrum. Basically, how do you get to a Lamborghini level of risk tolerance? And so crypto is the reach. So crypto tends to lead in a bottoming effort. Crypto is going to be the first thing to bounce because people are going to try to grab some stuff. It's going to be the first thing to top because people are going to jettison it. And I have to say, of all the things that have surprised me at looking at charts coming back into the show, crypto being as soft as it is, despite the fact the Fed's delivering on its cuts, despite the fact that the government is still pumping all this money, despite the fact that the tariffs may go away, which will mean even larger deficits moving forward and more spending power for American consumers, which ostensibly could mean taking a few extra bucks, and you got to try to beat inflation, right? So why not put it into the crypto casino? That's high convexity. I'm shocked that we're back to 101,000. I thought we'd at least be near 112, 115, given what's been going on in the NASDAQ and the S&P. So as a bear, I assume that you look at this and you go, oh, this is just delightful.
I mean, I've been short. I have a put vertical in IBIT, and I'm writing this thing down. It's working. This is one of the many kind of risk sentiment negative things I've got on at this point. And by the way, not everything I have on is risk sentiment negative. For example, EWZ is something I've been holding all year. It's surging. And I didn't really intend for it to be a risk on position. It was more like adjacent to what gold is, which is a multipolarity idea. This idea that if the US and China are going to remain at some degree of odds, and China wants to build out its own payment system and increasingly kind of try to neuter US economic warfare by decoupling more and more things, or at least having backup systems for more and more things, then the number one exporter of food to China, now that the US has been diminished, Brazil, and a huge exporter of all kinds of other things to China, might benefit. So the same way gold might be a pass-through between the spheres rather than really a foil for the dollar or a foil for yields, those relationships haven't really been working. But instead, gold has looked more like multipolarity on, multipolarity off kind of a thing. Because that asset seems to have a lot of that story already there, started to look around and see kind of what other assets exist in this universe. And sort of EWZ has been that idea really for months now. So I'm not strictly risk off here. I didn't mean EWZ to be risk on exposure. I'm not bullish on risk. But hey-o. So for now...
I feel like I need to channel the energy of our company's founder here. Mm-hmm. And say you can't tell me that you're not bearish because you're long Brazilian stocks.
No, I'm bearish.
That doesn't count.
Oh, no, I'm bearish. But as these Brazilian stocks go up, they start to eat up more and more of what matters in the portfolio. So
okay, so I want to gauge the chat here, right? So we're working through the things. What have I missed over the past several weeks while I was out? Yeah. Saw a comment here in the chat. Be nice to get paternity leave when you work from home. Hey, work for a great company like the one that we do, Ilya. That's the answer to that solution. Because IG and Tasty have been very generous with me, and I'm very grateful for that. But to that point, Ilya, I'm curious what the chat thinks. What have been the biggest stories that we've missed? Splendid in the chat says October 9th killed the Bitcoin vibes. Can't put meaningful size on anymore. That's really interesting to me. And you really go back to the middle of October, you see that gold peaks out there too. So for the untrained eye, right, everything I've been doing has been in the follow account here, so people can see when I got in and out of gold. And quite frankly, I haven't traded gold over the past few weeks on the follow page.
Yeah,
I'm looking at this now, and sitting back at the 1 month moving average, the thing had gotten away from us. You were in a place where we were in that 5 to 7% above our 1 month and percolating up there.
Yeah.
That's always been long in the tooth. Are you a dip buyer down here, or is this latest chill in the US-China trade relations, trade war, is that enough to perhaps fling us back into a mindset of similar to what we were doing after April, where the gains really weren't, we got off the highs, we didn't really give them up, but we weren't staying at the highs anymore. And this feels like this may have been blow-offy, and now we're due for some more chop. Are we about to relive the summer months in gold and silver? I ask because I don't want to waste all the premium this time around.
So my playbook has been very similar. So I thought that maybe that's something like what we're doing. And so what I want is, on the way down, bearish exposure, but bearish exposure that's short vol. So really what I'm looking for, much more than a concerted sell-off in that exposure, is vol contraction. And as we've talked about before, and we've both pointed out, gold is one of these weird animals where vol expands on the way up, vol contracts on the way down, unlike stocks, where obviously it's the other way around. So when we had that sort of lull in the summer, I was basically either short puts or short calls, depending on where we were, near which extreme of the range. And whenever a price action opportunity presented itself, I would be directional, but short vol directional, because it looked like the market was just oscillating. That's sort of what I started doing here. I then discovered that 1 ounce gold futures exist on our platform, whereby one could have the kind of sized exposure where, even smaller than this, /1OZ, whereby the margin is only about $200 odd, and you could trade this outright, like M6E or M6A or something like this. And so as it was going down, I added a little bit of a kicker selling one of these contracts. So I'm a little bit short. I do want to get back long. I do think the trend is up. I think we might have a little bit of a deeper pullback. We'll see what happens in this digestion. Right now, it looks like consolidation in a down move. If it gets back up over its range top, I'm flipping right over.
I'm trying to determine right now whether or not it's a good time to put back on this gold and silver exposure. It took a bunch off of it in October. Silver, the 42-43 call spreads that were put on in July, those turned out just beautifully. Although exiting the position in mid-October was a bit of a nightmare because just the liquidity around those strikes was so thin. But it was a really good run. And after that pullback, I can't help but think it's time to start chewing on a small position again, a little nibble here or there. I wasn't able to get it executed today in the market because apparently no one wants to sell me silver calls, given the track record we've had here recently. But at 47 DTE for the December 23rd expiry, I'm thinking that the 50.5 call spread is something that should be entertained all year long, as long as we've been in these uptrends, right? Hopefully we're not going back into the summer slump where the iron condors were the best bet. Although if you look at the volatility profiles coming off the recent highs, we didn't have that spike in volatility like we did in April, May. So it's not like playing the iron condor here short is necessarily efficacious because the IVRs you're looking at 28.1, that's nothing in silver. That's nothing in gold. So if we're going to stay below,
that's not a whole lot of juice at all.
No. So even something like I want to be bullish, so short put spread, I don't know about that. Sticking with old familiar here, risking, 1 to make 2.5 at basically a 34% probability of profit. It's good enough for me to ride out over the next few weeks. I'm thinking about the technicals here in particular, where this all needs to be redrawn. But if this is a head and shoulders pattern, we're not going to know it until we're below about 45.5 in the SIZ5 contract. And as long as we're holding 45.5 in the SIZ5 contract, these pullbacks could be short-term buying opportunities. And I would say a short-term as left shoulder head, right shouldery that could be on our 4-hour time frame, as a bull, I have a left shoulder head, right shoulder to sell you, an inverted head and shoulder pattern that is playing out down here. I'm going to look at it like this. Okay. There's your left shoulder head, right shoulder. And guess what? It comes after the completion of the topping pattern on our 4-hour time frame that is otherwise completed with the move down on October 28th. So we had our impulse correction lower in silver. I'm partial to thinking from a technical perspective, something similar has happened in gold, although I'd want to see 40, 50 cleared out to the top side first.
Yeah, you need that range to clear for me. You clear that range, I'm with you.
So that's like my trigger tomorrow as we look into the market. I'm going to be keeping an eye about 40, 50, 40, 55 here in gold.
Right there. Mm-hmm.
But for silver, it already feels like this is something that's pretty close to being nibbling on. Silver has been very good to me this year. So I'm willing to take a little bit more risk right now and get in early. This is technically not a valid move unless you're back to, like, we'll call it 48.5 or 49 for a neckline break.
Mm-hmm.
But I think it's worth putting some chips here because it was such a dramatic fallout. And now consolidation time has passed. I just have such a hard time, Ilya, thinking that a world in which the Fed has cut rates as much as it has, if the tariffs are ruled illegal and are reconstituted in some form or fashion under like Section 230 or whatever, away from IEPA, it's still going to be larger deficits and looser monetary policy. And like that's been the guiding principle for all of 2024 and 2025. So why get off that train? Logically, it might still work.
It might. This is actually a key question for you as our U.S. politics whisperer. Let's say that the IEPA.
We're back in.
There it goes. It's filled. Let's say the IEPA tariffs get overturned. Obviously, and by the way, it looks like they might. The Wall Street Journal did a great story saying on their reckoning, it's about 6 on the court that are generally skeptical of these tariffs.
I'm having fun at fraternity leaves. So I listened to Gorsuch, Barrett, and the various justices. Kavanaugh, just thinking like those are the 3 ones that are going to be the most swingy. And they did not seem like they were buying whatever the administration was selling. And the administration had to concede in their argument that tariffs are indeed a tax. They're not a regulatory lever. They're a tax.
Yes.
So now we're all on the same page now, which is great.
I'm glad we finally agree. I'm glad we finally agree that it's a tax. So let's say they can this thing. Obviously, the president has spent inordinate political capital backing this policy. So he, as you just alluded, is going to probably look for other ways to go and do this. How long is it going to take him to find it? And can he find it? Do the ways exist? Now, in my understanding, there are ways.
Section 232 of the 1962 Act and Section 301 of the, if I can't remember this off the top of my head, I bet you there's a trade policy expert in the Trump administration that knows these things better than I do.
I had this written down, and I just don't remember it currently. But yes, I mean, obviously, there exist tariffs already.
They could.
It's going to be almost aluminum tariffs.
Within the next day. They're going to get put on in a more limited fashion. I think that's why over the recent months you had seen, instead of like we're doing aluminum, it was like we're doing things related to specific furniture. Yeah. Because those are defensible under Section 232 or 301.
Yes, because because if you do it for a good or for a sector, it's a different set of laws. It's not a national emergency. The problem is you have to prove those.
Which requires studies. Investigations. And those usually go nowhere. I think the more, Trump saying that the tariffs are instrumental to the country's vibrancy, effectively in the Supreme Court argument, that without the tariffs, the country is dead. It's a unique argument. I don't think it's valid.
It's not a legal argument. It's too subjective.
Right. So let's say tomorrow that the tariffs are gone. The administration could announce that they want to go via the 232 or 301 routes immediately, but the investigations aren't going to take weeks. You're talking about a lot of the tariffs being kicked into the new year.
Right.
As like, okay, we're going to talk about this in February.
Yeah, like we'll see you later.
Like this is not today's problem or tomorrow's problem or this quarter's problem. It's going to be a problem for late first quarter now. So tariff can gets kicked again. But that's still a world. But the other
that's
is
actually very bullish then, right? Because if the outcome here is the president comes out and waves his fist and goes, rah, 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 we're going to get these things back. Just now, everybody's gearing up. Lutnick is out there burning the midnight oil. We're going to do these investigations. Lutnick's not going to sleep until this thing is done. Okay. And then everybody's going to forget about it.
I feel much
nobody
better.
else is going to say anything else. And then periodically the tariffs will come up and they go, yeah, we're doing the investigations. But the markets have also just spent 7 months benchmarking the current regime. They've finally digested it. What happens when you throw a grenade in it and you're back into uncertainty along the lines of February, March? We know how that worked out.
I don't think we go back there because the market's assessment since February, March, at least for stocks, has been that this is all nonsense. And it's boy who cried wolf and we don't take you seriously and innocent until proven guilty. But with the metals, right, and with the dollar, it's been foreign countries effectively saying at the margin, we don't have a need for the dollar at this high of a concentration in our FX reserves, incrementally moving forward because we're doing less trade with the US. China itself is trying to create a yuan, a gold-backed yuan settlement system.
They're trying
right now. Do we think that because
they're trying?
Well, it doesn't. But whether or not it works, I don't think is material to this conversation.
It's not the point. No.
It's the effort, because the effort is them accumulating the bullion that's required to actually facilitate such a system. And they're not saying that the system is, fully operational, although I believe it is operational to some extent right now.
Well, I mean, you got to settle your transactions with Russia somehow.
Well, they're gonna have to keep stockpiling gold. And the last data that I saw, and maybe this is outdated, but at the start of the last year, the PBOC's percentage of reserves that were in gold was sitting around 4.5%, maybe 5% at the high end in the estimate. Last time I saw it for the beginning of this year, we're sitting closer to 8%.
Oh yeah, no, they're stockpiling everything, including gold. I mean, they're also stockpiling oil. They're stockpiling copper. They're stockpiling
everything,
aluminum.
But
they're stockpiling all kinds of things because they're preparing themselves for economic warfare that is long lasting.
Our reserves, you look to Western Europe, and this is a point that you probably haven't heard from me in 2 months, but I'll say it again now. Our reserves are sitting closer to 50, 60, 70% in the Western Hemisphere in terms of gold. So China's becoming a major economy, and it's going to be a central bank that does things that major central banks do. One would assume it's going to be doing QE. It's going to have a ton of gold on hand, right? The government will have a ton of gold on hand into the future. So I'm happy with looking at this opportunity in gold, in silver, as an opportunity to get some long exposure. It's a 36 IVR in gold. That's not really worth writing home about. What does concern me though, Ilya, we mentioned this earlier in the discussion about it. You get that big pop in gold vol in April, and then you get a lot of chop the next few months as IVR normalizes and settles out again. And you got this big pop in gold IVR back here in October, and it's normalizing and it's settling out again. That could be what bothers me. So unlike silver here, I want to see a little bit of technical improvement first. There's been this flip in the moving average structure. The 5 is back below the 21, so the momentum is negative. And you can see with that yellow line, what was resistance has more or less become a bit of a ceiling here in recent sessions. Since the close on the 27th, we haven't put in a close back above that 1 month. So for me to get long, I'd like to see it close back above that level. Once we do, a shot back into the highs near 4,400 seems like a reasonable thing to place a bet on. If not for a completion of the trade up to 4,400, maybe the options are underpriced and an up move plus a little bit more vol expansion will at least lift the value of those options into the future. So it's on my Friday watch list. We're not crossed the technical threshold to get there. I'd rather play around in silver a bit than gold, but gold is absolutely at a point where it's worth watching for both bulls and bears, because this could be a replay of summer 2025, spring 2025 with all that chop.
Yeah, I mean, I'm watching it closely. If it's obviously stopped falling and settled into a range. If this is a digestion before reversal kind of a thing, we'll know it on the other side of that range top. Goody, I'll be right back long. Because generally, not unlike Brazil, I am long deglobalization as a theme. I am long the unraveling of interconnectedness between the U.S. and China as a theme. So I like the idea of owning gold when the opportunity presents and when that becomes a working thing. I mean, obviously, we're trading here. We're not buying and holding. And that's a theme that's going to wax and wane depending on what the headline flow is like, depending on who's next in the White House, probably for decades. We'll see. Of course, if China survives decades, because their demographics are so terminal. So we'll see if they manage to get rich enough that the demographics actually start to work in their favor, because income per capita improves with the shrinking population. So if they can make that work, grim as that sounds, as an engine of consumption, who knows? I doubt it, but it's not impossible. And they're certainly making a lot of investments in that idea. So if they can make that work, okay, but we'll see what this looks like. In the meantime, I'm very happy to sort of look at gold as a deglobalization on versus off, U.S.-China acrimony on versus off kind of an asset, rather than what it used to be, which is a dollar foil, a yields foil, because it's detached from that idea to a significant extent. And so that's what I'll be doing here. If it flips over, it flips over. Ooh, that's not good.
Can I complain about a stupid stock right now?
Yes, please.
I saw a comment in the chat. We're going to have to invoke the National Defense Production Act to get GTA put out. Take-Two Interactive had an awesome set of earnings a little while ago, but it announced another 6-month delay for GTA 6. So the stock price is getting it's down 6.7%.
This, by the way, is a theme. So yesterday, Alex Karp was on CNBC. Did you happen to catch that conversation?
No, I saw on Fox News today blaming Yale graduates for why Zohran Mamdani is now the mayor of New York City, though.
Interesting. The conversation he had with Andrew Ross Sorkin, whose book about the 1929 crash is, by the way, excellent. I just finished it. Highly recommended. He was asking much more kind of financials and Palantir-focused questions, because, of course, Palantir had earnings this week. And they had excellent earnings, and the stock got shellacked. And Alex Karp was on there screaming, why would you short a company that's so important for the greatness of America and all these things? And anytime you start to hear, because of course Michael Burry is trying to play the popping of the AI bubble, and so he's short Palantir, he's short NVIDIA.
He's been doing that for a year plus.
He's been doing that for a year. This is not like, he's not doing, for example, the things that I do, which is take a little stab for a couple weeks. Oh, it broke a daily chart level. Okay, goodbye. No, he's loading up into shorts. And so nothing new there, but Alex Karp just went off on such a tirade about why in the world that it's practically un-American to sell Palantir shares. And of course, we know what that talk sounds like. A sentiment extreme. Anytime somebody tries to attack short sellers, ban short selling, invoke non-financial metrics in an agitated way as to why their company shouldn't be sold, markets are going to sell it hard because nobody's trying to hear all that. That all sounds incredibly desperate and very much like the Economist cover indicator in human form. So that's been happening more and more where, Microsoft is another great example. Excellent earnings. Thankfully, no executive from Microsoft came out and attempted to make the case that they are God's favorite company or some such thing. But they had great earnings. They got whacked. And this is starting to smell now like what we were just talking about at the top of the show. A sentiment extreme that's been achieved, that's been arrived at, as it were.
I'm enjoying the chat here. E-Media says, give kids gold or silver coins to teach them something. And Wit says, give the kids pencil and paper. They'll learn more than holding a piece of gold. Greg Lutton says, kids...
Although you'll teach them is to chuck gold at each other's heads.
He says, get kids to analyze and monitor components of the GDX so they can learn financial statement analysis too. Get them hooked on stocks, not phonics. That's the right thing to do. Get them hooked on stocks, not phonics. Yeah. Which reminds me, it's parent-teacher night tonight, so we'll be talking about phonics later. Yeah. Well, I'm just trying to go through all the things that I missed here, Ilya, and obviously the AI story is something big, and we're in the second half of the show now. Can't help but notice that SMH has surged up over the past few weeks, led, of course, by juggernaut NVIDIA. Yeah. Jensen Huang's been in the news recently, the past 2 days, saying things and then having to correct the things that he said, main of which is that China is going to win the AI race. Now, I know that's very alarming. Can't have China do anything better than America. Right. So there's clearly people need to spend more money on our GPUs, undercurrent to all of that. You have ChatGPT.
It'd be a real shame if your store burned down. To make sure that doesn't happen.
OpenAI, their CFO is chatting, and it was in a Bloomberg article that it was suggested perhaps maybe to get to the level of build out that's required, OpenAI will go to the federal government and seek federally backed loans, which would afford them cheaper financing and ability to scale quicker. And more importantly, that once you become an industry or a company that has access to federally backed loans, it opens up the ability for you to attract more capital from different types of institutional investors, which otherwise have restrictions on investing in certain things. And so banks, for example, could open up their balance sheets and books to companies that, say, have federally backed loans on their books because it's the U.S. government, baby. If it's safe enough for the government, it's good enough for the banks.
Sure.
So this is really it feels like there's a narrative going on here right now that there's a reality that CAPEX is going down. I know it's been huge, but there is a lurking around the corner of a potential decline in CAPEX moving forward related to AI. There's a lot of political pushback against AI across the country right now. In Virginia, a Democrat flipped a seat with his main issue being against building data centers in the area. That was his primary platform. And he flipped a seat on that very topic. So is this a bubble, Ilya? Are we not having enough build out? Is Sam Bankman-Fried suddenly worried about cash flow, which is why he's talking up federally backed loans from the U.S. government? Are these the breadcrumbs of a bubble that is starting to leak some air?
It could be. It could also just be a sentiment sort of thing where the market decides it wants to pay attention. Take a look at Intel, because this is a good example for what happens for our current sort of industrial policy, China shall not overtake us in microchips kind of a thing, right? Because the government has literally sort of taken a piece here. They're actually invested. And so if you look at what Intel looks like, it doesn't look bad. So you could very easily make the argument, if you wanted to make that argument that actually everything's fine. That when the government takes a stake, things follow. I mean, just look at that massive rally that Intel's been on. So when you look at this and you go, well, what could possibly go wrong here? I mean, this is great. The government is going to take a piece, and everything's going to be fine. Well, very good. MP is the other example.
American capitalism with Chinese characteristics, one might say.
That's right. It's not exactly that the government taking a stake or not taking a stake matters. It's more like if you're Intel and SMH is going up and the MAGS ETF is going up and the general narrative is up, yeah, it's going to be fine. But if it's not, then it's not. So I don't think that necessarily sort of chasing the government, I don't think is necessarily a nearer term idea. It may be a longer term idea, because I don't think these investments in these strategic industries are going anywhere. I don't think that's a trend that's going to stop. I mean, the Biden administration was huge on industrial policy. This administration more so wants White House LLC, as The Economist has taken to calling them, to deploy funds in strategic investments. So the strategy is different, but the essence is the same, that we're going to borrow some of how China does business to compete. So it's probably a good idea longer term, but it's clearly not decisive in the shorter term to overwhelm sentiment. And sentiment is plainly unraveling here. Ever since the Fed said your pricing for perfection is overextended because perfection on your terms isn't forthcoming. And so now we're just leaking lower in risky assets in general. I mean, you look across currencies, they start to confirm. The yen has held up, for example, much better than the Aussie as a kind of stand-in. And by the way, fun little trick you can do now, you can type spot pairs directly in there now. So you can do AUD/USD. You can do AUD/JPY. And you can get a sense of what's occurring here.
I don't even mean that like just because I'm supposed to be happy about this because this is the company I work for. This is a legitimate, very pleasing quality of life improvement.
It's a beautiful thing. So I discovered it the other day. You could also get cash Bitcoin, BTC/USD, continuous charts, baby.
Yeah.
Fantastic. So I've been enjoying it. So you look at this and you go, okay, there's a sentiment rollover here. And in the near term, it needs to wash over the markets. And we're going to see how deep it goes. For now, it doesn't look like it's anything structural. It just looks like a valuation reset. But where the bottom on it is, who knows? I mean, at the beginning of the year, we had a massive valuation reset. Could we have another one like that? Why not? That was mere months ago.
The valuation is something that piques my interest, right? That as a bull's bull, this is something I think you got to be worried about. And more of a concern for longer term investors because markets can stay frothy longer than our 45 and 21 day out window.
Sure.
But according to FactSet, on October 29th, the forward 12-month PE ratio for the S&P 500 was 23.1, which was the third straight day that the PE ratio for the index was above 23. This forward 12-month PE ratio was based on blah, 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 blah. How often does this occur? Not often. This is the highest forward 12-month PE ratio for 3 consecutive days in more than 5 years.
Mm-hmm.
Now, granted, more than 5 years puts us back into middle of 2020. Is that really a great reference point? I don't know if you can make anything of that because, of course, the PE ratios, there were no earnings in the market, but the stock market was rallying in anticipation of the recovery that was forthcoming during COVID. So
yeah,
what's the more interesting note is that where the growth is coming from right now, and it's basically all information technology, utilities, and financials. And you look at energy, you look at consumer staples, you look at communication services, they're not doing well. And I know it's like, oh, well, it's staples, it's energy. Like those tend to be a little bit more defensive names. And so who cares? All the growth stuff is surging to the upside. I don't know. The data are pretty clear about what companies are doing well. The companies that cater to other businesses, that cater to wealthy consumers, to wealthy individuals, those companies are doing well. The companies that are related to broad economic demand, that are talking about the broad health of the U.S. consumer, those are starting to slack. Mm-hmm. And then you look at the PMIs and you see all these signs of recession across multiple sectors beginning to spread. And we don't have anything other than the PMIs right now because there's no government data.
Right.
So it kind of, there's like also the voice in my head, and there's always the weighing of these things. Like, is this a last hurrah for the market? Atlanta Fed GDP Now growth tracker as of today is at 4%, but granted, we have thin data getting put into the model because we don't have the official government data. So maybe third quarter ends up with a fourth quarter ends up with a bang. And it's kind of like 2001, which is to take this full circle from our earlier conversation on earnings. In 2001, the market ultimately starts coming down despite having 4 consecutive quarters of double-digit earnings growth year over year for each quarter, first through fourth in 2001. And with the most recent earnings numbers we have.
And it's because the market starts to anticipate the Fed.
Well, yeah, we're starting to pace into that now. If we were to wrap up the quarter today, we would have had 4 consecutive quarters of double-digit earnings growth, which is not a reason to be bearish unto itself, but the economic breadcrumbs. Look, I'm going to be a dip buyer, but I feel less confident being a dip buyer today than I did in September and August when I basically had said, screw it, YOLO, don't fight the market. It's the OpenAI, the going public with looking for a government handout. It all doesn't seem like the kind of headlines. Like you're not making the claim that you need a federally backed loan to achieve the scale that you want if the capital is there in the private sector. And if the private sector is saying that it's not there, it means that the risk is just not worth it at this point in time.
Yeah.
It's growth at an unreasonable price. It's not reasonably priced growth.
Well, and in all seriousness, this is how I think you get excellent earnings from a name like Palantir. The stock gets shellacked, and then the very intelligent and I think very compelling Alex Carr, most of the time, comes out there and starts saying the kind of things you might expect to hear spiritually, were it a conversation by a leader about a country, from someone like Turkey's President Erdogan, where he's like, no. Inflation is caused by high interest rates. We got to cut them. No. The lira is not falling because we're cutting rates into an inflationary cycle. It's falling because evil speculators. We got to ban short selling. No. A leader like Xi Jinping might say, the problem is not the economy. Put a holiday on short sellers. So when you put out basically minting money level earnings, and then you have to come out there and say ridiculous things in ridiculous ways, it feels like a sentiment top. Why are we grasping at these straws? If you're doing as well as Palantir is, you come out there and you say, well, markets are markets, but we're printing money out here. We'll see you next quarter when we print some more. Good night. Confidence might be the order of the day, not desperation. Something is wrong here. And he's not the only one by a long shot. I don't mean to single him out. I just think his interview was particularly emphatic of what starts to smell like we're getting to a point of exhaustion. Again, I'm a believer in the AI narrative longer term, even medium term. I will be the most nauseating bear turned bull ever because I will flip on a dime the moment I think that it's a bargain.
I was hoping you had like a come to Jesus moment when I was gone, compelled by the fact that to bring fair and balanced coverage here, like you got to be the same person balancing out Dylan's sanity.
Oh no, I'm no less bearish in the near term, but the moment I feel that these things have had enough time in the barrel, and they haven't had any yet of consequence, but the moment they have enough time in the barrel for me and they look like a meaningful discount has been had, and I do mean meaningful, not these little down swings, I will be aggressively bullish.
Okay, but every other time that we've seen the S&P 500 dip in between its 1 month and 50-day moving average, it's been an awesome buying opportunity since May.
Yes.
Why?
So this is the part that I'm not buying in the current environment, but we'll see. Maybe
why not treat this? Why not? Like this is what I've got at the top of the show. Why not someone like me who says, "Wait a second, I've seen this movie before. All we have to do is press play on slightly out of the money call spreads and hold on to our butts for a few weeks, and we'll be fine."
You might be right. You might be right, but zoom into a 4-hour chart, 8-hour chart, and you can see that you have
momentum sucks.
You have two different kinds of ideas here, right? Like the first idea is, maybe this is the spot. The second one is you're stair-stepping down and you're getting rejected all the way down at former support become resistance. And you're doing it literally from the moment Powell opens his mouth.
What's the low for today? 67.73.
It looks like we've traded through the previous range top, which, by the way, is another thing. So if you look at where the inflection point is on S&P,
I'll buy some.
Let's go. It's roughly 67.80-ish for the December contract. We held there yesterday. We punched through it today. Now it looks like we're going to test underneath 6,700 or so. So maybe this is the place. Maybe it's not. I'm short and it's working. And the moment it stops working, I'll be out. I'm not philosophically married to anything here.
Well, in terms of what I did today, because I had to reset the book and get a bunch of trades on there, I am, let's just blow this all out, sitting short a call spread in 6C, short a call spread in 6B, short a call spread in 6E.
Oh, yeah, I'm long dollars across the board, and I'm looking at the pound today and going, that's a nice bounce. I should sell some more here.
I bought a slight out of the money put spread in 6J today and love to see it struggling the way that it has been. We're now back in on the long call spread for silver. Dipped a toe in here and ES going to risk 35 points. Gets down below 67.30. I'll cut the bait and try again tomorrow. Otherwise, took profit in corn and natural gas. A few weeks back, there was that BTU position that was put on over the summer when we were saying long coal, short rural healthcare companies in the wake of the Build Back Better bill. BTU was trading at $16 when those call spreads were purchased for the January 16th. They've done quite well because BTU's trading at $29.73 right now, and it's spent some time above 30. But I took half profit on that position several weeks back. The other half is still here in the follow account.
Singing the praises of BTU, but EWZ, that's beyond the
This is America, Elia. We root for American companies, not Brazilian ones here. As someone who climate change is real, so let's buy coal companies.
Makes sense.
Elia, the one thing though that was sticking around in terms of conversation I was catching wind of. That was the wrong ticker there. VPC. Did I not do that? Okay. Has been this issue with private credit. A few people have chimed up about this in the chat.
Yes.
Over the past hour that, I asked what's something that
I've been looking at this very closely, actually, because a lot of the stalwarts in this name are telling you there's a credit issue.
Is there a credit issue, or given two of the companies that have dragged some of these ETFs down were related to legitimate fraud? Right?
Well,
like
look
actual
at
fraud.
BX. Look at BX.
Yeah, it's Blackstone.
Right? That doesn't look like the stock market. And look at APO. That doesn't look like the stock market. So if you wanted kind of
Russell
stand-ins for where the private credit is coming from in terms of big liquid names, market's not liking them here for whatever reason, and hasn't for a while.
Is this the thing to watch? Because I've seen all sorts of
very closely.
There are all sorts of smart people that I follow, and this may be the single topic where people are saying to each other right off the bat, "You're an idiot. You don't know what you're talking about," as a negotiation point in terms of like trying to have an academic discussion. You don't know how credit markets work. You've clearly never traded SOFR spreads, right? It's just evolving immediately into finger pointing. So. And even in the chat, I saw people say private credit's a big deal. Another person said later on,
it is a big deal.
Private credit doesn't matter at all.
It is a big deal. I brought it up with Dylan last week in the context of talking about the great and glorious that he's been talking about, this idea that we're in the middle of some sort of a supernova, and the idea that, well, the supernova gets financing from somewhere. And a lot of the financing, we're not saying that this or that tech company gets money from this or that private equity.
Is that why OpenAI is going to the government? Because private credit is in such...
But we do know who the avatars are, right? The avatars for exuberance in the market don't have any money of their own. And the avatars for where the money's coming from, like a BX, like an APO, they look deeply hampered. And if you're, for example, like an OpenAI, you've made huge commitments to acquire this, to acquire that, to put a stake here, to put a stake there. Way greater commitments than you've raised already.
Ilya, we do need to go because it's just about 5 at the top of the hour. But just before we do go, Tesla shareholders approve Elon Musk's pay package. So for those that are following the news at home, we may be minting our first trillionaire sometime soon, which is a good reminder not to check your electric bill this month. But with that, Ilya, overtime is out of time for this Thursday, November 6th. It's good to be back. Tomorrow, I'm not on. I'll be back Monday. I think we're going back live with Futures Power Hour Monday. Different time, 1:30 Eastern, 12:30 Central, but I'm going to have to confirm that with the powers above. In any event, good to see everyone again. Appreciate the response in the chat and, of course, the welcome back. So for Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Good luck trading. There's a commercial, and then I don't know what goes on around here anymore. Ilya, are you up next?
I am.
Oh,
macro money's coming. There's actually been some economic data today, folks. Hide your kids, hide your wife. We're going to talk about it.
See you there.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode. Smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
And we are right back to selling after just 1 day of a rebound for U.S. stocks. And the story is not just confined to Wall Street, it is back to generalized risk aversion for most of the markets. So what is going on here and why are we back on the defensive? Wasn't it time to buy the dip just yesterday? That's what we're going to discuss here on Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And the first thing that we're going to do, as we always try to do on this program, is take a look at the price action, because we can have all kinds of macro theories, all kinds of ideas, but if they're not grounded in what the markets are actually doing, then what good are they for us as traders actually trying to buy and sell and make some money out here? So let's take a look at the price action first. The operating question for us here is, we know the markets are falling, but the real question is, why are they falling now? Why now? What happened today that what we had of the rebound that was attempting to take hold ultimately fizzled? So let's start with a look at just the way that these benchmark assets performed today. Here is the tally. The S&P down almost 1%, the NASDAQ down 1.7%, yields down across the board. A little bit different from the way that this looked yesterday. Yesterday, we had yields higher with stocks higher, and that was around ISM data that seemed to show a buoyant service sector, or at least a more buoyant one than expected. And we'll get into that in just a moment. Of course, we discussed it in detail yesterday, but we'll take a look at that chart here momentarily. The story today, very different. Stocks down, yields down, around sort of similar types of thinking. In fact, we appear to be getting back into a situation here where bad news is bad news, good news is good news as it pertains to economic data. Because the dynamics that we saw yesterday, as we said, seem to generally flow from this ISM data that we got that follows the service sector. This was the data right here. The key, of course, is that 54.2 on the service index. Service is, of course, the majority of the U.S. economy by a long mile, and so that's the part of the overall growth story that's most important. The expectation was that we'd be at 50.8. In the logic of PMIs, of course, 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. These are what are called diffusion indexes. And so when you look at the service sector line here in the light green, what you see is we were looking for growth at 50.8, which would have been a modest improvement over 50 on the dot in the prior month. We got 52.4, which was faster growth than expected for the biggest engine of demand in the economy. So good news for the U.S. economy, ostensibly. And so there was a response where yields went up, Fed rate cut expectations came in a little bit, and we ended up with a situation that looked like, generally speaking, we might have said risk positive on growth grounds, rare as that has been recently. And so with that in mind, today's performance is almost the inverse vision of that kind of a dynamic. And we do have a bit of economic data that may have taken us in this direction. Now, as we look at the rest of the performance here, it does seem to sort of track. Crude oil down a little bit, gold down a little bit, but they're not really doing much of anything of consequence with these magnitude moves. But the dollar is down, echoing the pullback in yields, echoing that this is perhaps some kind of a cyclical response. The euro up 0.5%, the yen up almost 0.7%, and that's the one you'd want to look at very closely. It's easily the most yield sensitive of the bunch, and that's the one that you might expect would be going in the wrong direction here. That is dollar negative, yen positive, were you to have some sort of a response here on the cyclical front. Now, what's particularly interesting about this is, of course, when you then look at policy expectations, you see that indeed there was a little bit of a reshuffle here. Not a great reshuffle, but a little bit of one. And so when you look at what the odds for a December move look like today, as opposed to yesterday, you can see that indeed you've made a little bit of a change here. So the probability that you get a cut somewhat higher today versus yesterday, still miles away from where it was a week ago, but certainly a little bit more convincing. The likelihood that you remain at standstill down a little bit. And so indeed, this does look like some sort of a sentiment inspired kind of a thing. But of course, when you consider sort of what all is out there to drive this, it isn't very much, and it is conflicted. So as we look at this, the dynamics seemingly line up, but the trend in terms of the way that the markets handle the dynamics has hardly been consistent. And so this is really where things get a little bit dicey. So let's take a look here at the way that this has looked in the data today. And indeed, the data isn't all that great. We get the Challenger job cuts report. Of course, we were supposed to get NFP this week, were there not a government shutdown that has kept that data away. But instead, we have to grasp at straws. And one of the straws here today was this this report from the private sector on job cuts. This is from Challenger, Gray, and Christmas, which is a consultancy. And you can see here that there's been a surge in planned layoffs. And that, of course, speaks to what the Fed has been talking about. They've been talking about the softness of the labor market. This is the biggest jump like this since back here in March. That, of course, lines up with the unfurling of the tariffs and the spook then. And so this is certainly echoing the kind of thing that the Fed might have talked about, that the Fed is citing as kind of the breadth of evidence suggesting that the labor market is weakening, which is why we needed the two cuts that we just got. We likewise earlier this week had the ADP employment change. Now, obviously, in the absence of NFP, this is important. Normally, this would be an afterthought because it's not a very good predictor of official figures. But nevertheless, it is a piece of data, and pieces of data are few and far between here. So the markets have to look at what is available, such as it presents itself. And so we look at this ADP data, and we do get a bounce. We do get a little bit of a pickup in hiring in the October numbers. But consider the trend. Over the past several months here, there has been clearly a meaningful weakening in private sector job creation, looking at this data. The decline, as a matter of fact, since about mid-year, which is what the Fed has been saying, that since mid-year the situation has started to look increasingly worse in the labor market. Well, there it is. So we have a whole host of reasons to look at this and say, well, yeah, nice pop, but the trend here is hardly encouraging. Also, in the past 48 hours here, we get the Real Clear Markets TIPP Economic Optimism Index. And again, not the biggest indicator, wouldn't be market moving under normal circumstances, but under these circumstances, we have to look at what there is and do the best with what's available. And so this now becomes part of reading the tea leaves. So as we look at this, then it starts to become a question of, well, if this is what we're looking at, then perhaps the story is in fact cyclical. Perhaps we are in fact seeing some sort of untoward situations starting to happen for the business cycle, but you got to be careful. And the reason you have to be careful is because these indicators are by no means one-sided. We just got an update from S&P Global, and they're pointing to rebounding economic activity in the service sector. As ever, this is, again, based on a logic as PMIs are, as we just discussed, where 50 is neutral, above it is growth, below it is contraction, and the distance from 50 is an indication of speed. The further you get away from 50, the higher the speed in either direction. And so what we see here is not only are we above 50, incidentally for manufacturing as well, which is a different picture than what we see in the analog ISM numbers. They've got manufacturing in contraction territory going back really to late last year. The S&P Global numbers are a lot more optimistic. Manufacturing is not necessarily doing amazing things, but it is holding relatively steady and, most importantly, in growth territory, above 50. But it's really the service sector, which you can see is also where the overall economy, the composite index, is tracking, because services is such a big part of the whole. And you're looking at here levels comparable to these multi-year highs for growth in the second half of 2024. So the economy is looking relatively chipper. And this is sort of the conundrum that the Fed has been talking to us about. This idea that the economy is not, as it were, the stock market, and the labor market is not economic growth. Because what's seemingly going on here is a situation where you do have this bifurcation. The economy is, in fact, picking up, and the labor market is, in fact, weakening, apparently at the same time. And so this sort of speaks to what is the Fed's great conundrum here that they've so loudly bemoaned, and explains why Jay Powell was out there just a week ago, a little bit over now, saying, listen, if you thought that a December rate cut was a foregone conclusion, I've got news for you, because we're flying blind. We don't have enough data. It's a difficult situation as it is, because the two sides of our dual mandate are still in a conflicted sort of setting. On the one hand, the labor market is demanding rate cuts. On the other, inflation is not anything to be ignoring in an economy that seems to be picking up otherwise. In fact, we just saw it in this ISM data. Here was the overall report, but here is the trend in employment. It is shrinking in both sectors, sub 50 here. Here's the trend in price. It is still very elevated despite this pullback on the manufacturing side. And the services side is, of course, the much bigger deal. Most inflation is in the service sector still, even though goods inflation has been going up and is at multi-year highs thanks to the tariffs. It is still nowhere near the contribution to overall CPI that is the service sector. To put it in context, of the 3% inflation rate that we recorded most recently in that special CPI report that we got for September, 2.1 percentage points was the service sector, and only 0.28 percentage points. So just over a quarter of a percentage point was core goods. Now, that's the highest core goods inflation we've seen in years, but also very low relative to services in terms of its contribution to the overall total. So, not surprisingly, the Fed is worried, and we just had a slew of comments from Fed officials today, of which only the obvious one, Stephen Mirren, was aggressively dovish. Everybody else, from Goolsbee to Barr to everybody that spoke today, and there really was a lot of them. Hammock was speaking, but she's kind of notoriously hawkish, so perhaps not a big surprise there. Williams spoke. He's cautious. Goolsbee spoke. He's cautious. Barr, as we just mentioned, spoke. He's cautious, even though he's probably erring on the dovish side of the spectrum usually. And so you have a situation here where indeed the Fed is maybe not as likely to move in December. And of course, we've seen how the markets have reacted to that idea. If we look at, as a matter of fact, the price chart for the S&P, just as a reference point, this right here, this first red bar before we really start going down, that's the Fed. We haven't looked back since. And as we step down here, we're getting through former levels of topside resistance that have acted as support on the way down. So we're seeing whatever friction there was to be had right here. Today, we broke through it. As if to say that whatever is going on, be it linked to data or be it not, today it was. And we can see that a miss on relatively third-tier data today gave us a much bigger sell-off than an upside surprise on much bigger deal data was able to produce as far as a rebound yesterday. And so the thought process starts to become, well, it's really not about, oh, the economy is doing this or that. It's really not about, oh, the Fed is going to do this or that necessarily. It's more like the market has had news on both sides of the equation, but more importantly, as we've talked about a lot on the show, the market went into last week priced for perfection, where it thought all of the key risks in front of it were going to work out as rosy as could be. And the Fed portion didn't work. So we got the opening gap here because the Trump-Xi meeting got diffused of risk. It looked by the start of the week like it was going to be a friendly meeting already. Tech earnings had mostly passed without great issue, and all of the results were relatively positive. In fact, tech is pacing quarterly earnings growth more than double that of the S&P 500, and the S&P 500 is at double digits. So certainly nothing immediately untoward there, Meta miss notwithstanding. But the third pillar was that the Fed is on autopilot to cut rates twice after September. And plainly, Powell said, don't be so sure. Not only is this not a foregone conclusion, it's far from it. And the comments we get from Fed officials since then have enforced that idea, Stephen Meehan aside. And so what we seem to be looking at isn't so much a cyclical thing or not a cyclical thing, earnings thing or not an earnings thing, a trade war thing or not a trade war thing. It's a sentiment extreme whereby the markets were priced for perfection that is now being unwound, whereby capital is starting to liquidate some of the risky assets that stood at the forefront of what the sentiment extreme ended up looking like. To wit, take a look here. As we've seen a contraction in Fed policy expectations, we can see, by the way, we're still on the dovish side of where the Fed is. We're at 63 basis points still for 2026. That's 2 cuts at least and a 50-50 shot of a third. The Fed only projected 1 cut for 25 basis points next year. But all the same, as we've started to actually see these cuts realized, and the Fed has talked down the likelihood of a third, and the scope for easing has contracted, stocks have stopped rising and are now edging down. The dollar has surged, even though it's taking a little bit of a pause today. Left for the week on the data front will be economic or consumer sentiment data. That's from the University of Michigan, where despite easing inflation expectations, sentiment has been cooling for 3 months. We'll see if the markets make hay of this. Now, again, we've looked at this Atlanta Fed GDP Now model, and we see that most of the data going into it has favored positive vibes for growth. ISM was a case in point. The S&P Global PMIs were a case in point. Obviously, we saw other evidence pointing the other direction on the labor market, at least, be it ADP or the Challenger job cuts numbers. But we knew that, and that's why the Fed is cutting. So why is it that the market is choosing to prioritize that over the other stuff? What if consumer confidence weakens again? Will the markets prioritize that more? And if it pops on the top side, will they dismiss it or have a smaller or a weaker response than the negative news flow? Maybe so, because perhaps that is the sentiment reality that we are now in. So from exposure perspective, I've still got a little bit short gold exposure, looking for the sentiment extreme there to work its way down. Still holding this longer term exposure to Brazilian stocks. That's been working despite risk aversion. That's more of a multi-polarity idea for me, where Brazil benefits from the U.S. and China drifting apart as a vendor to China. The gold position here, the flip side of it, and certainly an independent idea onto itself, is still a lot of long dollar exposure, short the Aussie, the pound, the euro, the Canadian dollar, still short risk, which is increasingly working here, short Bitcoin through an IBIT put vertical, short the S&P through a SPY put vertical. The bonds bounced nicely today, and so the TLT call verticals I have on are back in my good graces. I was getting a little bit worried there, but thankfully that's come off. And I've increased exposure to short crude oil, which has been breaking down a bit and would be more consistent with a cyclically negative perspective. And that is Macro Money for today. We are here Monday through Thursday, right after overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the news and insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. As ever, if you're watching this on YouTube, like and subscribe. Macro Money is back next week. In the meantime, happy trading.